It will be a little bit of an experiment, so welcome to what will probably be an extended live stream where we cover what the heck is going on in the world. The market opens in about 2 minutes, so we'll take a look at the market open. But I want to start today's video after that by talking about how we're potentially comparing to the end of 2018, and could we say that during this time of war and during this time of disaster that maybe it's time that we've finally reached a bottom. Of course, that's everybody's hope, but we'll analyze that together right after the bell opens up. So we'll be looking at this particular chart that's being spread on social media. So I'll take a look at that in just a moment. Of course, Biden is expected now to unilaterally announce an oil ban against Russian oil. Russian oil makes up in total about 7.9% of the oil, both crude and unrefined and petrol-based oil that we end up importing. Just crude, I think, is around 3%. And it'll be quite interesting. I think we got a lot of that priced in over the weekend, and that's why we had such a rough day yesterday. But we'll talk about that. We're expecting to hear about his ban in about an hour and a half. So we'll see. It'll include Russian oil, natural gas, coal, and some more things. So we'll watch Biden at that time. But for now, let's go ahead and jump on over and see the opening bell, and then we'll talk about what's going on there. So grab the bell. See how things open up.
And on that point, Carl, we talk often about how the biggest tech companies may be precluded from doing any buying. Well, I guess they haven't gotten that memo yet. We'll see in terms of the antitrust review.
Yeah, a lot of discussion. If MGM and Activision happens, would they be a little more bold in making some bids at these valuations? There's the opening bell and the CNBC Real-Time Exchange. And the big board, it's BNY Mellon celebrating International Women's Day at the NASDAQ United Nations Women.
50-50 green and red there. It's kind of incredible is the way the SPY is reacting, or the way it has been just the last few minutes. We've seen the lines before. We'll see if it holds true here in just a second. But take a look at this. We've gotten rejected multiple times here at 420. So let's see if we can bump over 420. Just to here in the pre-market is really the SPY has really been respecting 420 here, 420.60, 420.52, and so on. And look at that. That looks like another rejection off of 420 right here. That's quite wild. So, and this, by the way, is our 0% Fibonacci line. Anytime we're below this, we're basically rivaling February 2024 when we had our sort of double bottom on the QQQ. If we zoom back out over here, you can see Feb 24. This is when we really broke below that 0 Fibonacci, and then we're kind of broken below that again. We're probably going to have to honestly just redraw the fib here to a new bottom, because it seems like that's what we're playing to now. But we'll see. We'll see what happens here. In the quick meantime, we'll look at a couple of these things. Oh, look at that Tesla now. Look at that, 2% down. Look at that drop right at the open there, 788 on Tesla. It actually looks like the wheat ETF is going down about 5%. It's the first time I've seen the wheat ETF go down in like 2 weeks. That's wild. And still seeing energy companies do well, though. Enphase, Sunrun, Solar. It's surprising that Tesla's sort of getting parsed out of that. Anyway, okay, so I do want to talk about this sort of peak and comparison to 2018 here. All right, one sec. Okay. So there we go. All right, so there's been a lot of question about whether or not we are potentially at a bottom, and the chart that's being brought up is this right here. And so the comparison is to the 2018 crisis that we had, which 2018, it's worth noting, this was where we had raised interest rates at the end of 2018. We had now raised interest rates to 2.25 to 2.5, and this was quite aggressive. Jerome Powell kept hiking. This was around the same time, and it was also Jerome Powell was there then. This was when Donald Trump was in office, though, and Donald Trump said Jerome Powell's going to get fired if he doesn't start lowering rates. And there was a lot of pressure on Jerome Powell to stop raising rates. And it wasn't until the market sort of hit this bottom over here that something special happened. And what happened was around December 18th of 2018, Jerome Powell said, all right, look, we told you that we were going to do 3 rate increases in 2019. Now what we're actually going to do is we're just going to do 2. And so that was seen as a positive U-turn by the Federal Reserve. And when we get these positive U-turns from the Fed, oftentimes we can see a potential bottom, depending on how or how surprising that positive U-turn is. Otherwise it's not a U-turn, right? Like if the Federal Reserve, and this is worth noting, if the Federal Reserve is very consistent that they're positive, 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 then them continuing on a positive trajectory is nothing, no excitement to the market, provides nothing in the market. The problem is when the Federal Reserve is tightening, or maybe not so much the problem, the U-turn is when the Fed goes, okay, we're not going to tighten as much. That kind of U-turn or change in direction is good. Now, to some degree, folks are saying maybe that's what we just had as well, because the Federal Reserve, starting in December and January, said, okay, we've got massive problems with inflation here. We're going to have to tighten substantially. We're going to have to tighten rates. We're going to have to run off the balance sheet faster than ever before because it's larger than ever before. We have more mixed durations within it, especially more shorter term bonds. So we're going to run this off faster. We have a situation where we're so well below the neutral rate that we've got a lot of work to do to raise rates quickly. And so they've made these potential allusions to Bill Ackman's style, quote, shock and awe, where you come in with, let's say, a 50 basis point hike right away, 0.5%, or maybe even 100 basis point hike right away. And then you hike thereafter, right? This is kind of the feeling that we were getting from December and January. Well, then we got a little bit of a U-turn. And that U-turn happened on February 24th. That was when Russia actually decided to invade Ukraine, because this became a signal of, well, the Federal Reserve should go more dovish here. If indeed war leads to a temporary style of inflation, a second type of inflation in commodities, and we end up going to a more dovish Fed, then we're going to end up seeing a Fed U-turn, which is essentially what we saw a few days ago when Jerome Powell said, "Hey, you know what? We're gonna hold back here. This is a game changer," is essentially what he said. Okay, so now let's compare this. So we've had U-turns in each scenario. Could that potentially mean we're in a similar place here? Let's take a look at this. So this year is 2018, and what folks are drawing is that we sort of had our lower high right here, which you see that here, which is a fall by your second lower high. And then you've got your lower double top, which they're marking as sort of here in 2018 and here in 2020. So you can kind of see that comparison in the two charts here. Then we've got the what they call the final capitulation, which comes potentially after this another lower high, which they're marking here. So here's your double, which we had right here, another lower high, that kind of little bounce right there. And then potentially one more large drop and then off to the moon, right? That's sort of the comparison of this. Okay, so what are my thoughts on this? Well, my thoughts are that so far it looks really nicely aligned to 2018. We did get a Federal Reserve somewhat U-turn, but if I had to personally compare the styles of U-turn we got here, I would say in 2018, we had a Fed that was going in this direction and then was kind of like, let's go this way. They didn't go full accommodative, right? It's not like they said, that's it, we're not doing interest rate increases anymore, right? So we did get that positive U-turn up. I'd say today, with Jay Powell calling war a game changer, we got a little bit more of this kind of an inflection, where it's kind of like, okay, we're gonna chill a little bit. We're gonna be a little bit more patient, as opposed to saying we're gonna raise rates less. So I don't think we got as much of a Federal Reserve U-turn when you sort of overlaid that onto these charts. Not only do I not think we got as much of a Fed U-turn, but in 2018, the only show in town was the Fed. That was the only thing that was keeping markets freaked, right? It was the fact that we were consistently raising rates. I mean, we saw that pain earlier in May of 2018 when real estate prices all of a sudden fell like 10% in the matter of 6 weeks. I mean, it was terrible. All of a sudden, people were freaking out. Now, that recovered by the end of the year, but there was definitely a freak out during the year, so it was wild. But anyway, the only thing that we were paying attention to in 2018 was rates. Now we've got a lot more. We've got substantially high inflation. We've got this new form of what will probably be transitory inflation, which is high oil prices, and very high oil price. I mean, it's an oil shock. And we've still got the geopolitical concern of how long this war will last with Russia and Ukraine and how much it could spill over to NATO countries, as well as how damaged is the global economy going to get from all of the sanctions that we have imposed. I regularly mention that folks ask me, and they say, well, Kevin, I mean, is it really that big of a deal that Russia is getting sanctioned? I mean, it's not going to make me spend less money, right? And I think it's kind of easy for us to separate ourselves from that, because we forget that, wait a minute, Apple is going to be losing money because of Russia. Burberry, EA, Hermes, H&M, IKEA, Nike, Under Armour, Visa, MasterCard. These are massive companies, and they're way more than even this. YouTube, Facebook, Twitter, you name it. There are dozens to potentially hundreds of companies that are losing money and no longer contributing to global GDP in that region. And so for a global economy, when we consider the velocity of money, right, $1 spent is $5 of money for other people, it's not good. So you would see some kind of slowdown. So as much as I want to look at this chart that somebody sent over and say, oh yeah, this is definitely that's it. We've got maybe one more hard downturn here, and then we're off to the moon. I don't necessarily believe that this is the case. Because we have so many more things going on now and so many more uncertainties now. I do hope that this is true, but I don't want to plan for this. So the way I would invest for this is I would still take advantage of buying the dip when there are opportunities. Like, in fact, I mean, even today, I don't know if Tesla's rebounding now. Let's take a look at it. No, Tesla's still down about 2%. So even today, you've got Tesla sitting at 787. I'd still take opportunities to nibble at these things with cash around, but I would also follow what we've regularly been talking about on the channel, which is stay away, for the time being at least, from margin. Stay away from speculative options. Speculative options, remember, these are going to be your like short-term call options, your really bullish kind of options, or your really negative puts. I really think buying options in this market is just terrible. With course members, we'll regularly look at the historic volatility, and we'll see with historic volatility, okay, how, are we buying high, are we buying low, not just in price, but in historic volatility, and we can chart this out. And it's right now, the premiums for most options are absolutely insane. I mean, they already price in such substantial moves. It's not the easiest to make money in, unless of course you get lucky, and then we YOLO into, let's say, and then you just have to realize it's a YOLO, right? You YOLO into wheat when I first mentioned it back over here, and obviously you're gonna do quite well. I don't think the market priced in all of this kind of 50% move, but 20% of it may have been. And you start getting a down day like today, it wouldn't be surprising to see a little bit of a volatility crush too, and then you see a lot of that built-in premium go away. So that said, again, going back to this right here, I would love to say that we're close to that bottom, like that we've drawn out on this chart here, but I think there's a lot more uncertainty, and that it really wouldn't surprise me at all to see 2020, here, let's draw it on this one, to end up, in 5 years from now, we look back and 2020 ended up being, what was 2020? I think the SPY did like 16% or something like that, right? For the S&P 500. I think in 21, we ended up doing something, I should do positive, there we go, something like 26%, even though we quickly gave a lot of that up at the beginning of 2021, right? It wouldn't surprise me at all to see 2022 actually be a negative SPY year, where, who knows, maybe it's down 3% or 4% or something like that. Wouldn't surprise me. So that, to me, is based on all of the uncertainties that we still have in 2022, especially making sure that inflation actually goes down, because what if it doesn't? Then we potentially have to price in the fact that, Paul Volcker could show up again, which, if you don't remember, Paul Volcker is, of course, the Federal Reserve chairperson that we had in the early 80s, who raised rates to 15-16% to stamp out really high inflation, essentially forced a recession. The Federal Reserve can do that. They can force a recession on us. And it's so easy to forget that the Fed can, just like at the drop of a hat, they can say, you know what, for the greater good of our currency and our country, we need to force a recession. People think I'm crazy for saying that. They're like, oh my gosh, why would the Federal Reserve ever force a recession? People are going to lose their jobs. Yeah. But you have two choices. If you let high inflation like it was in the late 70s and early 80s, become anchored. The expectation of high inflation get anchored, and you essentially lead to potentially runaway hyperinflation. Then what could happen is you could have a total regime collapse of the U.S. dollar. And if you have a collapse of the U.S. dollar, then the United States loses much more power in the world. It's no longer traded as the oil dollar. It's no longer the denominated currency of the SWIFT banking system. It's no longer the world's reserve currency. Everybody's lost trust in the U.S. government. I mean, you could go from the #1 economy to, a few notches down very, very quickly if you have currency regime collapse. And so this is where the Federal Reserve looks at that, and they would rather say, you know what, time to force a recession. That'll remove inflation, because the way to get rid of inflation is to reduce demand substantially. If we over-reduce demand, that's okay. That's better than a regime collapse of the dollar. And don't think that Bitcoin's going to come in and save the day. As much as I love blockchain and cryptocurrency, don't get me wrong, I just really don't see at any point the Federal Reserve giving up control of their currency. It's certainly not in the next 50 years. It'll be very, very interesting. I think they'll have their own digital currencies. But anyway, as I always like to say, if any of that makes you nervous, get life insurance in as little as 5 minutes by going to metkevin.com/life. But speaking of Bitcoin, let's take a quick look at BTC, which is, of course, one of our amazing sponsors. Really cool CEO as well, by the way. But let's take a look at BTC. So you can sign up for FTX, link down below. But take a look at this. We've really been trying to push for 40K here, but it's been rough the last few days, mostly because we've been pricing in this oil disaster. When we started pricing in this oil disaster, that's when we fell down here from our 44K, well under our 40,000 again. And so we've had essentially this disaster here where we've had these lower lows. And we're slowly starting to recover because of the fear of, oh my gosh, what could $130 per barrel oil mean for us? What could $200 oil mean for us? Even though that's probably a little bit more fear-mongerish. You've got JP Morgan calling for 200. You've got Goldman Sachs calling for 180. Even though I think that's more fear-mongerish, it's definitely being priced in. And it just reiterates to us again that no, BTC is not our inflation hedge. It is not our... it is not our opportunity to get away from risk. It is another form of risk. Now, I will say it has performed better than some other assets, risk assets, since the beginning of the year, which is nice. It certainly hasn't performed anywhere near as poorly as a lot of the SPACs that we've seen, the maybe high growth but low profit companies. I mean, you look at some like, let's say, Zoom or Snowflake, or again, the SPACs. There's been some serious pain, and BTC has performed a lot better than those. Although then again, you could look at the altcoins and kind of compare the alts to the SPACs, and you start seeing a very similar story. So those are my thoughts on this chart, which I got to shout out. I think it was Jake on Twitter. Shout out to you for sending over this chart on comparing us to 2018. And it's always good for us to look at cases like this and decide, okay, does this potentially mean we're at a bottom, or how are things potentially different? And even though the chart looks really similar, I mean, if we were only looking at a chart point of view, hey, maybe, and again, knock on wood, hopefully, right, that like one more buying opportunity and that's it, we're off to the moon. But with the amount of uncertainties that we'd have, I think for this to come true, we would need something big to happen. We would need, for example, Putin to, as Kevin O'Leary said yesterday, drink the nuclear tea, or and sort of disappear, and probably would need to start seeing inflation inflect down substantially. So my thoughts on this one. All right, so let's see what else we've got. All right, yeah, somebody here says Tesla is rebounding. Let's take a look here. Yeah, it looks like Enphase was pushing too a little bit. Oh yeah, look at that. Nice rebound on Tesla. That's funny. As I mentioned, hey, you might want to take the opportunity to buy the dip on Tesla. And not that I'm trying to pat myself on the back for saying I caused any kind of U-turn here. I didn't. But we just said this like 3 minutes ago, like, hey, here's an opportunity to nibble on Tesla a little bit below 800, right? Anyway. So, all right, let's see. Ooh, look at that. Even DWAC is getting hit a little bit here. Okay, let's take a little bit of a peek and see what some of the suits are saying, and then we'll talk a little bit more about news. But let's hop in over here for a moment, because we know Biden's going to talk in about 40 minutes or so. Let's listen.
Multiple contraction versus all of the 14% decline in the S&P we have seen this year is because the multiple has contracted from about 22 to about 18.7. What we're going to see now, what the market's afraid of, is earnings numbers are going to come down. Analysts are notoriously difficult, Carl, and you know this, to make moves in their stocks at the inflection point. And what we're going to see now is very modest declines in earnings so far. Carl, I think you're going to see that number, that 6.2%, come down rather quickly in the next several days as analysts play catch up. Carl, back to you.
All right, Bob, we'll watch for that.
You know, that's an interesting argument. That is it possible that analysts could lower the potential for the market to actually be able to rebound as they start reducing their estimates going forward, as they price in that global pain of Russia. Personally, I don't think they're going to price in as much pain as they probably should. Personally, I think Q2 earnings are going to be something I want to keep some, well, Q1, when we get those in Q2, it's going to be something I want to keep some cash available for. We'll see. I mean, hopefully not, but it wouldn't surprise me for us to see some big misses. Let's listen in over here for a moment.
Targeted U.S. firms right before the Russian invasion. Lydia Hu has the story after this.
At Vanguard, all right. So it looks like they all decide they want to go on commercial. No problem. So let's take a look at the indices and just understand what's happening here, and then we'll see some of the other major updates that we're getting. Remember that Joe Biden is expected to speak at 7:45. Look at that rejection there at 4:20. We just keep getting rejected. We did try to break above it, but still can't break above it, not even on the minute chart. But again, in case you've joined a little bit later, Biden will be is expected to impose a ban on imports of Russian energy. This was unfortunately what markets had priced in a lot yesterday, because we saw a lot of pain in markets yesterday. I mean, substantial amount. I think the QQQ was down 3.6%. SPY was down somewhere on 3%. I mean, that's terrible. So this is, I would say, a little bit more of, okay, what else is Biden going to say? We'll see. Let's see. Okay, let's take a look at QQQ as well. So this is SPY. Now QQQ, let's take a look here at how we've got this drawn. Yeah, again, under that zero fib as well. I think I'm very tempted to redraw this. I might just redraw it and leave the other one for the time being. Let's see if I can sort of match just to see. It's going to be too messy, though, I think. If I do this, I just want to see how it aligns. It's not terrible. It's because a lot of the other fibs are actually in a roughly similar spot. If I go here, my 38, my 50, those align roughly in the same spot. It just basically moves the bottom down a little bit more. Let me try that on SPY. No, I didn't actually want to draw it. Let's get rid of it. No! That's the one I didn't want to move. Sometimes Weeble makes me laugh. Or I just get angry. I don't know. Probably not angry. There we go. Let's get rid of that. There we go. That's better. Okay, let's go to SPY. Yeah, I don't know if it's worth drawing it down here, just because this has been working so well. And usually when TA works so well, I hate changing it. But you don't want to die with the times, so to speak. Yeah, I'm not ready to draw that. I'm going to call that more of just an intraday. And it's not like we had a full candlestick break on the day anyway. So I don't love that. But then again, I didn't draw this down to the full candlestick either. Oh, well, we'll keep an eye on this. Because that 420 is working pretty well right now. It's kind of wild. All right, let's take a look over here. Oh, hopefully you made yourself some coffee. No, everybody's on commercial today. All right, what else do we have? Okay, UK now at, gold's popping off. Well, golly, no surprise. UK to announce a ban on Russian oil imports as well. All right, let's talk about this briefly. Okay, yeah. So Biden was that could be actually what's maybe pushing the market a little bit. Yeah, Biden was expected to be negotiating over the weekend with European allies about banning oil imports from Russia. And a lot of European allies are like, we kind of still need it. So now it's been decided that Biden is going to ban the import of Russian oil and natural gas and crude, whatever, today. And it now looks like the UK is following. However, the UK is only banning Russian oil and not gas imports as well. Let's see if we can get a little bit more detail here. Okay, so they're going to have a press conference, it looks like, at about 15 minutes after Joe Biden speaks, unless they moved it up. Joe Biden's usually late, though. Oh, okay, wait, though. The European Commission has an answer for us. It says, turning down thermostats by 1 Celsius could save 10 BCM of gas demand this year. BCM, billion cubic meters, I guess, in total for Europe. All right, that's it. You want to be less reliant on Russia? Just turn your thermostat down 1 Celsius. And in America, change it to Celsius first. I guess we could convert it, but I don't really want to. Anyway, all right, what else do we have? So that's going to be interesting with these bans today. That's going to lead to a little bit more volatility. I do wonder how oil's performing this morning. Let's take a peek at that. 1 second here. Yeah, here we go. S&P is little changed after the worst sell-off since 2020. Ooh, let's take a look at that. Yeah, here you go. You've got, look at that, Brent at 130 again. My goodness. And then where's gold? Hold on, bonds. Well, oh, okay, the 10 years back up again. Wow, look at that. Oil, 2033. My goodness. Not oil, gold. Really impressive. All right, let's listen in here for 1 moment. And then I'm going to pull up TradingView as well.
Over the last week compared to 2019 levels, primarily driven by Eastern Europe, Russia, and to a lesser extent, Western Europe, which still remains modestly above 2019 levels. This is Booking Holdings trying to convey to Wall Street that the impact of this crisis on travel is confined to a specific region. It follows, of course, a sharp drop in shares of Booking Holdings, down about 24% since Russia's invasion began. And in adds to comments made by Marriott CEO Tony Capuano yesterday, addressing the impact of
Booking's boring. I will say, I don't know. I mean, travel is getting whacked so badly when we know that the cruise lines have banned travel to like St. Petersburg and Russia and that. But part of me wonders how much of the travel companies have turned into sort of the Kathy Woodian style value trap, where it's like, oh man, is this just, or if you're investing in the airlines or the cruise lines, or you're just investing in high debt companies. And is that potentially a big no-no in this market? Or is it an opportunity to buy the dip? I don't know. Maybe they can tell us a little bit more. Let's see.
Today, TUI, IHG, among others, Ryanair up about 3%. Carl, back to you.
Yeah.
All right, Seema, we'll keep an eye on a lot of those names this morning. Still to come, in fact, the president is set to deliver remarks and expected to announce a ban on Russian oil imports in the next hour. As Goldman hikes their year-end forecast by $10 to 135, says there's upside risk to 175. Don't go anywhere.
Oh, that's interesting. So they've kind of revised that a little bit. So they mentioned Goldman was actually the one that originally mentioned the upside risk was up to 180. And then just to contrast, they're talking about their year-end forecast being 135. Year-end 135, that's wild, because a lot of us are expecting this just to be, quite frankly, transitory. And I know that's like an extremely unpopular word to say. Nobody wants to hear that. But I mentioned this the other day, that I think we have two real forms of essentially transitory inflation. We have the original transitory, which is our supply chain crisis. And that is something that I believe that the Fed actually still does think is transitory. That's because we're seeing the Federal Reserve just try to delay. They're trying to buy time. Every excuse they get now, especially since war began, they've been saying, hey, you know what? Just wait. Just wait. Let's take it easy. We don't want to hike too fast. We don't want to cause unemployment, yada, yada, yada. And ultimately, I think the Federal Reserve is really just trying to look for as much data as they can to prove that, there we go. It's June and inflation started ticking down. We were right. Except watch, it's like June of 2024 before it starts going down. No, hopefully not. Obviously, hopefully 2022. But yeah, that's the first form of transitory inflation that you have with the Fed. This is their version, right? And then the second form of transitory inflation is that you've got this concern over now oil prices and this oil shock. And is it possible that this oil shock is just a temporary shock? Of course. Again, like if this disaster in Ukraine ends, which I hope it does, I mean, every single day, there's usually the front page. I don't have it here, but I do have today's. Yesterday, there was a terrible just cover on the New York Times. I mean, they just literally had dead people who were just fleeing, family, and then they got mortared. It was terrible. It was on the front page of the New York Times. I was actually surprised they put it on there, but because usually they almost every single day it's some form of destruction, or that's the New York Times. Here's the body bags. Usually don't actually just see people's bodies, which you did yesterday, which was wild. But it's true. I mean, hey, if it brings more awareness to the disasters of war. Look, here's another one. This is the LA Times. You got the same kind of body bag pic. You got the USA Today here. They've got bunker. Oh, this is terrible. Just sadness. It's Financial Times. Anyway, yeah, this is usually the kind of stuff that you get on these headlines. But yeah, yesterday was really just heart-wrenching. Anyway, well, let's listen to what we're talking about on BTC here.
45 minutes from now.
Oh, I think I missed it.
Announces new actions against Russia. We'll bring you that when it happens.
Yeah.
Now this.
Let's hear it.
Just 4 months ago, the world's leaders gathered in Glasgow, Scotland for COP26, the Great Climate Conference. They waved their virtue flags and promised to phase out.
I love this guy's cynical attitude. Their virtue flag.
Putin's war and the failure of renewable energy all combined to crash the climate crowd's bubble. There is now a mad scramble for fossil fuels. Our president is actually offering Iran a nuke deal in return for oil. And he's negotiating with the Venezuelan dictatorship to get some of their oil too. He's even considering a visit to Saudi Arabia to pass the begging bowl in person. What on earth are we doing? We're now realizing that green policies carry a very heavy price, a price that consumers and voters may not be prepared to pay. In Germany, a 180. They're going back to coal and nuclear. It costs $7.70 a gallon for gasoline in Germany. How about that? Here at home, record high gas prices, which will cost the average family an extra $2,000 a year. The White House simply can't explain what they're going to do about it. It's time for everyone to regroup. America has to get our own energy. The Greens have to accept we need fossil fuels. And the Democrats have to understand that if they go into the November elections with $5 gas, they lose. Second hour of Varney, just getting started.
He's not wrong about that. It's, one of the big issues that you have, and it's worth talking about, is well, let's take a look at this, because it also brings up what we know about the Keystone Pipeline. Let's talk about that. Give me 1 second here. Where am I? I forgot I hear a little thing on Keystone. Yeah, we could talk about that. Okay. Kevin laughing at everyone at the gas station is Lucid and Tesla. No, stop. I wouldn't be at the gas station. Get it right. Oh, and it actually does look like, so hold on, I want to see. It looks like stocks are falling a little bit right now after that UK announcement. Let's look at this. We'll come back to the Keystone talk, because I do want to talk about the Keystone. But it might make more sense to talk about that once Biden speaks. But this is quite interesting. You do have a little bit of a drawdown right now. But I guess in short, and I want to hear what y'all think in the comments here. And I do have the course member chat up as well today. Today's a little bit of a special day. So for the course members who are here, I'll have something special tomorrow. But I want to hear what y'all think about what Varney mentioned, that Democrats are likely to get reamed in the midterm election cycle here. I can't personally help but agree. I think Kevin O'Leary's right yesterday when he mentions that you might even see both chambers of Congress flip Republican. And then, quite frankly, we're going to get nothing done in Congress over the next 2 years. But Kevin O'Leary had this really good point that, like, maybe we've done enough. Maybe from 2020, like in 2020, we printed enough money for 4 years, and we really don't need to do more. It's not a terrible argument. It's not a terrible argument. But there are a lot of policies, especially from Democrats, that are hoping to get extended, like the child tax credit. And I'd love to hear where you all stand on things like the child tax credit getting extended. But at the same time, we're just watching the market right now move down. I gotta adjust the chart a little bit here. So let's back into Varn. Let's who this guy is with he's wearing a cow suit. What the heck is this?
Trump guy? You want to see him come back?
I'm a Trump policy guy.
Okay.
I can understand how he could be abrasive to a lot of people, and that's not good. But if you put what he did on a piece of paper and take his name off the top, I'm all for it.
Do you see a real problem for the Democrats this November? I mean, are they going to lose the Senate and the House?
Ooh.
I think they will. I mean, there's nothing. It's indefensible what they've been doing with our energy policy. We've got an answer. They're not stupid people. They have the answer right here, and they refuse to do it because, once again, this is what the overarching thing is, Stuart. They know better to do with your money than what you do. They know better about what's healthier for you than you do. They know better about what's better energy for you than you do. And they force it down your throat at all costs. And that's the problem. We're not ready for this abandon fossil fuels at all whatsoever.
Now, I think the Greens have a chokehold on the Democrat Party, and that's why the Democrats cannot come up with a rational energy policy in this time of crisis. That's my opinion. I think a lot.
That's how they got in.
Yep.
I mean, they have to listen to him now. That's how they got in. So they can't abandon him now because that's exactly why he's sitting where he's sitting.
You got it. Scott Shellady, you just make so much sense, fella. Come back next week, okay? See you again soon.
All right.
See you later. How about this one? Europe's natural gas shortage has revived talks of the East Med pipeline. That's what it's called. It's in the Mediterranean. It would carry gas from the Mediterranean Sea near Israel to Europe.
Yep.
All right. What did the sea?
Yeah, I mean, personally, I think a lot of you know I'm a big fan of pipelines, and again, we'll talk about Keystone a little bit more later. But I think one of the big bottom lines that you should consider when it comes to the just energy policies in general, especially even for the Democrats, because don't get me wrong, I'm a big fan of solar and wind, and I'm a huge fan of nuclear. I really think we should be doubling down on nuclear. But we can't flick the switch and just go, you know what, oil's dirty, gas is dirty, go from oil and gas to zero oil and gas and go to like wind and solar. We can't pull it off. Why? Because we don't have enough batteries to actually sustain us. Why do we not have enough batteries? Because they're freaking expensive. It's too much money. Like it's no surprise to me that California is one of the few places putting in the mega packs, but because California is willing to spend the exorbitant amounts of money for them. I mean, they're just very, very expensive. We have one here in Oxnard, which is close to where I live. It's just quite wild that they put one in. They were going to put in a natural gas peaker plant, but California pretty much has said no to permitting any of those ever again. What they really should do is fix the old ones they have, make them more efficient. Like if we're going to be in a situation where we're still burning oil and natural gas for the next 10 to 15 years, as we transition, at least be as clean about it as possible. I don't know. Tell that to the purple blue hair people, Kevin. Hey, well, Steve, you're kicking butt with gold, so congratulations. Steve likes investing. Shout out to Steve here. He likes investing in gold, Barrick Gold, and using Dell computers. See, that's like his bio on the dating apps. No, that's all I know. I just know Steve's here regularly, and I appreciate him. Can't just flip it. Yeah, I mean, it is true. But I know that you can't just flip the switch has been an excuse forever. That's actually a good point. It is true, but you still can't just do it. Just because we've been saying, we can't just flip the switch. That doesn't mean that all of a sudden batteries are 10x more efficient, right? So it's getting. I mean, I would say the progress we've made in the last 10 years, though, on wind, solar, and batteries. Absolutely phenomenal. Abso-freaking-lutely phenomenal. So, Yeah. Anyway, so okay, well, you've got the market not very happy right now. Let's take a look here. So you've got Tesla down about 1.5, so rotating back down here. You got QQQ. This was Monday. Let's just briefly. I want to hear their recap, Jen.
There are politicians peddling conspiracy theories out there and casting doubt on vaccinations when it is our best tool against the virus and the best tool to prevent even teenagers from being hospitalized.
Deeply disturbing. We have with us now Sean Duffy.
Okay, we're going back to the vaccine. Honestly, the vax is not something that I've really talked about in quite a while, because does anybody still think like of COVID when they go out during the day? Are we still thinking about that? I don't know. For me, I thought this was I mean, knock on wood, I don't want to see another variant, but I'm kind of like fingers crossed that it's over. I was reading, and it's just sort of worth a little side mention. I was reading yesterday about how there are some noticeable impacts for individuals who have had COVID in like the gray matter of their brain, and how that could actually be some of the impact that long COVID has. But even though that sounds scary, one of the cool things they mention is that it is repairable, like over time, that also gets better. So I thought that was nice and optimistic, but also still kind of weird to read about brain changes. Anyway, let's listen to this. What's this?
Point hike priced into March.
Yeah, let's just have backlighting. Who needs forward lights? Let's just have backlight.
Market thinks that the Fed will have it under control. It will follow the Goldilocks kind of path it has, managed to do in the past. Now, having said that, I think we don't think it is that easy right now, and precisely because we are in a pretty unique situation where they have to balance now stagflationary risk, i.e., high inflation, but a slowing growth possibility. It just makes the path very, very tricky. And I think so that's why, although the market seems to be a little bit sanguine about that, we are a little bit more worried.
Jill, would you?
I mean, tricky Fed. I completely agree with that. I don't think the Fed wants to force a recession, but they need to start seeing that inflation data come down. Which, remember, we have CPI coming out this Thursday, which is in just 2 days. Quite wild. It's coming up soon. I'm going to pull up the current estimate that we have for CPI. And so this is going to be the Bloomberg estimate. So it's usually a consensus of about 50 economists. And economists are never wrong. But just kidding, they're always wrong. But so 8:30 a.m. on the 10th. So in 2 days, we are expecting year over year to actually come in at 7.8. That's a little bit lower. But ooh, that month over month. The survey now on month over month is expecting 0.8, which is insane because that's about 9.6% annualized. But if you exclude food and energy, it would bring it down to about 0.5, which would be about 6% annualized, so a little bit lower. So really showing potentially that split of the two types of inflation. Though I honestly don't know that our CPI is yet going to reflect this oil shock. And we've talked about this before. The reason for that, it's the way they actually do the CPI survey. There's a big lag in it. I mean, we already know there's a big lag in the way they do their stuff. It's just ridiculous. Mind Medicine is dirt cheap. Shorts. I'll check for you. Someone here is asking if what the shorts are on Mind Med. I'll go ahead and pull it up. I was just thinking yesterday. I was going to ask Kevin O'Leary what happened to our buddy JR over at Mind Medicine. He left. COVID is running through Colombia like wildfire right now. The Department of State has changed Colombia to level 4, do not travel, because of how bad it is. Colombia is also going back in lockdown in a few weeks. Wow. That's wild. I want to, I'm going to look at that. Hold on, let's see. COVID cases, Colombia. Hey, I spelled it correctly. Sometimes you put the U in, like the brand, right? Yeah, it looks like they had a big old spike in at the end of January here, which I think was a lot later, and that's probably why there's still so much of a reaction, a lot later than what we saw here in the U.S. Because, well, then again, I mean, no, mid-January, that should be roughly around when we had ours too. No, let me take a look here. United States. Yeah, maybe fractionally earlier, like half a week earlier or so. But it is so nice just seeing this stuff go down. I'm so sick and tired of it. Okay, let me go back to MindMed really quick. And then we do have Biden coming up here soon. All right, let's look at the shorts. I'm going to look at a few shorts here for us just to get a little bit of an update. MMND, right? No, that's Mastermind. What's MindMed? What did they change the ticker to? MindMed. Is it just Mind? Mind. It could be. Is that it? Really? They changed the ticker? All right. Well, I'll look at what Mind is. So Mind, short interest. Tesla, by the way, 2.86. Short interest on Mind is actually low, 0.73. I mean, like nobody's shorting it. Pretty sure you got your shifts. Your lemonade still pretty high. Yeah, shift 36%. LMND, you're sitting at 35. Pretty stable here. ARC K, MNMD. MN. Oh, MNMD. Okay, sorry. Yeah, I had the ticker wrong. Okay, 6.85%. There we go. Mind Medicine. Yeah, that's it. 6.85 here. I'll just pull it up. Oh, you can see it yourself. See, this is the short interest side right here. And so you could see the shift, the lemonade, the ARC. Holy smokes. ARC is at 20% short now. Wow. That's wild. And the SPY was what, 14? 15.7. It's actually come down a little bit. Look at that. We kind of had a peak of shorts right there around Feb 24. Let's go QQQ here. Wow. Yeah. Oh, you can't really see the chart because I'm in the way. There, let me just show you. That's the QQQ chart right here. And then here's the SPY chart, which has actually come down. Yeah, that's interesting. All right. Rip Cath. Oh, yeah. Oh, SoFi. Yeah, let me see SoFi. SoFi's chart's not great for the shorts. 21.64, and it's just been rising. You see that? That's wild. This is just the last month right here. I mean, if I go back to the last 90 days, I mean, look at that. It's just straight up. It keeps getting shorted and shorted and shorted. Okay, Barclays now coming out. Worst case, oil prices could climb over $200 a barrel. You know, part of me is wondering how many of these companies have massive short positions out there, and then they come out with these ridiculous, I mean, maybe they're not ridiculous, from what I know, but they come out with what would appear to be these ridiculous estimates for the price of oil. And I don't know, hopefully that's not the case. It just seems wild. The market is up and down like a fiddler's elbow. Yeah, no kidding. Why do you think SoFi short keeps going up? Because people keep making money shorting it. You know, I hate to say it, but when a company goes down and people make money on their shorts, they short it more. It's a winning bet. You know, I hate to say it, but it has been a winning bet to short SoFi since December. I mean, if at the beginning of December you're like, I'm shorting SoFi, it has been a phenomenal play. It's terrible. But then when it's really good for some people, then it, you know, incentivizes other people to short it. It's a cycle. I mean, it's just like, it's FOMO too, to some degree. You know, it's kind of just like when we see like DWAC. Okay, DWAC runs up to $170. You know, when it's 120, that's when people are like, oh my gosh, it just keeps going up. Everybody keeps making money on this. Well, we should buy it too. And so just like that's how you drive DWAC up to 170. The same thing happens on shorts, except on shorts, it's more just, it's mostly institutions. Although institutions play both sides, you know, they play the up and the down. They're not resistant to FOMO. They do the same thing. They're people just like us. You know, I think people think, oh, institutions, the hedgies, the suits, they're so different from just from just retail buyers. Yeah, no, not really. In fact, let's do a little retail update here. Retail. Let's see. Okay. I'm gonna write this down. Hold on. I'm gonna read you this as I kind of write down some notes on this. Okay. So it looks like, according to VantageTrack, retail investors continued buying the dip yesterday. Yesterday, we bought 1.5 billion in stocks. How do we get all this money? The biggest inflow is actually energy, which is really funny at about 340 mil, because yesterday we saw energy prices holding up quite well. Well, I wouldn't say energy prices like oil or whatever. I guess it depends what they mean. It could be energy like oil, like, oh, probably Occidental. That's what it was. That's probably where the money went, because remember Buffett announced that he had this huge stake, even after Carl Icahn sold out his huge stake in Occidental. That's probably where retail followed him in. Retail loves following Buffett, so that wouldn't surprise me at all. So I'm gonna write down that my guess is that was Aussie. Yeah, Occidental. There we go. Yeah, retail investors probably too exhausted to buy the dip in tech. Yeah, probably. That's also probably why we saw Tesla rotate down a little bit. Tesla yesterday had like a 6% intraday swing. Oh my gosh, Tesla went positive today. Yeah, Tesla's swing yesterday was insane. Yeah, look at that. You're getting that same sort of wild behavior today. Okay, focus on buying a sector with small market cap compared to tech, which has a larger market cap. Really? So this institution here thinks maybe retail's looking for that, the smaller market cap, but that also implies smaller caps, which small caps haven't been doing too well. Interesting. Moreover, net buying was concentrated at the market open and close, which is consistent with the intraday performance of the XLE, the trading the last 2 days. So the XLE is a non-diversified ETF. Hold on, focus. Concentrated at open and close. So XLE, I want to say that's like Chevron, and it's got a bunch of individual stocks in it. So XLE, oh, wow, it's actually done very well. Look at that performance here. XLE has gone from 50. I mean, this is up about 50%, since the crisis began. Yeah. Somebody here says, I'm loving that commodities are the new AMC. Not wrong. Not wrong. Yeah. So I'm going to write that down. That's kind of funny. I mean, this is very much like the wheat ETF that what you're seeing. But when you do have these sorts of moves, they do attract a lot of retail, because that momentum and energy makes folks really excited. And then I see people in the comments write things like, oh, worried about the market going down? Just buy, commodities. And it just kind of like feeds the sort of maddening bubble. Like, I don't want to be invested in XLE for more than 6 months. Like, how long do you really want to be in XLE? We do have an update here that Oxy, which is Occidental, is suggesting that U.S. drillers cannot significantly increase output. That just came through. Yeah, that's a bummer. But that's also along expectations, because one of the things is, Kevin O'Leary even touched on it yesterday. A lot of the drillers, they don't want to, because these commodity cycles are very boom and busty. It's even worse in commodities than it is even like the momentum stocks. The boom bust cycle is crazy, strong and fast, strong on the way up and down. Oh yeah, here you go. Oxy's Hullab. I want to know who that is. Let me see. Oh, the CEO. The CEO is Vicky Hullab. And what's their market cap? Let's see here. Again, this is the stock of Warren Buffett. It's up 4% today. It's up 86% year to date. Oh my gosh. 0.9% dividend yield. In the last month, it's up 47%. Very much like the XLE here. A PE ratio of 28 for an oil company. And, well, it's what happens when Warren Buffett takes a 10% stake. He doesn't disclose all of his positions, just when they have to. But yeah, this is they do oil in the U.S., the Middle East, and Colombia. Oh, that's interesting. As well as manufacturing in the U.S., Canada, and Chile. That's quite interesting. But anyway, so they're mentioning, where was the other note here? Here it is. Occidental's primary use of cash flow will be to reduce debt. They say that additional shale output is not likely to be met because of supply chain challenges. Wonder supply chain challenges in oil. I wonder if that's because of logistics, like moving it around, or if they have chip shortages too, or even just getting machinery, pumps, or whatever. Well, that's not good for the oil outlook, I guess. Challenges to shale oil, U.S. shale oil growth are significant. Occidental's primary use of cash to pay down debt. I wonder how much debt they have. Oil production comes when companies can deliver promised shareholder returns during down cycles. Ah, see? Look at it. The CEO is just being straight up. Ah. So I'll explain that briefly here. I'm going to put my little pencil. There's too much stuff on my desk. I'm losing everything. There it is. Okay, so basically, the oil boom and bust cycle is very much like any kind of cycle, as generally you have, the behavior like this. And it's quite obvious that we're probably somewhere here on a cycle, right? And they're saying, hey, yeah, we'll increase output as long as we're still profitable in these lower parts right here. But until we can guarantee that, we're not going to increase output, especially with all the supply chain issues and such. That's interesting. This, by the way, is, again, the XLE, which is a non-diversified ETF, which just means they can have a substantially high percentage of allocations to individual stocks. Ooh, look at Trade Desk is down to $61. Ooh, that's actually, I wonder what happened to Trade Desk today. We'll look at that in just a sec. But there's still updates coming from the CEO here. Okay. And who's Haynes? Putin's still confident he can defeat Ukraine. Oh, I'm so tired of hearing about Putin. Did y'all hear about poutine yesterday? That the bakery that created poutine wants to change the name poutine to like cheese and French fries or something like that. I don't know, like something, just anything not Putin related. I thought that was quite odd. Okay, so who's Haynes? We got to figure this out. Let's see here. No, it just says Haynes says tensions with Russia are so high, always potential for unintended escalation in Ukraine. Yeah, let's see here. Maybe if I zoom out a little bit, I could get a little bit more intel on what this is. Haynes says Moscow underestimated the strength of Ukraine resistance. Yeah, no kidding. Did y'all hear those stories about how family members of people in Ukraine talk to their family members in Russia, and the people in Russia just don't believe that there's actually an invasion happening? They think it's just a liberation from the Nazis. It's quite wild. Okay, so U.S. Director of National Intelligence. That's who Haynes is. Okay, U.S. Director of National Intelligence. Got it. All right, so Moscow underestimated the resistance. Russia and Ukraine militaries have probably suffered thousands of casualties. Yeah. No clear counts, especially since Russia is not collecting their, I hate to say it, but the bodies. It's very sad. Or at least not all of them. Putin is likely to remain undeterred and may escalate. Well, that's not good, especially since we've got these oil sanctions going in about 15, 20 minutes. Biden's expected to speak. Occidentals. Carbon capture efforts will provide materials to product manufacturers, deliver lower carbon oils. Well, that's their goal, I guess. All right, interesting. Thoughts on uranium ETFs? Geez, yeah. Well, uranium, just all commodities have been killing it. You know, you can't say anything bad about about any of the commodities. Let's see. Oh, interesting. You actually had a little bit of a boom bust cycle over here. You're still obviously higher than where you were here at the beginning of 2021. But yeah, I personally, I hate investing in commodities, and it's not because I don't think you can't make money in them. I just know the cycles are so quick and so painful, and it's not a matter of fundamental analysis. It's often a matter of just more like trading analysis. I'd say is a little bit more important for the commodities. Of course, geopolitical factors are going to be a big thing, and that's why we're seeing wheat skyrocket, palladium skyrocket. You know, fear from war makes sense. Oil or gold is going up. All right, let's listen in over here for a moment.
An allegedly impaired wrong-way driver who had already run through several roadblocks. Trooper Tony Shook is credited with saving dozens, even hundreds of lives. The speeding car she risked her life to stop was heading toward people running a 10K race on the roadway. Shook is back home after spending some time in a hospital, but Morgan, an incredible sacrifice. There.
Wow.
Back to you.
That video. Rahel Solomon, thank you. Still to come. The president set to speak this hour, expected to announce a ban on Russian oil. We're going to take you there live when that begins. And as we head to break, take a look at the markets right now.
Red. Yeah, we'll look at it ourselves. All right, let's go on in over here and see how the SPY's doing. SPY's still on the lower end of the day here right now. Oh, that's painful. All right, so let's see what the Financial Times has for us today. Oh, yeah. One of the things we saw, too, is the Ukraine, you know, over the weekend, we had those humanitarian corridors, and, you know, the Red Cross is trying to help orchestrate those corridors in Ukraine. But the problem you're having is you've got Russia wants these corridors to lead people to Russia. We're like, no, we don't want to go to Russia. That's terrible. Yeah, it's just Moscow claimed its offer followed a personal request from Emmanuel Macron, but the French president condemned it as a moral and a political cynicism. Yeah. Led to Russia. It's in the stop manipulating these genuine requests. Yeah, it doesn't surprise me that Russia would say that. Like a fire leading straight to the fire. No kidding. If you want exposure to nickel, you should buy Talon Metals. Steve's the commodities man. He knows all these commodities. Talon Metals. Tau. This does not trade much, apparently. Unless I'm in the options chart here. Hold on. I might be. TAO. Yeah, why is it doing that? Stop it. Talon Metals. Oh, OTC stock. There we go. There we go. That looks more proper. Wow. I'm also watching Trade Desk here. Trade Desk hitting these low levels here. I'm going to compare this for a moment. So Trade Desk hit about 55 on Jan 24. But look at that sort of double bottom that we're getting here. very similar to what we saw in the QQQ, except delayed, because the QQQ bottom was here on the 24th, and Trade Desk actually held up nicely through that. Yeah, but generally, I like shopping where the real pain is. And look at this, folks. NVIDIA. Oh my gosh, NVIDIA is now at a triple bottom. Whoa. Wait a minute. Is it continuing this trend? I mean, that would just be weird. Kind of. But I don't really like the way this is drawn. It looks kind of crappy. I'm gonna rejigger this a little bit here. No, I don't really like that either. I mean, what you could do is you could view it like this. You know, this sort of slightly reducing floor over here. Yeah, this is what's the scale on this? Let's see here. This is, yeah, about a 2% decline here in your floor price on NVIDIA. And it just, this to me just shows why, like, if you want to buy in this lower section if you can, right? When those real fear pain points come. But then otherwise, just chill and be patient. Let me look at the trade. Let me see if I can get the bands up for NVIDIA. NVIDIA stocks. All right. Okay, let me show you this. Oopsies. Okay, so here's NVIDIA going back about the last 3 months. Zoom in a little bit more. TradingView takes a little bit of time to get your zoom set right. Otherwise, it just looks so overwhelming. Here we go. This takes us back to about mid-Feb here. Okay, perfect. And let me get rid of... No, this is fine. Okay, so here's my trading view on NVIDIA. And this, to me, I love buying when we're in the green bands over here. And those are almost the times to touch, which is kind of where we've been. But you've seen this compression in the bands over here. And so usually it's those individual shock days where like here you have Feb 24, right? Where's Jan 24? Over here, you're hitting these green bands. Buy there. And you can easily turn these on like TradingView. A lot of trading apps have this. And other than that, I don't think there's a rush to try to jump in every time the stocks move up a little bit. You know, it's like, oh no, I'm going to get left behind. No, nobody's been getting left behind in this market. Just crazy. All right, let's listen into here for a moment, see what other news we got here. What's this? Florida? Why are we talking about Florida?
The business of Florida is cheaper than a New York or an Illinois or anywhere else in the Northeast. But as we see this migration, it's making everything cost more. And again, we monitor it. But one of the biggest concerns is nobody's talking about is what the increase in inflation has done to the availability and cost of insurance. Homeowners insurance is spiking because it costs more to replace your house. It was.
This guy's Mike.
Any moment now, the president will announce a ban on Russian oil, and the price of oil just goes straight.
Hey, that picture they had was literally this picture. No. Oh, they're going to commercial too. All right, let's see what else is going on out there. So let's see what the suits are saying. The suits. So Biden's scheduled to speak in 8 minutes. I'm sure he's going to be behind. I'm going to write that down really quick. Biden's scheduled to speak at... There we go. I'll write that down up here. Okay, so U.S. and U.K. poised for ban on Russian oil imports. We'll talk about that. Obviously, we already have talked about that, but we'll see how the market reacts once Biden speaks. Oh, this is quite interesting. So here's an article just talking about how the U.S. stocks have had their second worst start since 1900. Yikes. Tightening financial conditions are evident. Oil, geopolitical risk. Or it doesn't feel like. Let's see. Markets are funny creatures. Let's see. Okay, this is just sort of like a little summary about what's going on here. For a global economy that was already struggling to come to grips with inflation, the sanctions-driven supply shock has arrived at an inopportune time. While the nickel markets provide perhaps the most spectacular manifestation of this phenomenon, there's little doubt that the repercussions will radiate substantially further. On Monday, we looked into the rise in oil prices and found that they fall well short of the threshold that should trigger a recession. Well, that's good. I want to see that article. At least in the US. That doesn't mean commodity inflation won't have any impact, of course, for the market is pricing a substantial slowdown by more or less completely unwinding the rise in real rates. Okay, that's interesting. Let's take a look at what they say here. While we wait for Biden. Apple heading back down to trend. If people are enjoying the stream, is there a way they could get daily lecture? Well, right now it's in the course. All of the courses have daily live streams. Today I'm doing something, a special experiment. By the way, shout out to those of you who did join up using the coupon code down below for the programs on Building Your Wealth. Remember, I always add content to them. And you'll also be the first to be able to learn more about metkevin.com/Series A when that comes out in the future. But shout out to those of you who just signed up. Edgar, Tony, Jose, Jordan, Charles, Sean. It looks like all of you stocks and psychology money except Edgar for wealth and Charles bundling real estate investing and stocks. Awesome. Stocks and psych there. Congratulations and welcome. Thanks for joining. All right. While we wait for Biden, I want to see what this is here. Okay, so isn't recessionary just yet. So I want to see what this person's argument here is about oil causing a recession, and then we can talk about it. And we'll write down some notes. Depending on your age, the surge in crude harkens back to 2008, 1990, or the 1970s. In truth, the current backdrop resembles earlier episodes much more so than the 2008 experience, given the role of the supply shock. Okay, so they're talking about a potential negative growth shock to Europe. Oil shocks in past. I want to get their data. See why. At the same time, we should also take a quick peek to see what oil is doing right now. Oil right now. Wow, Brent's at 132.28. Oh my gosh, it's insane. Well, let's listen to Varney for a moment while I look at this.
5 minutes, going to announce new sanctions against Russia. You will hear him, you'll see him as soon as he begins speaking. That should be in a couple of minutes' time. Now, we've got the refugee question. 2 million refugees have fled Ukraine. Half of them are children. Colin McShane in Slovakia talking to some of the families. Yeah. Just awful. What are they saying to you?
Oh, all over the place, Stuart. We're at the third border crossing of the day. If we just turn around and walk.
I just want to quickly note that these border crossings, they separate at the gate. Any men between 18 and 60 who do not have at least 3 children, they separate them from their family at the gates. It's so sad.
And they arrive here in a new country, and the stories, one after another, as we top 2 million refugees coming in, are just amazing. And as Les walks up towards the border crossing, another family is coming in here in Ubla, a mountainous region that separates Slovakia and Ukraine. At a different crossing earlier today, we were talking to this mother and son who gave you a kind of an idea of what these people go through. How's it going? On multi-day journeys. Take a listen.
We just want to live a peaceful life. We don't want to be like Kharkiv, like Kiev, Mariupol. We just want to live a peaceful life, so we came here just for a good life.
Yeah.
We came here just for a good life, and as we look live into the border crossing, I think this these two people just came through customs on the Slovakian side, and they're coming down. It's just been amazing to see the spirit steward. I know the folks right before we heard that soundbite were waving at the camera with a smile on their face, which is hard to believe, because I was talking to someone earlier from Kharkiv, which is, has been hit so hard by the Russians. And the young girl said it took her literally 5 days to get here. 5 days. You're stopping and going, because we've heard a number of reports coming out of Ukraine, which is, of course, just behind me, that the Ukrainian foreign minister, for example, earlier said there's been shelling of some of the evacuation routes. So they'll get on the road for a little while. They'll get a report on their phone that that's not safe. They'll stop and they'll go. And it's taking so long to get here. But you feel that sense of relief, sense of at least temporary safety when you get to a country like Slovakia. Stuart?
What a story. Conal McShane in the middle of it. Thanks very much, Conal. Now, joining me is Irina Prihodka. Irina,
and that's what's so terrible. That's what we saw yesterday, was that folks outside of Kyiv are actually trying to escape into Kyiv because Russian troops have surrounded the exterior, sort of the surroundings of Kyiv, or are trying to surround it. And so folks are trying to escape to the inside, where it feels to be safer. And this is where we saw that terrible shelling yesterday of individuals as they were running to cross a bridge. No military at all, at least not fighting actively, according to the press reports. It's terrible. Okay, CIA director now estimating that 2,000 to 4,000 Russian troops have been killed. And this is interesting. The next, quote, ugly next few weeks coming in Ukraine. This is not good. Yeah. Okay, still reading as well about this oil thing, and I'll circle back with this in just a moment. Let's see what else we've got. Varnes here saying.
Okay, I just want to thank you very much for all the help that you're giving to those people at the embassy, and we hope you can get them all out safely. Irina, thank you very much for joining us this morning. See you again soon. The European Union has officially agreed to look at the membership requests from Ukraine, Georgia, and Moldova. Ashley, that could take years, couldn't it?
Well, based on history, yes. The leaders of the EU, though, will begin to discuss the three applications as soon as this week at a larger summit on the Ukraine conflict. The group's executive will first give an opinion on the applications, and then the member states of the Commission are required to vote unanimously in favor of each new nation's candidacy for membership. It's the EU, remember, they love bureaucracy. Ukraine has asked the EU to fast-track its membership, and some EU members have already endorsed its entry. But others are resisting that move, fearing an escalation of conflict with Russia. We should point out, Stu, it took Poland 10 years to finally be admitted to the EU. It's going to be interesting to see how fast the group acts now. And we should also mention the Moldovan ambassador to the US will be joining us in our next hour. So I'm sure that will be a topic of discussion.
Yes. Is Moldova a target of Putin? That's a good question.
Yes.
Looks like it. All right. Thanks. It's 10:45 has passed. It's now 10:46. We're still waiting for the president.
I think they're not wrong to say that you're going to see a lot more of this, application to join both the EU and NATO by countries closer to Russia. I mean, it almost feels like the opposite is being accomplished here by Russia. They're really pushing the rest of the world together, and not apart. So it's tough to know what's on Putin's mind, though. Some folks think he's lost his mind and he's crazy. I actually am not one of those people. I don't think he's. I mean, I think what he's doing is horrific and wrong, but I don't think he's. I think he's pretty calculated. I don't know. I can't just write him off as kooky. Again, as terrible as what's happening is. So, all right. Well, Biden's getting ready to speak. He's a little bit behind, as usual. Let's take a look at the QQQ for a moment. Oh, okay. A little bit of a bounce here. Spy, same thing. Late already, Biden. Oh, yeah. Steve says, I don't think Putin. Yeah, some of you agree. Props to Russia for unifying the world. Okay, that's not what I expected. Someone say. That's a good point, though. All right. CIA Director Burns says, regardless of how Iran nuclear talks go, other challenges from Iran will persist. Let's listen in over here to CNBC for a moment.
In the world, but over the course of the last 2 years has been responsible for saving the world through our pharmaceutical manufacturers and others that have risen to the challenge during the pandemic.
Jay, there's the people piece of the puzzle, which you've just outlined. And then, of course, there is the cost and commodity piece of the puzzle, which is certainly in focus right now, given everything we're seeing playing out in Eastern Europe. Between sanctions, how are your constituents navigating all of that? How would you expect this to continue to play out, even as we do see this major multi-year trend of reshoring take place?
So I will say this to you, Megan, there's literally not one member of the board of directors of the National Association of Manufacturers that I've spoken to. We have a large board. We have 250 board members. They represent Fortune 500 companies.
No, that I really care about this so much. So what I'm looking at right now is there's this argument about energy. Will energy create a recession? And there's this talk about how energy prices as a percentage of wage income are actually at a relative low. And so this person goes on to say how they're trying to model using this energy to spending and wage ratios. How likely is it that this sort of thing is going to lead to a recession? I had a look using a similar framework to my market-implied recession probability model, except this time I used the energy spending ratios and the year-over-year change in that metric, the only two independent variables. Okay, I want to see that chart. I'll show it later. Spending needs to rise above 10% of wages to trigger a recession. That's really interesting. I'll pull that chart up in a moment here. Let's see, I'll grab it. 1 sec. So this person writes and suggests that this isn't perfect, but comparing us to the 70s and 90s is probably not a good thing to do just yet, because even though these prices are going high and they remind us of 2008, wages are up so much more. That's quite an interesting argument. But they could all of this is obviously going to hurt spending. And so I think this is also why you've seen some of the consumer stocks rotate down a little bit. Oh, I froze. Seriously? Sorry. I hate it when that happens. It's the stupid computer. I wonder how long I was frozen. Like 2 minutes? Oh, man. Sorry. Oh, well. You can still hear me, right? 5 minutes? Oh, my gosh. Sorry. Stupid thing. It's the computer. I don't know why. It's when I close the little recording thingy, or like I minimize it because I look at another article or something on it. It can't handle it, apparently. Apple can't handle the truth. Apple releasing new computers today. Anyway, I'll get that chart. That's quite interesting. All right, let's see. Well, let's go back to Fox for a moment. Let's see if we can get some other news while we wait for Biden to talk.
Well, I mean, the president's coming out. Of course, he's 5 minutes late. He should probably be a half hour late, knowing the way the White House runs. And he's going to say we're off Russian oil. But behind the scenes, Stuart, you got to be kidding me. You see what happened with a Democratic House and a Democratic Senate. They have voted in a bipartisan way to stop using Russian oil, and the president and the White House calling back to suppress this vote. We don't know why, but Speaker Pelosi wasn't persuaded. They finally got a hold of Ron Wyden through Schumer to not push forward, so he could be the hero today whenever he decides to come out and say we're going to stop using Russian oil. What was the delay?
Oh, sorry. I'm gesticulating into the camera because I saw something appear on the screen which I didn't want. My apologies, viewers, one and all. So I don't get it. You've got a fight now between Congress and the White House. And I think it's because if you ban Russian oil, you're going to raise the price of gas even more. And most Democrats know that that's not a very good option.
You know, this is called doing the right thing and being a leader. And that's what I think America needs more than ever. We need people just to lead. I mean, I watch what Joe Manchin's doing, taking on his own party, but not doing that. He's actually doing what's right for the country. Can we stop thinking right and left and start thinking red, white, and blue? And 7 out of every 10 Americans, when asked, would you pay more for gas if it meant banning Russian oil, told Quinnipiac pollsters, yes, we would. And this is not the reason why oil and gas is going up. And when I found out over the weekend that the President of the United States sent emissaries to deal with Venezuela, a regime that we don't even recognize, to see if they would give us more oil, and ask Iran to put their oil on the world market so we buy from them, do they not realize how wrong that is to provide money to terrorist regimes that try to upend freedom-loving people and governments that are rightly elected?
I always think it's interesting how the people that get on Fox always have this rhetoric that just makes you hate Democrats. Like, it's not just what they're saying, it's how they're saying it, right?
From John Kerry, the climate czar. Here's what he says. We have to do enough in 2020 to 2030 to be able to achieve net zero by 2050. In order to get that zero by 2050, that's a 45% reduction in emissions in 8 years. That means they're still pushing heavily on a green agenda in the middle of an energy crisis. Makes no sense to me, Brian.
I mean, I'm embarrassed for John Kerry. Yeah. I mean, my goodness, he sees he sees schools being blown up. He sees residential buildings being destroyed. He sees women and children face down in the street, shot dead by Russian snipers. And he thinks the big worry he has, as he goes on in that quote, is that Russia will forget their climate obligations. I mean, are you kidding me? Are you a human being or are you just a robot? I mean, are you nuts? This is about, if you are concerned, you want to talk about renewables, you want to double down on R&D when it comes to green technology, I think America could get behind that. But you also want to say we're going to use nuclear and natural gas. That is fine for the environment, and we know that. It's other people's agenda. And then to find out that Vladimir Putin was putting ads together to make fracking seem like a bad alternative and play to the green movement in our country to stop fracking in our country because it hurts his oil sales. Get your head around that for a second. They are playing our lack of nationalism against us, our lack of national pride against us.
I don't know. I mean, there's a lot of talk about the contamination of fracking to, water or the release of side effect chemicals, the potential geological impacts to fracking. I mean, look, everything has an externality, right? So it's like there's nothing that we do in life that doesn't have consequences, but it's all balanced. But I think there's a little bit more to the argument here.
$8 a gallon. No wonder they're going to turn around on the greens. Brian, I'm sorry I'm out of time. You know how it is. Hard break coming. We'll get to you later.
All right,
yes,
Stuart.
we are
Thanks
still
for sharing
waiting
your
for the
audience.
president.
Always appreciate it. 1-866-408.
Still ahead. Acting U.S. ambassador to Ukraine, Christina Kvien.
They cut off his phone number. Did you hear that? He's like 1-866-408. I think they cut off the last 4.
10:45. He's late, but we'll carry his announcement when he makes it.
So I want to look at consumer stocks here for a moment and just kind of look for some trends because I do think the market's going to start pricing in. They're all just now greens. That's actually it's what they use in Germany because there is actually a green party, right? Hold on, I messed up my little note thing here. There we go. But anyway, let me quickly add Biden to speak. All right, update that really quick. But yeah, that doesn't surprise me that they're it doesn't let me change the title here. Darn it. Okay, I'll do it the other way. Hold on, one sec. But yeah, I noticed that too with the greens thing. I don't know. Just say Democrats. But it's actually, you know what they're doing. See, Democrats. Here's what they're doing, what Varney's doing. Oh, that's really interesting. I think it's like a little psychological trick that they're doing. See, if you are, let's say you're like, okay, here's the pie of America, and let's say, you know, this half right here is Republican, and then you know, I don't know, let's say, I guess I should do, there we go, Republican. And let's go over here and we'll say that this half is not poop colored. There we go. This half is the Democrat. I think what Varney's trying to do by calling the Dems green here is, rather than say, oh yeah, this is 50% versus 50%, you know, in America, it's more like, oh, here's the crazy greens, let's just say, right? And I think he's trying to actually expand his audience by saying that, oh, well, it's just the crazy greens. It's just that little small portion over there. In other words, even if you're Democrat, you could hate on them too. Like, I think that's what why he's using that phrase greens. It's actually, from a marketing point of view for Fox, not a terrible idea. Not a terrible idea. All right. So while we wait here, I do want to look. Okay, so I was going to look at some consumer stocks. Right. So consumers, because I do think the consumers are going to pull China on us, which is spend a little bit less on stuff. Let's look at like Target. So Target killed it on earnings. We knew that. 210, 270, 270 to 210. So you're down a chunk on Target here as well from top. Down about 23%. I mean, that's beating the SPY in terms of a fall. That's another one. How about Walmart? How's that one doing? Walmart has also been on this downtrend here. Not horizontal. This downtrend's really been happening since July. No. Here since, what is this? Oh, September. Huh. You've had a recent little uptrend here, but in terms of the bottoms, you've had this sort of downtrend, little boost here. But you're getting these lower highs. Yes, it's about here-ish. Okay, so that'll be interesting to watch. We'll look at what's another one? Macy's and Visa. Yeah, look at that. You are kind of seeing the market price in a little bit of less of that consumer action there. Yeah, Microsoft and Apple have become a little bit more of like a, oh, wait a minute. Wow, 275 on MSFT. Wow. From about 350. Oh, look at that. Yeah, down about 21% on Microsoft. Huh. Apple's been, I was going to say Apple's been a little bit of like a flight to safety kind of stock, where people are parking their cash. Nah, down about, well, this one's actually doing better than the QQQ, but it's kind of moving with it. 14% from top. QQQ right now is sitting at where? Let's see, 408 recent top, and right now we're sitting about, wow, 323. 324 divided by 408. It's a good 20% down on QQQ from the top. But that's the top in November. From the top in January, we're, well, I mean, it's basically the same thing. Down about 19.9-ish. All right. Still waiting for Biden. Let's listen in over here for a moment.
Popular stores shutting down, rampant inflation. And if you're rich with money overseas, forget it. Your assets are frozen. In short, Russia's economy is largely paralyzed. The sanctions were supposed to restrain Russia. Well, that didn't work. Now the sanctions are punishment. Putin has put the world through the ringer, and the world wants revenge. Those sanctions are not going away unless Putin goes. I'll leave it at that.
Yeah.
Third hour of Varney starts now.
Otherwise, hint, kill Putin. Everybody's doing that these days. Everybody's sending the hints. It would end it fast. You got to give him credit for that, for mentioning that. Oh, how he just ended up. Now he's got Kayleigh McEnany here. Okay, we need a poll. Kayleigh McEnany or Jen Psaki for press secretary.
Who was
not making direct reference to Joe Biden, but the West generally, too little, too late. I mean, sanctions should have been in place prior to the invasion. We had a president who told us on a Friday the invasion was certain. Well, if you're so certain, if the intelligence is so rock solid, why not sanction before the invasion rather than after, when we know sanctions take a month? And today, this oil sanction, the embargo on oil, this came after bipartisan calls from Pelosi, Ted Cruz, and our president always seems to be the last one to the party.
Well, they haven't decided what they're going to do yet.
Yeah.
I mean, it's supposed to appear at 10:45. We hear there's a kind of an argument between the president, the White House, and Congress.
Yes.
They got a bill. The White House is perhaps not happy with all that's in the bill, so they're still delayed. It's 11:02. They're 17 minutes late.
So I think you hit on the most significant reporting from Jackie Heinrich, really telling. Her sources told her that the House Ways and Means Committee met in a bipartisan fashion all weekend long, hammering out this bipartisan embargo on Russian oil. They put up a press release Sunday night about it. It was pulled down within 5 minutes. Apparently, the president himself directly intervened in the process. And Nancy Pelosi, quote, was not moved by the White House's arguments, said we're going to move forward. So they tried to go to other senators to try to stop this because they didn't want to make it seem as if Congress was leading and the White House was following. That's exactly what happened. And it seems like a whole lot of politics about an issue that shouldn't be political.
Well, so now he goes out there literally in a few minutes, we believe. And whatever he says, the price of oil is up. The price of gas is going up. It's at a record high now. It'll probably go up some more with the price of oil like this.
Yeah.
So here's the president going out and saying whatever he's got to say. Oil goes up, gas goes up, inflation goes up, and the midterms are in November.
Yes, and whatever he says will be woefully insufficient because it will not include, we're going to do Keystone, we're going to tap into domestic energy. We have, 32 billion in oil reserves in this country. Why aren't we tapping into it? I know everyone keeps asking that question, but when you look at the polling, you mentioned midterms, Rasmussen says, should we increase U.S. oil production? Republicans, 87% yes. Independents, 70% yes. Democrats, 55% yes. Even Democrats say, let's go. So
someone says, let's circle back to that question. Circle back, Psaki. That's right. So still waiting for Biden to speak here. But, one of the things the Saudi Aramco CEO, I believe he's the CEO. Hold on. Saudi Aramco CEO, Nasser, I believe it is. Yeah. So it's the CEO. CEO of Saudi Aramco just came out and mentioned that the mixed signals from politicians are actually increasing the complexity of how markets are supposed to respond to this oil and gas disaster. And that's kind of interesting. We'll keep listening here for a moment.
It's a portion of the Democrat Party.
Let me say something dramatic. I think the green energy deal, the Green New Deal, the Glasgow conference, COP26 or whatever, you're dead. It's finished.
Yeah.
It's over.
Yes, I think it is. But it was laughable yesterday to watch Jen Psaki suggest when Peter Doocy said, hey, increase domestic production. She said something to the effect of, Green New Deal kind of packaging, green energy would increase energy in our country faster. I don't think so.
Katie, I hope you can stay with us.
Yes.
Because we're expecting the president any moment. And after he's spoken, I'd love to get your take on that and hope you can stay long enough.
I will stay till 11:35 because then I have to go to the set of Ambushed, as you call it.
Yeah, okay. Yeah. Are we going to take any bets on whether the president will show by 11:30?
I would bet no.
Yeah. What do you say to this? All liberals are late.
All liberals are. Yeah, I think that's exactly right. I mean, President Trump tried to be on time. For the most part, he was.
No, Trump was late too. I will say Biden seems to be, and maybe it's just because it's now, Biden seems to be later than Trump was, but I can't think of a time Trump was on time because I covered these things a lot.
Many, many years ago. And I walked up to the doors to the Oval Office and it was exactly on time. I mean, to the second. And to the second, the doors opened. That was President Bush.
Wow. Impressive.
He called me Stu, as a matter of fact. I rather like that. Yeah, that's fine with me. Stay there, Kelly. We appreciate you being with us. Quick check of the markets, please. We're now down 55 on the Dow, 20 down on the NASDAQ, 10 down on the S&P. Limited losses after yesterday's huge sell-off. Mark Avalone joins me now, market watcher of this morning. All right, Mark, I'm going to put you through it. Why on earth would I buy anything right now, any stock right now, when you've got gas prices at a record high, oil going up and a war in Europe and much higher interest rates coming. Why buy stocks?
To buy the dip.
Well, I wouldn't buy today, Stuart. I don't have a good reason to buy today unless you're a speculator or if you have a multi-year time horizon and an iron gut, because we are faced with a lot of volatility. I don't think the next day, week, or even the next month has a lot of clarity for new money. We're deploying very slowly or not at all. So your question, while maybe rhetorical, is a great one and accurate. No, I think investors would be wise to be measured in their deployment of capital. But if you're looking very long term, I'm confident that the stock market we see today is going to present value for investors in 2-3 years.
So long term to you is 2 or 3 years, right?
Yes.
So what would you give me 2 stocks, 2 companies that you would buy today if you don't have to touch the money or worry about it for 3 years?
Well, we like big tech because when this economy starts to slow, and it will, these Fed rate hikes are like will slow the economy. Higher oil prices are like a tax hike. It's going to slow the economy. When the economy slows, investors will search for growth, and growth will come from big tech, massive cash flowing machines that have become an integral part of our life. We're not giving up on them. You know, the big names, Apple, companies like Apple and Microsoft and Google, they're in the
yeah, say Tesla.
cloud, Apple in a dominant consumer position. Consumers are still strong. Unless there's massive wealth destruction from this current market meltdown, we think the consumer is going to remain strong. The jobs market.
See, that's actually a good point. What he mentioned is unless there's massive wealth destruction, I think you're already seeing that wealth destruction, right? And that's why we think consumer spending gets hurt in oil. But that wealth destruction also hurts especially small businesses. And that's why we saw the last jobs report, ADP report, show that small businesses were hit the hardest.
Understand that, but you did a great job. Thanks very much, sir. See you again soon.
Good seeing you, Stuart.
Tough job on Wall Street right these days, I'm telling you. How about this? New poll shows less than half of young American adults would stay and fight if the U.S. were invaded like Ukraine. Less than half these youngsters would stay. Todd Pyro's looking kind of angry here. What do you make of that?
Ready for these numbers?
Go.
They are fascinating. And wait till I do the political breakdown. But let's do the basic numbers first.
Oh, no.
18 to 34, right? 45% would stay and fight. Less than half. That's the 18 to 34 group. Isn't that unbelievable? 35 to 49, 57% would stay and fight. 50 to 64, that's the biggest chunk. 66%, Stuart, would stay and fight. And again, don't want to age you here, 65 and older. 52% would stay and fight. So Stuart's getting his gun. Quickly on more Republicans than Democrats would stay and fight. 68% Republican compared to 40% Democrat.
You're on the screen right now.
Isn't that unbelievable?
Only 25% of Republicans would leave the country.
Wow.
50.
Look at that. 25% or 52% of Democrats would just leave the country. See ya. Oh my gosh.
Where do these individuals think we get that word freedom from? Freedom isn't free. I've heard you say that. You say that. I've said that multiple times. If you are being invaded, you are about to not become free. It is incumbent upon you to pick up a weapon and defend your freedom.
What do you make of that, you youngsters?
Yeah, I mean, to that point, it was Ronald Reagan who said freedom doesn't come free. It's not passed along in the bloodstream. You have to fight for it. You have to teach future generations about what freedom is. And I think future generations, young generations, I'm a millennial, admittedly, we're learning a lot from the Ukrainian people, watching people who have left the country and are literally taking trains back to pick up arms, fight, and defend freedom. That is the kind of love you have to have for that concept in order to take those actions. We're seeing it firsthand every day.
You got it. Okay. Hold on, everybody. The White House is standing by its claims that the administration is not slowing domestic oil drilling. We have a full report on that from the White House coming up for you. After nearly 2 weeks of war, it's 13 days, Ukraine's President Zelensky revealed his exact location in Kiev. He says he's not hiding and he's not afraid of anybody. A report on that, too.
Dude, this guy's such a bad A. That's awesome.
Oil, more Varney in just a moment.
Okay, so I'm trying to pull up that study itself because it's very interesting to me. And I think I have it. There are a lot of comparisons here. Cyber attacks, oil. If you were, do you think you would say, oh, wow. Okay, yeah. This is it. This is it. Now, if I could just get this to where I can annotate it. No, I can talk about it while we wait for Biden to speak. But this is very interesting. Poll.qu.edu. Oh, my gosh. Images, polling. Sorry. It was a little boring here. One sec. 22. UJCA44.pdf. Okay, did I get it? Got it. Okay, perfect. Okay. One sec. We got to talk about. I want to go through this because the poll seems very interesting to me. Okay. So this is the Ukraine versus US poll. All right, let's take a look at this together. Now I can see it a little better. There we go. Okay, I found it. Okay. So it's number 8. Rig poll. People think it's BS. The rig poll. I want to see it. We'll see what it is. We'll see. Let's give it a sec here. All right. So how do we want to do this? All right. Well, we'll just go through some of it. All right. Let's just look at some of the details here because now I can annotate it here. So vast majority of Americans say ban Russian oil. Okay, let's look for the juicy stuff, and then we'll come back to the fight in Ukraine part. So so this is a poll from this particular university. I have not heard of this particular university, but anyway, so they conducted a poll. I wonder what numbers we have here, and Biden is getting. It's now they're actually showing the podium. We're only about 30 minutes late right now. At the end of week 2 of Russia's invasion, U.S. and the Allies considered ratcheting up sanctions. Americans say 71 to 22% that they would support a ban on Russian oil, even if it meant higher gasoline prices in the U.S. And let's see here. Democrats, 82% would support. Independents, 70%. 66 all support banning Russian oil. That's interesting. Less Republicans support banning Russian oil compared to here we go. Compared to Dems. The U.S. military. Americans are ready to put a chokehold on Russia. Broad support for U.S. military response if Putin goes beyond Ukraine. 79% support. Americans are divided on Joe Biden's handling. 42% approve of Joe Biden. 45% disapproving. And 30% abstaining. Overall job opinion, not just on Ukraine, he actually fares worse. So he fares worse on his overall job compared to how he's performing in Ukraine, according to this particular poll here. Americans gave Biden a negative 38% approval rating. Well, so yeah, okay. Well, that would be, hold on, give a negative 38. So I think that's a way of saying 38% approve. Yeah, anyway. Okay, let's see here. Ukraine's president. Nearly 2/3 of Americans have a favorable opinion. 64% of Americans have a favorable opinion of Zelensky. So that means twice as many Americans prefer Zelensky over Biden. Oh my gosh. Okay, who are these? Who are these 29% of people that say they have not heard about Zelensky? What is this? 78% support accepting refugees here. Put a little more here. Wow, the popular opinion, 60% is they believe that Putin is actually mentally unstable. That's a lot higher than I thought. And it's gotten worse. It was 49% a week ago. Wow. And 50% compare him to Hitler. %74% of Americans think that the Russian people are not fully aware of what's happening in Ukraine. That's sad. What would Americans do? As the world witnesses what is happening in Ukraine, Americans are asked if they would, what they would do if they were in the same position: stay or leave the country. 55% said they would stay and fight. We'll go to the age breakdown on this one, because this was interesting. The age breakdown, that was on page, I think, 8. Yeah. This was the chart they threw up. They just put it up with a nicer banner. Stay and fight. 55% would stay and fight. 68% of Republicans would fight, but only 40% of Democrats would stay and fight. This makes sense. The men-woman difference here, this makes sense. I mean, this is what you're seeing in Ukraine as well, right? And then it looks like the people with college degrees are actually slightly less likely to stay and fight. But that's almost similar, the college degree versus not college degree. And then the age group here, the tough guys. Look at that. 66% of 55 to 64-year-olds. That's where it's like, yo, they're like, hey, we need to fight. They're your freedom fighters right here, the 50 to 64 group. I wonder if that's just like a generational thing, because you totally see the decay here, or if it's just more of a fear thing. I don't know. That's very interesting. Stay and fight, leave the country. This is also very interesting. I do wonder how the survey was done. And look at this. Somebody's probably just going to get canceled for even putting this survey up. But this is a very big difference. Stay and fight. Look at that. White and Hispanics are more likely to stay and fight than black. I wonder if there's more of a negative impression towards the way the government. I mean, if you think about like schooling and things like that, and unemployment, I think the black unemployment rate is the highest out of all different races. That's very interesting. What a difference there. Huh. Okay, so see if we can get some data on this before Biden speaks, because we're still waiting for Biden to speak. I'm going to hop around and see if I can find some data while we listen over here for a moment.
They're both taking action against Russia. What are they doing?
Well, they're cutting it off. Both leagues have instructed their lawyers to begin the process of ending broadcast contracts in Russia, with an announcement expected in the next few days. The organizers of England's professional leagues say they are united in their desire that no more matches should be shown in Russia while Vladimir Putin continues to wage war on Ukraine. The move would mean a cut in foreign broadcast revenues. In the case of the Premier League, the current Russian deal worth close to $8 million. The Russian broadcaster that airs the games is owned by Spearbank, which has already been sanctioned by the UK government. So not a big surprise, but no English soccer or football in Russia. Stu.
Got it, Ashley. Left-hand side of the screen, the podium that the president will approach shortly, we believe, to tell us what he's going to do about Russian oil coming to the United States. This is severely delayed. He was supposed to be on there at 10:45. It's now 11:20, so he's 35 minutes late. Kaylee, I got a suspicion they can't decide what they really want to do here.
That, or there may be a reason. I actually just heard from Weijia Zhang. She's in the White House correspondence. She said now, minutes before the president is expected to announce a ban on Russian oil, all TV crews on the White House North Lawn have lost power again. I don't know how that affects what's going on with President Biden, but curious indeed. The unexpected power loss also happened on February 15th when Biden delivered remarks for Russia and Ukraine previously. So really interesting. I don't recall a time when all TV outlets lost power when I was press secretary, minutes before a speech. This has now happened twice.
Well, how could they lose power when you were the press secretary
Correct.
and
They
everybody's
never.
waiting to see you? Come on. Todd, I don't think...
Okay. All right, Varnes. So... let's just look at the market here a little. QQQ. I mean, we're basically just trading sideways as everyone waits for Biden. What's interesting is Biden, the last few times Biden has spoken, the market actually started doing better. Like the market recovered a little bit. We got a lot to talk about regarding oil once Biden. Oh, look, they finally put a speech out. Look, they're coming. All right. So
gasoline's gone to a record high, 417. Diesel has gone to 475. And here comes the president to make an announcement. And we don't know what it's going to be. And we don't know whether it's got the agreement of Congress. That's a mess.
It's a huge mess. And we just saw them lay out President Biden's remarks, usually an indicator that he is on the cusp of speaking, though I don't believe we've gotten a 2-minute warning. It is a mess, Stuart. I mean, plain and simple. This is going to cost Americans thousands and thousands of dollars each and every year if he does not bring down these costs. There's an easy way to do it. Either you can greenlight domestic drilling, you can do the Keystone Pipeline. There's any myriad of ways, but you can't keep using this talking point. We need green energy. Yeah. That's a talking point. That's not a solution. So, I mean, if he says that today, I just think it's really going to fall on deaf ears on an American people that are really hurting.
We got a 2-minute warning, by the way.
We did.
Yeah, that's traditional in the media. When the president's about to speak, the media gets that 2 minutes. And here he's coming in 2 minutes. Well, let's see if it's 2 minutes. What do you got on top?
To follow up on Kaylee there, I think the difference between Congress and the White House right now, when's Congress up? All 435 members of the House of Representatives are up in about.
I like how the 2-minute warning comes like 38 minutes late.
Got 3 years. And so the Democrats need answers. Otherwise, they are going to have beyond a bloodbath. I think at this point, they're just trying to settle for a bloodbath. If they can't get gas prices down below $4 by that first Tuesday or second Tuesday in November, they are going to see epic numbers that they've never seen before in terms of losses.
Okay. Let's see if that 2-minute warning actually works. Let's see if the president does actually appear in about 90 seconds. We shall see. But let's give you the market situation as we run up to the president's announcement. Bottom right-hand corner of your screen, price of oil up $9 as we speak at $128 per share, per barrel, I should say. Now, this is because we're about to ban Russian oil imports. That cuts the supply of oil coming to America. Therefore,
Russian central bank says the Moscow Exchange Forex market to open at 7 GMT. Interesting.
What he has seen today is the record high price for gasoline. You're at $4.17.
Could be a big swing for the RSX ETF if anybody's playing that.
Diesel has gone to $4.75. Can you imagine what that means for truckers and farmers and construction people who operate heavy industry?
Oh, here we go.
Here we go. Is that the president? No, he doesn't usually close the door himself. That is the president of the United States. Ladies and gentlemen, the president.
Today, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. This is a move that has strong bipartisan support in the Congress and, I believe, in the country. Americans have rallied to support the Ukrainian people and made it clear we will not be part of subsidizing Putin's war. We made this decision in close consultation with our allies and our partners around the world, particularly in Europe, because a united response to Putin's aggression has been my overriding focus, to keep all NATO and all of the EU and our allies totally united. We're moving forward with this ban, understanding that many of our European allies and partners may not be in a position to join us. The United States produces far more oil domestically than all the European countries combined. In fact, we're a net exporter of energy. So we can take this step when others cannot. But we're working closely with Europe and our partners to develop a long-term strategy to reduce their dependence on Russian energy as well. Our teams are actively discussing how to make this happen. And today, we remain united. We remain united in our purpose to keep pressure mounting on Putin and his war machine. This is a step that we're taking to inflict further pain on Putin, but there will be cost as well here in the United States. I said I would level with the American people from the beginning. And when I first spoke to this, I said defending freedom is going to cost. It's going to cost us as well in the United States. Republicans and Democrats understand that. Republicans and Democrats alike have been clear that we must do this. Over the last week, I've spoken with President Zelensky several times. to hear from him about the situation on the ground and to consult and continue to consult with our European allies and about U.S. support for Ukraine and the Ukrainian people. Thus far, we've provided more than $1 billion in security assistance to Ukraine. Shipments of defensive weapons are arriving in Ukraine every day from the United States, and we, the United States, are the ones coordinating the delivery of our allies and partners of similar weapons, from Germany to Finland to the Netherlands. We're working that out. We're also providing humanitarian support for the Ukrainian people, both those still in Ukraine and those who have fled safely to a neighboring country. We're working with humanitarian organizations to surge tens of thousands of tons of food, water, and medical supplies into Ukraine, and with more on the way. Over the weekend, I sent Secretary Blinken to visit the border between Poland and Ukraine and to Moldova to see what the situation was firsthand and report back. General Milley, Chairman of the Joint Chiefs of Staff of our Defense Department, was also in Europe, meeting with his counterparts and allies on NATO's eastern flank to reassure them, those countries bordering Russia, NATO countries, that we will keep our NATO commitment, a sacred commitment of Article 5. The Vice President Harris is going to be traveling to meet with our allies in Poland and Romania later this week as well. I've made it clear the United States will share in the responsibility of caring for the refugees so the costs do not fall entirely on the European countries bordering Ukraine. And yesterday I spoke with my counterparts in France, Germany, and the United Kingdom about Russia's escalating violence against Ukraine and the steps that we're going to take together with our allies and partners around the world to respond to this aggression. We are enforcing the most significant package of economic sanctions in history, and it's causing significant damage to Russia's economy. It has caused Russian economy to frankly crater. The Russian ruble is now down to 50%, by 50% since Putin's announced his war. 1 ruble is now worth less than 1 American penny. 1 ruble is less than 1 American penny. And preventing Russia's central bank from propping up the ruble and to keep its value up. They're not going to be able to do that now. We cut the Russians' largest banks from the international financial system, and it has crippled their ability to do business with the rest of the world. In addition, we're choking off Russia's access to technology like semiconductors that are and sap its economic strength and weaken its military for years to come. Major companies are pulling out of Russia entirely without even being asked, not by us. Over the weekend, Visa, MasterCard, American Express, they all suspended their services in Russia, all of them, joining a growing list of American and global companies from Ford to Nike to Apple. They've suspended their operations in Russia. The U.S. Stock Exchange has halted trading of many Russian securities. And the private sector is united against Russia's vicious war of choice. The U.S. Department of Justice has assembled a dedicated task force to go after the crimes of Russian oligarchs. And we're joining with our European allies to find and seize their yachts, their luxury apartments, their private jets, and all their ill-begotten gains to make sure that they share in the pain of Putin's war. These, by the way, are giant yachts. You put some of them in your press. I mean, some of them are, I think I read one was over 400 feet long. I mean, this is worth hundreds of millions of dollars. The decision today is not without cost here at home. Putin's war is already hurting American families at the gas pump. Since Putin began his military buildup on Ukrainian borders, just since then, the price of the gas at the pump in America went up 75 cents. And with this action, it's going to go up further. I'm going to do everything I can to minimize Putin's price hike here at home. In coordination with our partners, we've already announced that we're releasing 60 million barrels of oil from our joint oil reserves. Half of that, 30 million, is coming from the United States. And we're taking steps to ensure the reliable supply of global energy. We're also going to keep working with every tool at our disposal to protect American families and businesses. Now, let me say this. To the oil and gas companies and to the finance firms that back them. We understand Putin's war against the people of Ukraine is causing prices to rise. We get that. That's self-evident. But It's no excuse to exercise excessive price increases or padding profits or any kind of effort to exploit this situation or American consumers, exploit them. Russia's aggression is costing us all, and it's no time for profiteering or price gouging. I want to be clear about what we'll not tolerate, but I also want to acknowledge those firms and oil and gas industries that are pulling out of Russia and joining other businesses that are leading by example. This is a time when we have to do our part and make sure we're not taking advantage. Look, let me be clear about two other points. First, it's simply not true that my administration or policies are holding back domestic energy production. That's simply not true. Even amid the pandemic, companies in the United States pumped more oil during my first year in office than they did during my predecessor's first year. We're approaching a record levels of oil and gas production in the United States, and we're on track to set a record oil production next year. In the United States, 90% of onshore oil production takes place on land that isn't owned by the federal government. And of the remaining 10% that occurs on federal land, the oil and gas industry has millions of acres leased. They have 9,000 permits to drill now. They could be drilling right now, yesterday, last week, last year. They have 9,000 to drill onshore that are already approved. So let me be clear. They are not using them for production now. That's their decision. These are the facts. We should be honest about the facts. Second, this crisis is a stark reminder to protect our economy over the long term, we need to become energy independent. I've had numerous conversations over the last 3 months with our European friends of how they have to wean themselves off of Russian oil. It's just not tenable. It should motivate us to accelerate the transition to clean energy. This is a perspective that our European allies share, and the future where together we can achieve greater independence. Loosening environmental regulations or pulling back clean energy investment will not lower energy prices for families. But transforming our economy to run on electric vehicles powered by clean energy with tax credits to help American families winterize their homes and use less energy, that will help. And if we do what we can, it will mean that no one has to worry about the price of gas pump in the future. That'll mean tyrants like Putin won't be able to use fossil fuels as weapons against other nations. And it will make America a world leader, manufacturing and exporting clean energy technologies of the future to countries all around the world. This is the goal we should be racing toward. Over the last 2 weeks, Ukrainian people have inspired the world, and I mean that in a literal sense. They've inspired the world with their bravery, their patriotism, their defiant determination to live free. Putin's war has caused enormous suffering and needless loss of life of women, children, everyone in Ukraine, both Ukraine and, I might add, Russians. Ukrainian leaders, as well as leaders around the world, have repeatedly called for a ceasefire, for humanitarian relief, for real diplomacy. But Putin seems determined to continue on his murderous path, no matter the cost. Putin's now targeting cities and has been targeting cities and civilians, schools, hospitals, apartment buildings. Last week, he attacked the largest nuclear power plant in Europe with an apparent disregard for the potential of triggering a nuclear meltdown. He has already turned 2 million Ukrainians into refugees. Russia may continue to grind out its advance at a horrible price, but this much is already clear. Ukraine will never be a victory for Putin. Putin may be able to take a city, but he'll never be able to hold the country. And if we do not respond to Putin's assault on global peace and stability today, the cost of freedom and to the American people will be even greater tomorrow. So we're going to continue to support the brave Ukrainian people as they fight for their country. And I call on Congress to pass the $12 billion Ukraine assistance package that I have asked them for of late. Ukrainian people are demonstrating by their physical courage that they are not about to just let Putin take what he wants. That's clear. They'll defend their freedom, their democracy, their lives. And we're going to keep providing security assistance, economic assistance, and humanitarian assistance. We're going to support them against tyranny, oppression, violent acts of subjugation. People everywhere, and I think it's maybe even surprised some of you all, people everywhere are speaking up for freedom. When the history of this war is written, Putin's war on Ukraine will have left Russia weaker and the rest of the world stronger. And God bless all those heroes in Ukraine. And now I'm off to Texas. Thank you very, very much. I know there's a lot of I know there's a lot of questions, but there's a lot more that has to be made clear. And I'm going to hold on that until we get more information. Thank you. Appreciate it.
Wow. Look at them. They actually stopped yelling.
Okay, let me
at him.
summarize what the president just said.
Yeah, I'm going to go through that as well. Okay, so there's a lot to unpack, as well as the impact on the economy and what some of the other companies are doing. So we'll go through that my way, not Vonnie's way. All right, so let's see here. Oh, the stupid thing moved. Hold on. Nope, that way. There we go. That's better. Okay. So, yeah, there we go. All right, folks, let's go through what Joe Biden just said and what its impacts could be for the United States economy. What do we think about the Keystone Pipeline? What do we think? Is that ever going to actually come back online, or the potential for that fourth phase? What are, could these high oil prices lead to a recession? What are companies doing in response to what Joe Biden's talking about? Let's break it all down in this video. So first, Joe Biden just came out and actually told us that we are now banning all imports of Russian oil, energy, and natural gas. No more oil will be accepted at our ports. This comes, by the way, at the same time as other European countries are not going as far. However, the United Kingdom is banning Russian oil, but keeping natural gas imports for the time being. Joe Biden says this is in consultation with European allies. However, some of them are more reliant on Russian oil and natural gas than we are. Joe Biden reiterates that we are a net exporter of energy goods, and therefore we can, whereas maybe they can't. Now, he does suggest that this will impact gas prices, that gas prices are going to go up, and that he's doing everything he can do to sort of minimize the pain on Americans while at the same time inflicting further pain on Putin. And of course, he decries the atrocities that are happening in Ukraine due to Putin's war. He says that this is a method of defending freedom, and defending freedom costs money. And we, of course, are going to continue providing defensive weapons to Ukraine, which I always thought that phrase was interesting. Like, as an assault rifle, a defensive rifle. I get what he's saying, obviously. Stinger missiles to defend against air assaults, javelins to defend against invading tanks. I get it. It's kind of a weird phrase. But anyway, Germany, Finland, Netherlands, they're also providing weapons. Going to reiterating again the NATO commitment, the Article 5 commitment that an attack on one would be an attack on all. This is why we're boosting how many troops we have on those NATO borders. But when it comes here to some of the other comments that he made, he mentions that we're going to release about 60 million barrels of oil from our joint oil reserves with other countries, half of those, about 30 million, coming from the United States. Now, it's worth noting that the United States uses about 20 million barrels of oil per day. So really, this seems like a little bit of a rounding error. I hate to say it. It's like 3 days worth of supply. Although the thesis is that maybe that'll help blunt, just if we focus all of that on, let's say, gas prices, maybe that'll help blunt gas prices a little bit. What was it? The European Commission estimated that globally, every dollar increase in the price of gas, we see global GDP drop by about $400 billion per year. So huge impacts that rising oil and gas prices could actually have to consumers in our markets. And that's what we got to talk about next, going beyond what Joe Biden said. Joe Biden, so we're going to talk about that right after I finish this last thing from Biden here. Biden did also mention, he brought up the value of the ruble right now, which it's just sort of worth seeing that. He mentioned that the ruble is now worth less than 1 penny when you try to convert it to the dollar. But it's actually even worse than that. Take a look at this particular chart right here. So this is the last year of how many rubles it takes to get to a dollar here. If you just go to the last month here, you can see how we broke 100 when 100 rubles for $1 when the war started, and it's just kept going up. It's that is the Russian currency has lost more and more money as time has gone on here. So their economy is really going to be reeling here, especially with all of the companies that are now refusing, of course, to do business there. Biden mentioned some of these. We already know a lot of these: Visa, MasterCard, American Express, Apple, Ford, Nike, others like Hermes, H&M, IKEA. Facebook, Twitter, YouTube, a lot of companies really smashing on Russia here for this. But what do we know about companies, and what does Joe Biden say about companies? Well, he talks about these two problems that we have. He believes that number one, that companies are should really be producing more oil, and that right now, instead of producing more oil, they're really more like price gouging us by increasing, by essentially allowing these price increases to happen rather than producing more oil. And it's true. I mean, off the peak of our highest oil rig count, our oil rig count is slowly growing, like the number of online oil rigs that we have, but it's nowhere near the peak that we used to have. I think we're at about half as many oil rigs that are actually online right now. And this morning, we got a couple comments from different CEOs. One is Occidental's CEO, Vicky Hulla. This is, by the way, the company that Warren Buffett just took a 10% stake in. And so there's been a lot of retail flow into energy stocks. In fact, just yesterday, $340 million of retail money went into these oil stocks, probably following the coattails a little bit of Warren Buffett here. But the Occidental CEO mentions that what they're going to do with these extra profits that they're getting from high oil and gas prices is they're going to pay off their debt. It's too complicated right now to expand supply because supply chain issues are too hard. And that makes it really hard for them to grow U.S. oil production. And what they're going to do is they're going to make sure they preserve as much cash as they need to, so that when the oil cycle goes down again and oil prices go down again, they could still send dividends to their shareholders during those down cycles. So in other words, here you go. You've got the CEO of a company that Warren Buffett just took a 10% stake in, disclosing in English that no, we're not going to produce more oil. We're going to send more money to our shareholders. Saudi Aramco's CEO blamed a lot of this oil price disaster, obviously being accelerated by Ukraine, but blamed part of it on the mixed signals we're getting from politicians like Biden. Are we going to ban oil? Are we not going to ban oil? So I thought that was kind of interesting. But what you notice with the CEOs is none of them are saying, oh yeah, we're going to ramp up production. They're actually telling us they're not going to ramp up production, and they're using this to sort of clean up their balance sheets and send more money to shareholders. So I think Biden's calls here for U.S. companies to produce more oil are just falling on deaf ears. He does talk about becoming more energy independent. Loosening regulation will not lower oil prices, he says, which we're going to talk about the Keystone Pipeline in a moment. I definitely want to talk about that. We're going to talk about the economic impacts of this. But Biden uses this as another opportunity to talk about passing things like Build Back Better and providing tax credits for electric vehicles and winterizing homes. He says that'll help. Personally, I hate to say it, but there are a lot of homes that were built post-World War II where people are like, oh, I'm going to put dual-pane windows in. And the house doesn't even have insulation in the walls, which inherently is almost worthless. I mean, it helps a little bit. Don't get me wrong. A wall's obviously thicker than a single pane window. And if you go to a double pane, there's some level of improvement. But a lot of homes are just, they were just built poorly, right, compared to how we build homes today. That is a good thing. But yeah, look, at the same time as we've got these high energy prices, climate change is also a big issue. You know, the IPCC just released a 3,000-page report talking about these profound shifts in the climate, about not just heat waves and hurricanes and storms and flooding. I mean, look at Australia. You had dozens of people killed in floods in Australia. You see the fires in California or whatever. But they also do mention that better building codes for new construction are actually starting to help have an effect, which is very good. So I think one of the things that is worth now thinking about is how could these potential higher oil prices affect the market? And there's some charts that I want to show us here. So this morning, there was a writer over at Bloomberg who put together their thoughts, and I'll give you a summary here. They kind of looked at the past oil shocks, and they noticed something that really has to happen in an oil shock for an oil shock alone to cause a recession. And what they say is it all comes down to energy spending as a percentage of income. This I thought was very interesting. So we'll go ahead and pull this graph up right here. So that is right here. Energy spending as a percentage of income. So the white line here is the household spending on energy as a percentage of income. The blue line, which we can't see right now because I'm in the way, is an estimate because we don't have the official numbers yet. But it's worth looking back just to get sort of a bearing here on this chart here. Look back at the early 80s right here and take a look at this. We spent about 10 to 11% of our wages on energy back during the Paul Volcker era, right? If you look back to the 1990s, as an example, right here, so sort of the turn of the century, 90 to 94-ish, we were spending somewhere around 7 to 9% on energy. And in 2008, during the recession there, we also peaked above 10% again. If we go over here to the estimate of where energy spending is now, you can see it looks like right now we're sitting around potentially, the blue line's just an estimate, around 8%. And the last read from January put us around 6%. Obviously, that 6% is going to go up because since January, oil prices, energy prices have skyrocketed. So 8% is the current estimate. And their argument is that we really need to get back to about this 10% level for energy prices or an energy price shock to actually lead to a recession. Now, oil right now is sitting at about $130 per barrel. The problem is you have these bear case scenarios of potentially oil going up to 150, 175, even potentially as high as $200 per barrel. And actually, let me correct this right now. Right now, Brent is actually at, it's about 132.5 right now is about where Brent's sitting right now. And so there are these fears that, oh my gosh, well, what if we go up to 175 or what if we go to 200? First of all, it's worth knowing that if we just go to 150 per barrel, CPI itself is expected to go up another 2% on top of where we sit right now. So you do have that concern that we have more inflation that we're creating, hopefully a new form of transitory inflation. But if we do get to these higher levels, this 175, 200, yeah, then it's entirely possible that we're going to get to these 10% levels of energy spend as a percentage of income, where if right now we're at 8%, that 10% level could potentially signal an oil-induced recession. So it's possible, but right now, hopefully that's just more FUD and not yet something that we need to be super or hyper concerned about. And if you take a look at the markets didn't really like it while Biden was talking, which was roughly right here, our sort of red lines here, but it seems like we're kind of getting over some of that right now. Now, a little bit more to talk about regarding this, the oil shock. So take a look at this. This is another chart where they show that 10%, right? Spending above 10%. And this is where we highlight the recessions as well. And so this is where they show us essentially what I just described, where the recessions are and how when we hit 10% or near 10%, it could potentially trigger recessions. And those specifically, of course, again, here, and not so much in the early 90s right here because we only hit about 9% and still had a recession. And then, of course, here was your dot-com bubble, which wasn't energy induced at all. Okay. Let's see what else we have here. So this is interesting. Okay, yeah, that was it in terms of charts. So let's keep going here. So the particular author over at Bloomberg did mention, though, that it's most likely the biggest shock here from this oil crisis is going to be felt in Western Europe. And even some parts, of course, of Eastern Europe, but mostly Western Europe because they're super reliant on this Russian oil and natural gas, at least for the time being until we can get more production or pipelines over there, which that brings up a lot of questions about why don't we have that Keystone XL pipeline everybody hears about? And so this is where some data is really useful to talk about. Because we import 7.9% of our oil from Russia, 51.3% comes from Canada, and only about 3% of our crude comes from Russia, 7.9% total, which would include like petrol and diesel and gas and stuff like that. Average price of gas right now is over $4 nationwide. In California, you're seeing some gas stations charge $6, $7 already per gallon of gas, which is pretty wild. But you're already seeing prices that high in Europe. And there's a lot of talk about the Keystone Pipeline, the XL pipeline. So a quick note about what you want to know regarding the Keystone is that there are four phases of the Keystone Pipeline. There's phase 1, 2, and 3A. Those already exist. Actually, and 3B. So you already got 1, 2, and 3, A and B. Those phases completed. And the fourth phase is the phase that got canceled by Joe Biden. So on January 21st, 2021, which was inauguration time, day after, his first day in office, right? We get the Keystone Pipeline's permit revoked because the government wasn't building this. This was a private enterprise that was spending the money to pay for the pipeline. Shareholders were paying for this pipeline to be built. And the expectation was that this was going to create 28,000 construction jobs. Originally, Obama killed it and instead called for local development and local production because the Keystone Pipeline brings oil from Alberta, Canada, to about Nebraska, and then we pump it all the way down to the Gulf Coast where we have a lot of refineries. Well, so Obama killed it in 2016. Donald Trump actually authorized it because he wanted to create those 28,000 jobs, even though they'd be temporary jobs. It would still take a couple of years. And he authorized American steel as a condition of approving the permit. So the pipeline was going to be built with American steel. And by the time Biden killed it, only 8% of the pipeline had been built. And there are arguments that on sort of both sides here that, hey, well, we should have the Keystone Pipeline because that'll help us have more oil. And if we have more oil, then prices would go down. And sort of a note here is Federal Reserve Chairperson Jerome Powell was just asked about this. He was asked, hey, like, if we had the Keystone Pipeline, wouldn't prices come down? And his response was, well, I don't like to comment on politics, but yeah, look, more supply equals lower prices, right? So, Powell's pretty obvious about it. He's pretty blunt about it, I should say, that like, yeah, if we had the pipeline, prices would be lower. But the problem is we don't, and it would probably take 1 to 2 years to make it. Some folks say that the pipeline wouldn't make a difference anyway because, and this is one argument, because right now we just use trains to bring in oil from Canada. Personally, I think that's a bad argument because we have a ton of shipping and logistic issues right now. Another argument that you see is that the Keystone Pipeline would have a little impact on oil and gas prices because oil and gas prices are largely geopolitical based. This might be true, but I personally believe if we had the Keystone Pipeline, instead of starting at, let's say, $3.50 for gas and now going to, let's say, over $4 per gas, maybe we would have been at, say, $3, and then we'd see from $3 to $3.50, right? So to me, there's no way somebody could really argue that the Keystone Pipeline wouldn't have helped us in this situation. But unfortunately, it's a little bit Monday morning quarterbacking because, I mean, who could have expected that Putin would have gone crazy here? There is, though, also a climate cost here, and that's because the oil that comes from the Alberta region is tar sands oil, and it's a lot thicker. It's a lot more carbon intensive to process. So the argument here then is, well, we don't want to affect climate change, so maybe we shouldn't be using that oil anyway, since it takes so much more carbon to process than oil that we could get here from fracking or other purposes. I'll tell you, California, by the way, has some of the cleanest oil that exists. But California is like, oh, let's shut down all the oil refineries. It's like, come on, we got some of the cleanest freaking oil here. It's just exhausting. But anyway, so obviously this is where you get the arguments that, oh, well, natural gas costs around 4 to 7 cents. Solar and wind also cost around 4 to 7 cents. So why don't we use solar and wind? Well, we don't use solar and wind as much. Why? Because batteries cost a lot. Batteries add about 17 to 18 cents per kilowatt hour. Those measures there in cents were per kilowatt hour to the cost of solar and wind. So it's just like 4 times as expensive to use and rely on solar and wind alone. And so this is where you're really getting sort of the arguments here. On one hand, you've got the climate change advocates who are like, we really need to have green energy. But the argument is it's too expensive right now. We're getting in that direction. We're closer than we've ever been before to actually being more, climate sustainable or energy sustainable. But it's too expensive right now to fully transition over to that. Like, for example, if we had to make gasoline, let's say we could make gasoline from solar and wind, just as an argument, well, we would probably be talking about gas costing us $16 a gallon. That obviously wouldn't make sense because that would just bankrupt people. That would cause a real recession, just like we saw in the charts, that once we get to that 10% of energy spend, we could be seeing an oil-induced recession. Not there yet, still at 8%, but it's something to really keep an eye on. And so, yeah, would the Keystone Pipeline have helped? Of course. Would it help now? Probably too little, too late. I mean, maybe the idea of, let's say, if Biden came out and said, all right, we're approving the pipeline now, maybe the idea of that would help oil futures settle down a little bit. But unlikely because, see, there's something to know about oil futures. And I'm not the best expert at this, but I'm going to try my best. Oil futures are in the state of what's called backwardation right now. Backwardation is where the oil futures are pricing in oil at, let's say, $130 per barrel for, let's say, May, but the actual market believes that oil deliveries in May might only cost $110. So you're actually paying more for those futures now due to speculation or manipulation or whatever than they're actually expected to be worth at that time. The opposite is contango. So this gives you a full breakdown here of what Biden said, what companies are doing, and the Keystone Pipeline. And so the bottom line here right now is that this is expected to affect Europe more. We do expect uncertainty to last amongst how oil affects our stock market and individual stocks. And we know that these oil companies are not expected to increase production, and we don't expect the Keystone Pipeline to come around anytime at all, certainly under a Biden administration. And so we don't believe that production is going to get increased. And so maybe there's a reason to speculate on oil stocks, which a lot of people are doing. Even Warren Buffett getting into OXY is the ticker symbol there that he took a 10% position in. And you will see later today that the House of Representatives will be voting on a bill that will be somewhat similar to potentially banning oil, but I think they still have to reconcile that with what Joe Biden's doing. And whatever the House passes is probably not going to mean anything. It's generally what the Senate passes that matters, since that's where you've got Manchin who's saying, yes, ban Russian oil, and we need to increase local production of oil. So there you go. That gives you a full summary of what Joe Biden said and what the heck is happening with oil. All right. That's a long one. So that's done. Now, let's see here. Let's go ahead and take a look at what CNBC is saying. And then I'm going to take a sip of this coffee. And I'm going to quickly change the title a little bit too here. Back to, since Biden's not speaking anymore.
Kind of too early to tell.
Jim McKelvey, thank you. Talk to you again soon.
All right.
One more thing this morning, and that is the impact of the Ukraine crisis on Europe, and specifically cloud companies doing business there. Our Frank Collins watching that. Hey, Frank.
Hey there, Carl. MongoDB earnings, and more importantly, its guidance, could be a real inflection point for cloud and enterprise software. The Russia-Ukraine conflict has IT leaders, especially in Europe, really rethinking workload management. About 44% globally is now in the cloud, but Europe's really lagged with less than a third. The security and utility of on-premise software now under a lot more scrutiny. It could be an opportunity for market share gain for companies fighting for that last 15% of market share left after AWS and Azure. MongoDB gets about 30% of its revenue from EMEA. That's up 50% year over year. Oracle gets more than a quarter of revenue from EMEA. SAP more than 44%. They saw that rise 23% last quarter. ServiceNow nearly a quarter and has seen double-digit increases in that area since the pandemic. Cybersecurity firm Mandiant says cyber attacks and hacks on Western companies and institutions, they're just becoming increasingly likely. Google's acquisition of Mandiant today also expected to create a new landscape for cloud and cybersecurity combinations. Companies like Rapid7 and SailPoint likely to be acquired. Carl, that's the latest. Back over to you.
Frank, appreciate that. We are not far from the highs of the session, although the Dow was briefly green this morning. We're just south of 4,200. Let's get to the judge in the half.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, markets on edge, stocks trying to rebound from their worst day in more than a year. Is there more downside ahead? Are we at or near a buying opportunity? Those two key questions answered today by the Investment Committee. Joining me on this International Women's...
All right, we'll come back to this. I do quickly want to mention that... There we go. This video is brought to you by FTX. Learn more about FTX, a link down below where you can incorporate trading views, trading indicators with your cryptocurrency trading at FTX and get free crypto via the link down below when you sign up. So also do take a look here at Bitcoin sitting at about 38.3 right now. Little bit of this is a little bit of a downtrend here on the 5-minute chart. You can sort of see that here on well, I mean, it's obvious, but a little bit of a downtrend here is kind of how the market's been reacting as well. You see that downtrend here intraday. It looks like QQQ rather, the NASDAQ 100 down about 0.6. You got Tesla. Oh my gosh, Tesla went positive. Holy moly. I really think that we saw Tesla negative 2% this morning, right? But I really think Tesla is just, I can't stop buying this stock. I'm sorry. Oh. I don't know. Maybe I'm whipped. It's just so amazing. But anyway, let's listen in over here to see what they're complaining about.
Us all here for International Women's Day would say that this is as bad as it might get. But I would submit that 2020 in March, when we were looking at the beginning of a pandemic that could destroy economies, the educational system, society, and the fabric of our life, was scarier than what we're envisioning right this minute. And so we think that, yes, there are opportunities here of very solid companies that are selling at more attractive prices than they have in years, both on the growth side and the value side, the high multiple stocks and low multiple stocks. So this is a time that we would not sort of panic and sell, but stay committed to what we believe in, perhaps upgrade our portfolio.
Holy smokes, look at Enphase. Oh my gosh. Holy moly. What happened here? It's just, this is the whole green energy world is just blowing up. This is great. Hold on a sec. I gotta look. I'm pretty sure I have a sold put on Enphase. This is insane. Oh, I do. Yeah. Ooh, my sold. It's a small one, but my sold put's up about 20%. Ooh, that's tempting. That is great. You know what? I'm gonna ring the bell on that one. Thank you. Cha-ching. All right. Wow, that's crazy. I still have the shares, but that is insane. I mean, look at this. It's Enphase, MP Material exploding. Macy's all of a sudden exploding. ChargePoint. Jeez, man. ChargePoint came from $11 up to $17. Yeah, I mean, it makes so much sense to me that just the green energy ones are going to be like where it's at. Enphase being absolutely my favorite, but I'm sad now. It's so expensive. Oh, well.
Down the portfolio and I look at the ability to reallocate to different names in the portfolio, we're certainly looking for potential exit points. For instance, we trimmed Accenture earlier this year. We had a significant overweight. That stock has underperformed and we reallocated the proceeds into some of our higher conviction names. But be careful. Over the next couple of weeks, we are going to continue to see this pressure. The Fed hasn't moved yet. And so I do think that, between now and the end of the month, there's opportunities to reallocate. But selling indiscriminately some of these high quality names in your portfolio might lend itself to some less beneficial outcomes than if you waited a few weeks and got past a couple of these catalysts.
Yeah, I look at
I don't know
Stephanie
about
Link
that.
and I say, well, Steph's not running for the hills.
Personally, I think generally the time to buy is before the catalysts are over. Wow, I just looked at my trade history. So I bought another 5,000 shares of Enphase at the end of last week. I now, based on before today's pricing, I had about $2.4 million in Enphase. So I will gladly take a 13% day on that position. That is freaking dope. Oh, and shout out to those of you, by the way, who just joined using the coupon. I haven't even revealed why the coupon is what it is yet. But shout out to those of you who just joined Stocks and Psychology of Money. Sean, Carl, Paul, welcome. Those of you just joining here in the last little bit. That's awesome. Welcome aboard. So, okay, well, let's keep listening here.
And lower costs, that's operating leverage. And that's what I look for when I look for, especially on the industrial side of things. Also, intermodal, they're gaining market share. They and Burlington Northern have a 43% share in intermodal, and that's been strong. It will get stronger in the second half of the year. And I expect the second half of the year to see a recovery in the auto segment as well. So I think this is a little less beta than my other industrials, and I prefer that at this point, but fundamentals are strong.
You bought more Apple. You bought more Meta, and you bought more J&J, so it's not limited to just UNP.
No, I mean, an Apple has been a defensive buy for me. I started buying that the day, adding to it the day after Thanksgiving, as you know, when it fell and the market fell. I just think this is a defensive play. It's not exactly cheap at 25 times earnings, but I like the ecosystem. We all know the story very well, but I do want to own it, more of it, into the spring when I think they're going to announce capital allocation of something like $70 to $90 billion buyback. I think they can buy back their stock 2 to 3% of the shares outstanding over the next 3 years, and that is a nice defensive play.
So, Jenny, why do you remain extremely cautious on the market?
She, by the way, played the Matterport swing. She was buying it like in the 25 to 30s on the way up and then sold it on the way down.
I don't know if they'll reduce their balance sheet at the same rate that they were going to 3 weeks ago, but they might. Interest rates are rising. Geopolitically, things are really hard. We've had a spike in commodity prices, which they may come down or they may sustain for a long time. And we have valuations that aren't cheap yet. They're not extreme. I would have said around 22 times valuations were extreme, so now I'm feeling a little better, but I would still say valuations are stretched. This is not a great backdrop for a really terrific, exciting bull market. It's just not. And I think it's messy, and I think it's going to be hard. So I used the word when I was on last week, and I think it's the right word to use. It's treacherous out there, and it will be treacherous for a while.
You know, JP Morgan this morning mentioned to their there was a report that came out that JPM says their clients are experiencing extreme stress in the market right now. You don't say.
Are we at a bottom, and is it time to buy? I think, yeah, it's time to buy, but don't need to buy broadly. But I don't know that we're at a bottom either. And I think that those things are going to move asynchronously. So there will be stocks all along that you can pick off. As you know, a couple weeks ago, I bought Foot Locker and 3M. Great.
Oh.
The market pulled back and I was able to buy each of those. But I'm not broadly just piling in and saying, hey, the whole market's down. We can add to everything in the portfolio. So this is a time just to be cautious, sit back, be patient. You don't need to throw all your cash in. You can just breathe. One thing that's important, though, is in the very long term, I will always be bullish on equities. I will always believe that over the long term, the equity market will give you a positive return.
Well,
so if you're fully invested, you don't also need to cash out right now. You can just be patient.
Bryn, somebody's buying because we're positive across the board, and we're at the highs of the day now for stocks. So we've had a little bit of a rebound since we started in the last 8, 9 or so minutes. Now, to the question of, do we have more downside ahead? Are we at a place where we can finally feel comfortable buying some stocks like Stephanie Link is, and some of the others may be as well? There are some notes regarding that today. Steve Sutmeyer, Bank of America, no true capitulation yet. Hasn't seen it. He says that favors more downside. Jonathan Krinsky.
Oh, that's interesting. And see, that's how I've said that before as well on the channel, that like, I don't know that we've really hit that like real fear moment where just like everybody's like, oh my gosh.
Some pretty sizable downdrafts. Are we close? Does it feel like we're close?
I think you actually do get that. I think we actually have had that 90% downtime every time, except when we had a sell-off in either 98 or 99. So I do think that technicals trump multiples right now. And what I mean by that, and we'll, obviously if we hear from Jonathan later, but I think technical analysis to look at where the support level is for the S&P right now, I think it's around 4,000. We might be closer to 300 for the Qs, which would be representative of the NASDAQ 100. And I own, by the way. And so versus multiples. And when you look historically at current multiples and then project subsequent one-year returns, there's almost no correlation between that. So I'm not focused on whether the multiples are 19, 18, or 17, because it really has no predictive power over the next 1 year. I do think technicals, though, gives you a tradable entry point. And it seems, because we haven't had those big sell-offs, that big down day, that we could have more to come. I do think that midterm and looking out later on this year, where I have pause is that in Europe, the probabilities of Europe going into a recession have definitely ramped up.
Yeah.
And as the US has plenty of supply of natural gas, right now in Europe, Scott, natural gas is 13 times higher than in the US. Food prices globally are going higher, which hits the most vulnerable.
This, by the way, is what one of the last individual just mentioned as well, is that, or the Bloomberg author this morning, is that really the energy crisis is probably going to be most acute in Europe. Not so much here, though obviously things are going to cost more here.
Compared to the 80s as a percent of U.S. consumers' budget isn't as high as it was. I do think that the market, the consumer is more vulnerable, and whether we have we'll call it a sentiment recession with consumers or an actual recession, I think that sentiment recession where people just don't feel like spending because they feel very uncomfortable.
Okay.
And
I like that phrase a lot. The sentiment recession. That's really interesting, because this is what we've been talking about as well, with just consumer stocks potentially getting hit more that as people pull back their spending. That'll be interesting.
It closed yesterday at 50,000. Last night, nickel was at 100,000. Why is that important? That goes into lithium batteries. That goes into all sorts of green technologies. So then how does that affect Tesla, GM, Ford? And so there's so much to actually to discern through.
Yeah, but Tesla's trying to walk away from using those nickel batteries as much. I wonder how much nickel goes in the iron phosphate batteries. I'm going to look that up.
SWIFT system, et cetera. So I would still remain cautious.
All right. I just want to show you what's happening in the stock market as we're having this conversation. You could get a glimpse of it from the S&P 500 as Bryn was speaking there. And there's our wall shot. We are accelerating the gains that we did not have until about 7 minutes ago, 6-7 minutes or so. Dow's good for 230. Now, S&P's up, NASDAQ's up. Crude, yes, of course, it's up. That seems to be the trend, certainly of late. And there's the 10-year note yield, 185. So we have a bit of a rise in yields today. It is an interesting move in stocks. We'll keep our eyes there, see what exactly, if anything, has caused this reversal that we've seen in the last 7 to 8 minutes. There's your 10-year. Steph, Bryn said something that really caught my attention. This whole conversation about multiples having come down, and what was 21 times is now 18 and a half times, and trying to figure out exactly what the correct multiple on the market is. And the comment that she made about, and I wrote it down, that the multiples don't have predictive power where stocks are going to be. Of course they don't, but earnings do. And earnings expectations are coming down, right? Earnings revisions, negative earnings revision.
Oh, the Stephanie Link there disagrees. I want to hear her disagreement. See her there at the top mid? She kind of like, Like
certain stocks relative to others, those may come down too, right? Margins are going to come down. Operating leverage is going to come down. Earnings are going to come down. I mean, they have to. Isn't that an impact on stocks?
Well, if they come down, if margins come down, for sure.
Well, how can they not?
But people have been talking about margins peaking for the last 5 years, and the companies have found ways to restructure. They've found ways to cut costs. They have found ways to increase pricing. And those companies that have pricing power, which, by the way, Union Pacific does, they had 7.7% ex-fuel in yields last quarter. So you have to find certain companies that do have all of these characteristics. Look, I'm not saying that the volatility is over and that we can't go down. In fact, it's very possible we can go down. We're at 18.17 times for the S&P 500. The long-term average is 15 to 17 times. And I would argue after the fourth quarter, earnings revisions actually went higher. Do they have to come down now because of Russia and Ukraine and inflation? Possibly, probably, but certain industries are going to get hit harder than others. And if you look at some of these reopened stocks, Scott, they have been hammered. And I went through like Expedia, and I went through Wynn, and I went through Hilton, all which had really great earnings. They rose guidance. And I looked at like Russia exposure, Ukraine exposure, European exposure. It's no more than 6% of their total revenues and much less in terms of operating profits. So while I understand that we could see a contagion if Europe goes into a recession, we certainly are going to see slower growth. We were always going to see slower growth this year versus last year. But I still think there's enough momentum in the economy from all the fiscal and monetary that we did all over the last 3 years. And I think it's very important. To me, I felt like the last couple of days, the markets were very emotional. People have forgotten that the last 3 years, have been really very special. The S&P 500 was up 31.5% last year. The year before that, 18.4%. The year before that, 28.7%. That's not normal. That was very Fed-induced, of course. The long-term average is 10% total return. So there's mean reversion happening. There's uncertainty here for sure. That's why multiples have come down. They could go down further, but I am looking at companies with all the characteristics that I mentioned earlier, and absolutely free cash flow as well. And that's why I am buying some names, because I'm trying to take the longer term approach.
So let me.
Yeah, I mean, I don't disagree with her. I do think there's a good shot you see some margin compression if we do get sort of the Cathy Wood buildup of inventory. But something I did look up the answer, by the way. So for the you remember how the one person was saying, oh, lithium, nickel prices are going up. That could hurt Tesla or companies like that. So Tesla uses lithium iron phosphate batteries in their normal and standard range vehicles, but uses nickel, cobalt, aluminum batteries in their longer range vehicles. So you're probably going to see more of a muted impact at Tesla if probably, I would say, I'm going to guess here, I'm just totally guessing, about 70% of their cars are probably not using nickel. So that would be a muted impact compared to, let's say, and I don't know this would be another thing to research, does, let's say, BMW use nickel in every single one of their EV batteries, right? I don't know. We'll see. But I do want to take a brief check at the market here, because some of these things are just absolutely rocketing right now. I mean, look at this. You got a firm back 7% today from its lows this morning. It went all the way down to like 31. You've got Dave & Buster's was down. Gosh, how low did we go this morning on Dave & Buster's? $33. I'm waiting for like $30 on that one. I keep waiting for that. Trade Desk went down to about 63. It was about $61 this morning. This one's still red, Trade Desk. I think Rocket Mortgage is down today because Better just laid off another, like, was it 4,000 employees? Hold on, I can tell you. They just laid off another 3,000 more employees just laid off at Rocket. I'm sorry, not at Rocket, at Better Mortgage. Here's the SPY. Look, look at how it broke right through. I mean, no resistance at all on that 420 line. Really impressive. So then we've got QQQ now up. Look at this skyrocket here. My goodness, it's incredible. Now, don't feel like you got left behind. It's just, intraday madness. We see this kind of stuff all the time. NVIDIA, actually, I mean, look at this. We were at that downtrend at like 206 this morning. Goog under 2,600 and still 218, by the way, still not a terrible price. Where's Tesla? Oh, wow. Tesla's up about 4% right now. Look at this insane swing that we had. We were at 782 this morning. Wow. What a wild move here in this market. I personally, I hate chasing this sort of stuff, like when I'm looking to buy. But anyway, it's really cool once you've already owned it, or once you already own it. I mean, even Enphase here got stuck. Look at this. This is a line that we've had drawn for probably, I'd say, a year now on Enphase, and look at its skyrocket from over here, 155-ish in the pre-market. We didn't quite get to that line here, but look at the skyrocket, and the skyrocket stops and takes a little break right here at 176, which is where we have a resistance line, and you see it get tested here once, twice, 3 times, 4 times, all here on the minute chart. And we can even go to the 5-minute chart and probably see it as well. Yeah, there you go. You see the multiple tests that we're getting right here. And then it just breaks through. Really, really bullish. It makes total sense to me that the energy companies are doing so well, specifically the renewable energy sector. Although Lithium Americas still on a rough downtrend here, even though it's up 10% right now, still got that rough downtrend. You've got MP Material. It's been doing decently. Yeah, I mean, compared to all the other stocks, like if there's one thing you wanted to just hodl through the last 2 months, MP has not been doing terribly. And then so somebody asked me, please give some guidance for the bulls and bears. Yeah, so I mean, many of you know I'm about 65% in stocks. I only have a short on treasury bonds. I have no shorts on actual equities. And Brent's back at 131. Yeah, okay, the 10 year is at about 1.87. So, and that's because I have a short on that because I think the 10-year yield's going to go to like 2.25%, 2.5%, and then so that'll give me some dollar hollis from that short. We'll see. That's going to take a little while to play out though. But yeah, I mean, these energy plays, if you could get a sale on some of these stocks, I don't think it's a terrible idea to try to pick them up. Again, you know, you go sort of, you look for those sudden drawdowns on some of these, like even what we saw this morning, and I said it this morning in this video, you know, when you get those sudden spikes down, those are oftentimes just buying opportunities, those little wicks, especially the big fear ones that we've had. Now, you don't want to go all in because, I mean, look, we're, you know, January 24th, or on Tesla here, January 24th was a low, January 28th, my birthday was a low, February 24th was a low. It's entirely possible that we're going to test some of these lower numbers again. So that's why I'm still keeping around some of my cash. Oh, wow, $200. Thank you so much. I appreciate that. I didn't have to do that. It's really cool. Welcome, Joseph. So yeah, like somebody here says, end phase will fall back. Yeah, it's entirely possible. Is this a convictionless rally? I mean, maybe. You know, I never like to trust any of the rallies that we're seeing these days because they just always get hammered. And the reason for that is you end up having these institutions that just end up selling out on us. Those dang institutions. But it's true. I mean, you see that over and over again. So, all right, let's see here. Okay. One sec. Okay, let's listen in here for a moment.
9%, Delta, Southwest, JetBlue. You could throw up some hotel names. For certain, you're going to see similar moves there. As again, that headline is being widely passed around now as a principal reason for the move you're seeing in not only these individual names, but the broader indices that, according to AFP, Agence France Presse, that Ukraine says it's no longer insisting on NATO membership. We're trying to do our own confirmation, obviously, of that report, but it appears to be having a dramatic impact on the performance of the stock market. 1223 in the East. You have the Dow Jones Industrial Average up better than 300 points. Again, we were negative some 23 minutes ago when we came on the air, and you're seeing a dramatic reaction in stocks like Delta Airlines up 7%. There's JetBlue up nearly 7% as well. And Jenny, you know, Kerry said it. If you can get this issue at least in the back burner somewhat, you're back to what we know. We're back to what we know. The Fed is going to raise interest rates. Well, we know that the Fed, we know what the Fed is going to do. This removes a tremendous amount of unknown in the market. Maybe then we can figure where we think energy prices are going to go, and that is lower. We can at least figure that the conflict is going to be less than what it is today. And then we have to just deal with it.
I don't know, not necessarily.
Front and center, and not this.
You know, if Putin lashes out and we start getting more indiscriminate selling, or shelling, not selling, it's not going to be good.
Where we know. So first, a fun little fact, which is, as of yesterday, the market was actually only down 0.5% between February 24th when the conflict started, or maybe the evening of February 23rd, and yesterday. And so what that says to me is the market's been trying to figure this out all along. But what I think is, let's say we have some miracle cure today and the fighting just stops in Russia, Ukraine. We are still in a very messy situation where the 11th largest economy in the world is totally offline. And we have Ukraine that supplies 8.5% of world grain that's got just bombed out, and their infrastructure is terrible. And we don't know how it's going to work with, you know, with Russia oil coming back on, if it ever does, with banking.
I'm going to change it. It's boring. Sorry.
Would widen if Poland does that, if Poland gets some of these weapons, these planes, these jets, and delivers them or gets them to Ukraine.
I think it is absurd that that Russia should take that position. They're the ones who invaded a sovereign country. You remember during the Georgian conflict, Neil, we were, as the United States, sending in military assistance, sending in food and supplies with our own aircraft. And that was, I guess, as similar to this situation as you can find. And Russia, in the meantime, was taking over a couple of the provinces in Georgia. So we've done this before, although much more aggressively than we're doing now. All we're talking about is Poland making a decision, which they have the sovereign right to do, to provide more weapons to Ukraine. They're doing it already. This would just be another kind of weapon.
So you don't think Russia would make good on that threat? I mean, you'd be going after a NATO country. There's great risk in that, but you don't think that this could widen the conflict race?
Neil, Vladimir Putin has already said that the sanctions are an act of war. I mean, he has made these proclamations again and again on everything that's happening. Stingers, he has said, and javelins are a problem. So, I mean, I think we've got to stop worrying about too much what makes Vladimir Putin mad and start defending Ukraine. It is urgent. It's desperate. Once again, last night they're shelling innocent civilians. And I saw the kids being evacuated from the Kyiv Children's Hospital. They have bombed schools and they have bombed.
Market finally pausing a little bit on this insane rally. Look at that. I mean, this is obviously the minute chart here, but you finally get a little bit of U-turn here. Let's go back to Portman.
The Ukrainians, what they need to defend themselves, and what they tell me is they want the airplanes. The airplanes could be very helpful right now because air power obviously is a huge determinant of what happens in the next couple of weeks here. So the United States position, I think, is that we want to do it, but do it maybe over a long period of time. We don't have a long period of time here. We need to get these planes into the hands of the Ukrainian pilots who know how to fly them, the MiGs, and help them to be able to defend themselves.
All right, Senator, thank you very, very much. Very busy news day, to put it mildly. Thank you. Always good seeing you. Rob Portman of the beautiful state of Ohio. By the way, it didn't take very long, but Vladimir Putin had already pre-responded to this banning Russian oil with a finger directed at Europe, more specifically Germany, more specifically after that by saying, forget about just banning our oil. We're going to ban it from you like now. He's talking about, liquid natural gas. He's also talking about oil. But by doing that, he's sending a signal. I can one-up you and hurt you now more than you want to hurt me later. So the indication.
Dude, it's so crazy seeing this sort of negotiation happening here. But that would be very interesting if Putin ends up banning or restricting access to Russian oil and natural gas of the European countries as sort of a retaliation for the U.S. Signing this executive order on energy.
Putting up the fight. How's the reaction there?
Well, one of the towns, Neil, that is very much in the fight is Mykolaiv. It is a shipbuilding town that is right in between Kherson and Odessa. Odessa is where it seems the Russian army is focused. The mayor of that town is Alexander Sankovich. He says the Russians now have them surrounded on 3 sides. The irony is that this was a Russian-speaking, Russian-friendly town until the bombardment started. Some 61 structures have been destroyed or damaged there. Civilians are injured. Civilians have been killed there. He says that the people there now are willing to fight to the last bullet to be certain that the Russian army doesn't just move through them en route to Odessa.
To have Odessa, and we are let's say, the wall between Kherson and Odessa.
Towns like Sumy, Mariupol, Kharkiv, that's where the refugees are fleeing from right now. Most of them come here west. We found an artist studio here in the capital city of, not the capital city, but the city of Lviv out to the west, that has been converted into refugee shelter. We found a woman there who lived out in...
it's just so sad seeing this with just the children and really just families just getting destroyed over this. I just hope this crap ends soon. Anyway, I do want to mention that the 10-2 yield curve has steepened today. So that's a little bit of an indication that we hit at least maybe not the bottom, but a bottom yesterday. So the 10-2 was almost at 20 yesterday. It is currently at a 27 spread. Obviously, it's been going straight down. It's been plummeting. From the beginning of the year, we were at 80 to 90. Then we fell to 60 at the beginning of February, 40 at the beginning of March. Now we're at 27. So still substantially lower on that yield curve. And I believe our break evens are still skyrocketing. Let me look at the 5-year break even here. So the 5-year break even, right now sits at, oh my gosh, yeah, it's up even higher. The 5-year break even right now is sitting at, as I say, it just ticked up even more, 3.48. Yeah, that is the highest level that we've seen. I'm just going to go max on the chart here, and I'll tell you. We are the highest level we have been in since they charted this back in 2001. Yikes. So the concern is that going to translate to higher inflation expectations? That's where the big issue comes in. Inflation expectations. All right. Now that they're going to commercial, I think now would be a good time to review that survey and just kind of do some bottom lines on that survey, because I thought it was very interesting. So we're going to do that. And then we'll go back to see what's going on in the market. So if you saw me initially break this down earlier, some of this is going to be slightly redundant, but I want to, that's why I'm streaming longer, because we're kind of making vids as we go today, which is fun. Okay, so where do we want to start? Does anybody, I wanted to, let me look up this university really quickly, because the university that did this was the Quinnipiac University. It's from Connecticut. I don't even know how to say that right. That's a private college, private university. I wonder how many students they actually have. They have an endowment of 535 mil, and students about 9,000. Okay, 9,000. Okay, all right. It's about a fourth the size of UCLA, but it's still pretty big. Okay, interesting. Anyway. Don't forget the thumbnails. That's right. Yeah. Okay, so let's hit this survey here. And then we'll go back to the sticks. Okay, here we go. Hey everyone, me Kevin here. So we've got to respond to this survey that was put together by this university that's got about just under 10,000 students enrolled right now in Connecticut. They did this survey, and it had this really fascinating section here on page 8. Take a look at this. They ask, if you were in the same position as Ukrainians now, do you think you would stay and fight or leave the country? This is asking Americans this. And the answer was kind of remarkable. First of all, the older folks are clearly the baddies in America, because 66% of 50 to 64-year-olds said they would stay and fight, whereas only 45% of 18 to 34-year-olds, those millennials, said that they would stay and fight. And take a look at this difference right here. 68% of Republicans would stay and fight, and only 40% of Democrats would stay and fight. That's a huge difference in politics. But not only is there a huge difference in politics, and obviously every survey comes with biases and issues. This was a sample of just under 1,400 people, so they've got a plus or minus sort of error range of, I believe, 2.9%, they said. So who knows about the biases in these? So I always want to alert that there could be biases in these surveys. But take a look at this over here, folks. Of those who would leave the country, it says here, or stay and fight. So the top line here is stay and fight. Take a look at the racial disparity. 57% of whites would stay and fight. 61% of blacks would 61% of Hispanics would stay and fight, and only 38% of blacks would stay and fight. And so a question there that has come up from some is there a potential mistrust of our government institutions, or is this survey just nonsense? Who knows? Could also be a combination of both. Very little difference in those who would stay and fight between college degrees. 55% would stay and fight for a 4-year degree, whereas 58% would stay and fight if they did not have a 4-year degree. The men and women difference does make sense. This is probably, I'm going to guess, at least today, based on childcare. 40% of women would stay and fight, 70% of men would stay and fight. And overall, those who would leave the country, this I thought was really incredible as well, this disparity right here. So in terms of those who would leave the country, pop on right, let's pick a different color here. There we go. In terms of those who would leave the country, 52% of Democrats would just pick up and bail. and 25% of Republicans would pick up and bail. So pretty remarkable survey here. There's some other things to note in this survey as well. Here is the headline of the survey. It does say that about 71% of Americans support banning Russian oil, even if it means higher gas prices. And this is something that Joe Biden did today. It does say that Joe Biden's handling of the Ukraine crisis, it was met with about a 42% approval rating from individuals, with 45% disapproving. But when it comes to Biden's overall job, only 38% approve, with 51% disapproving. And then, of course, the difference there are abstentions when you add up those numbers. So quite interesting. Then you've got here broad support for U.S. military response, 79% support. If Putin goes beyond Ukraine and attacks a NATO country, 79% supporting a U.S. military response. And we've got 82% of Democrats supporting a ban of Russian oil, with 66% of Republicans supporting a ban on Russian oil. 2/3 have this was ridiculous to me when I first read it. 2/3 of Americans, 64%, have a favorable opinion of Zelensky, but 29% never heard of him. Some people just aren't paying attention at all. Half of Americans compare Putin to Adolf Hitler, and 74% of Americans do not believe that Russian people even know what's happening or fully know what's happening in Ukraine. If I didn't mention it, 60% of Americans think that Putin is mentally unstable. This was an interesting one to me. I think this guy is like ridiculously calculated, and he knows exactly what he's doing. I think that the atrocities he's committing it make him seem insane, because they are insane. Like what he's doing, his actions are insane, but I think he knows exactly what he's doing. Anyway, I thought this was a crazy poll. Wanted to break that down for you. Thanks so much for watching this poll summary. If you need life insurance, make sure to get life insurance in as little as 5 minutes by going to metkevin.com/life. Okay, cool. Let's go back to the markets here. So, okay, and as somebody recommended, we got to do the quick little, I don't know, shocked poll face, I suppose. We'll do that really quick. Just do something like this. There we go. There we go. One of those will probably work, right? Okay, let's go back to the markets. So back to the SPY. SPY's back on its move. Check that out. Killing it. Killing it. We're almost back to the that's a 23% fib, right? Or did I add this as a separate line? I may have added this as a separate line. Where's our 23% fib? Oh, here's our 23% is actually over at 435. No, this is just another temporary support that we've added. We'll see if we can end up making it to that. I mean, the market has just been on this wild ride today. Enphase just dropped a little bit. Lucid up 10%. Look at Enphase sitting on that support line now. Matterport up 7%. Dave & Buster's coming back up. Out of all the recovery stocks, I tell you, Dave & Buster's is the one that I want to buy, but I don't. I will say, though, I am pissed. My local Dave & Buster's took away one of my clown machines, and I'm really upset because I love downing the clowns. I'm a good clown downer. Okay, let's listen in over here.
10 years. But even with all of that, with the leases that the industry had last year at this time, close to 40,000, are now whittled down to 9,000. We thought you'd want to know that. That's something called a fact. All right, let's go to Kenny Bulgari right now, the Sightstone Wealth Chief Market Strategist. Kenny, why are the markets reacting the way they are right now? I know it's only a snapshot, only a moment. All this could be reversed, as you've often reminded me. But what's going on here?
I think there's a couple of things. I think the market got into a really short-term oversold position. Yesterday's action, closing lows on the day. We tested lower again this morning. The market feels a little bit exhausted from the sell side. And then I will say Biden came out. Now, while he's banning Russian oil and natural gas, and it's going to cause prices to go higher, there's almost a sense, I think, of patriotism where the country, because everyone's behind Ukraine, the world is behind Ukraine and against Russia, that there's almost a sense of patriotism like, okay, we can do this. Yes, is it going to hurt a little bit? Like you said, it is. It's already hurting now, but if we're going to stand up and we're going to do what's right, maybe it is the right thing to do, and maybe he will ease back a little bit on his thoughts about U.S. production. Look, I think you said it in one of your earlier guests today.
Biden easing back?
Percent of Democrats that are screaming and yelling and pounding the table to want the U.S. to pump more oil, which is very interesting considering, they're part of the reason we stopped, right?
Yeah, no, you're right about that. I'm wondering too, and you alluded to it, Kenny, and this is what I'm hearing as well, that maybe given the fact, as some interpreted, the president blinked on this no Russian oil. And he got a lot of pressure from fellow Democrats, including Nancy Pelosi. Now's not the time to be, that strong on this. Let's be open to taking a full hit and see what comes of that. And so he pivoted. He blinked, as some said. And maybe the interpretation was he'll also blink or pivot or whatever you want to say on domestic oil production. They might be making a leap of faith here. But let's say he does that and now opens himself up to that. He'll get a lot of flack from progressives and his party, environmentalists. But what would the market reaction be to that?
I think he might get flack from the progressives, but that's just a small portion of the party. I think, and you just said it, better than 50% of the party wants him to start to drill more. I think the market would welcome that, especially now that we're looking at oil at $150 a barrel, basically, right? And only going higher now, especially that, he just said we're going to ban Russian oil. So expect.
I don't know. I think a lot of this is priced in. I have not learned much from that talk there. That was a little boring. I'm sorry. We'll watch BAM, Build America Mutual. What is that? Like, did Joe Biden make a bank? All right, let's go somewhere else.
Senior defense official tells Fox News the administration is not considering a no-fly zone of any kind.
Dude, this is old news. The no-fly zone news was like 2 or 3 days old now. Well, maybe they won't talk about it anymore.
More breaking news.
Important message.
Uh-oh. Here we go. I'm a channel flipper. I'm flip-flopping on channels.
Around talking about it. I think that obviously the idea of enforcing a no-fly zone in Ukraine is lunacy on the part of the United States and outside countries, because the best thing that can happen here is to contain this and to end what the carnage that we're seeing. And
Europe joins us now. Is remarkable, breathtaking what you're doing amid shelling.
Kharkiv bar owner now in shelter. I want to hear what he has to say. Does anybody in Ukraine want to come on my channel? I don't know why you'd be watching me, but if you are, come on.
It's all about anger.
Send me a tweet DM.
There's some force right in our city. They are trying to attack us, so we are not thinking about sleeping. They are not thinking about why we do this. We just do it because for everyone here, that's the only way.
Well, that spirit is an example to your community. It's also an example to the world. We're looking at some of the video, essentially a GoPro on your dashboard as you and your teams are delivering around the city. This, sadly, I know this is your hometown, so I hate to say it. It looks like footage out of a World War II war movie, the debris. As you're driving through your city, your community, trying to help the desperate, what does it feel like to see this devastation?
Well, it's kind of painful because, the last time bombs has fallen on Kharkiv was literally in Second World War. So it's just unimaginable. Like, we still couldn't believe that in modern world, someone just attacks a huge city. I mean, obviously, this happens all around the world, but as soon as you see it with your eyes, that's ridiculous. Like, you just go the same streets, you try to visit some houses where your relatives try to hide from bombing, and everything is just destroyed. Like, literally hundreds of houses. Every time we drive, we just think, okay, which street is going to be next? Which shelter is going to be next? So, yeah, some places we cannot even recognize anymore. So hard they get destroyed.
How are you pulling this off to the degree that if there's somebody out there who needs food or needs medication, how did you set up this communication network, and how are you refining it with all of the difficulties?
Yeah, the first few days it was quite chaotic because we just wanted to organize a shelter for local people. Like in the bar, we have open some shelter downside just for every citizen right next to us to keep safe. But later we've started with some direct calling, and then finally we've got Google Forms, CRM, and all requests go through the same pipeline. So right now we are much more organized, and as soon as someone calls us, we are ready to deploy some supplies. So instead of being
no, I was just going to say, how do you deal with this, the shortages, the disruptions? How are you finding food? How are you finding medicine? And how has this network grown over the past week?
Well, this is the most, this is really strange for me because I didn't really expect the city to be that united. So the first few days were quite ridiculous. We were just thinking about where to get some fresh water. But now I have like a few hundred people on the line. They are in touch with us, different malls, supermarkets, bakeries. They literally just continue supplying free food so that we could deliver it and distribute it.
Ooh, just got an update that McDonald's is temporarily closing all 850 stores in Russia. Whoa. Is there somebody watching this? No more Mickey D's for the Russians.
Absolutely. Like literally we have some hotline. We managed to set it up yesterday just for everyone who wants to join us to do it. So basically we have some food to distribute for a couple of days, but every day we go through all the quotas to get some new bread, new grain, and so on. So while we have some supplies, obviously we're looking for some new ways to help local people.
Bogdan, I'm grateful for your time. I'm just amazed in awe of what you are doing to help the people in Kharkiv and the communities around it. We will stay in touch. And we will...
Wow. Hold on a sec. This is, I want to read this release. Okay, so it says here, McDonald's is temporarily closing 850 stores in Russia. McDonald's says it is going to continue paying all 62,000 employees in Russia who have, quote, poured their heart and soul into our McDonald's brand. But in an open letter to employees, the McDonald's president and CEO said closing the stores for now is the right thing to do. Our values mean we cannot ignore the needless human suffering unfolding in Ukraine. McDonald's has also temporarily closed 100 restaurants in Ukraine and continues to pay those employees. McDonald's could take a big financial hit because of the closures. In recent regulatory filings, Chicago says in its Chicago-based company says its restaurants in Russia and Ukraine contributed to 9% of annual revenue, or about $2 billion. McDonald's owns about 84% of its Russian locations. So it could be something that ends up hitting the McDonald's stock. The stock presently not moving much intraday. Let's take a look at that. Oh, wait, no, there it is. Well, this is the day chart here, though. So you've definitely seen a decline on the McDonald's stock already. These closures probably aren't going to help McDonald's stock recover from this rotation to the downside. Wow. Bye-bye, Mickey D's. You know, I had McNuggets the other day. They were okay, but I will say I was very disappointed with the filet-o-fish. It was terrible. And I don't want to just bag on McDonald's. I mean, no, I know it's McDonald's. You know, it's fine. It's not like I expect it to be like gourmet, but like, I don't know. Maybe they want you to buy the artisan burgers or whatever. Those are usually really good. And I also had a $1 menu regular burger. It tastes like paper. Usually the artisan stuff or whatever they call it. Those are pretty good. Artisan, I think they call it. Why everything's on commercial now?
Quality candidates matching your job description.
Everything's on commercial now. Come on, man. Oh, good. And I don't want to listen to Mr. My Pillow. He is on TV on every channel, on every commercial. You can't get away from Mr. My Pillow. Yeah. Oh, well. Is there a Matterport before and after Ukraine? Oh, my gosh. Okay, I've just checked 6 channels, and literally every single one of them is on commercial, so you just have to listen to me ramble. Okay, so Enphase, I think, just broke its support. It was up 14%. Yeah, look at it. Slip right through support there. So you got a little bit of a chillaxing here. This is why I don't like chasing these run-ups. I mean, don't get me wrong, I like them, but I also want to buy Enphase more and cheaper. So I don't mind a little bit of a pullback here. I have no plans on taking tendies on Enphase anytime soon. I want to add to that position. Tesla, yeah, Tesla's up almost 5%. Really incredible. AMD, PayPal moving a little bit here. How's Square doing? Square 102. Wait, that's down though. Oh yeah. Look at that. It surged up to 120, went right back down to 100. Listen to this.
The U.S. Embassy in Moscow says they have limited resources to assist American citizens trying to leave Russia.
Okay.
Countries have closed their airspace to Russian flights, including our own, making it difficult, much more difficult, for people to get out and come home. Jillian.
So U.S. officials are worried right now about Americans stuck inside Russia. They are saying, telling Fox News behind the scenes that, as you mentioned, Harris, they are not necessarily right now tracking how many people are there inside the ground. They say Putin may yet go further with this effort to crack down. He's already rounding up journalists. He's hunting them down, shuttering media outlets. Most alarmingly, though, a European official tells me the Russians have draft plans to begin public executions inside Ukrainian cities. Take a listen to the director of national intelligence just an hour ago.
Analysts assess that Putin is unlikely to be deterred by such setbacks and instead may escalate, essentially doubling down to achieve Ukrainian disarmament. We assess Putin feels aggrieved the West does not give him proper deference and perceives this as a war he cannot afford to lose.
Now, the State Department is warning every U.S. citizen inside Russia to leave immediately, saying the U.S. Embassy in Moscow has very limited resources to try and help Americans who want to get out. And with countries closing their airspace to Russian flights, it is getting harder by the hour for Americans to escape. Asked how many citizens from America may be in Russia now, a State Department spokesperson would only tell me they don't keep reliable records. Take a look at this. U.S. citizens aren't required to register their travel to a foreign country with us, and we do not maintain comprehensive lists of U.S. citizens residing overseas. So the bottom line, Harris, we don't know if there are dozens, hundreds, thousands, or tens of thousands of Americans inside Russia right now. We do know last month alone, 2,000 Americans reached out to the State Department and the embassy there to register that they were, in fact, on the ground, this presumably happening as they got nervous about things heating up.
Yeah, Brittany Griner plays for WNBA, the Phoenix Mercury. We found out about 3 weeks ago they had detained her. There's now video that's come out of her at the airport. It's just outside Moscow, this airport. They claim that there was hashish oil that she was using for a vape. That would be not legal, not accepted in that culture. We don't know what the facts are on the ground. But Charlie, I'm curious from your perspective, it's hard to get Americans out of places where they don't want to do business with us, and we now aren't doing business with them because they're killing people.
Absolutely. And what's really frustrating here is that it seems like the Biden administration generally and the State Department specifically learned absolutely no lessons whatsoever out of Afghanistan because, of course, the bumbling withdrawal from Afghanistan, we face these exact same problems. And it's not like the Biden administration didn't realize that there was trouble brewing in Ukraine along the border with Russia. They've been aware of it and they've been talking about it for 6 months now. And it's just yet another example where I think I speak for a lot of Americans. I just don't have any faith in this administration to make any smart decisions right now, which, going back to our last discussion, is why, the idea that people are talking about wanting to enforce a no-fly zone in Ukraine with American jets is lunacy.
It's a last-ditch effort.
I do wonder why Fox keeps reiterating that. It kind of bothers me because, it's been made so clear that we're not going to do that because it would, the U.S. government expects that would, and I kind of agree, would just lead to a World War III. So the fact that they kind of keep rotating on that, I don't know, it just makes me want to click away. So get off that already, would you? I don't know. Let's go over here.
Returns.
So many ads.
You can play this game. Putin can cut off his main source of revenue at a time when his economy is already reeling. He can cut off the oil and gas that feeds his treasury. It'll hurt Europe, but my guess is it may hurt Russia even more. So there's a lot of bluff, a lot of bluster in what Putin is doing in order to deter and frighten the West. And I think on something like this, on the economic angle of this, the Europeans, the West, the United States are in a far stronger position than Putin. We ought to call that bluff.
You know, very quickly, John, there's a strategy here we tell for the Ukrainians, not necessarily to win the war outright, but to drag it long enough that, you know, the support that Vladimir Putin supposedly has at home withers. What do you think?
Yeah, I think, again, every day, every week, every month that this war drags on, that Putin's military is humiliated, unable to achieve its objectives. It's clear that there is no winning strategy to achieve what Putin said he would achieve, which is the conquering of all of Ukraine and its reintegration back into Russia. That is now impossible. Russia, even if it wins Ukraine, will never be able to hold it. And I think, you know, with thousands of Russians already dead, with their economy sinking and tanking even further, that Putin's got to be looking around the room to figure out who's got the long knives out for him eventually.
All right, John, thank you very, very much. By the way, I don't know if the Russian has a hankering for Big Macs, but McDonald's has just announced it's going to close 850.
Dude, we reported that. How long did that take them?
Corporation to say we are out of here. We'll have more after this.
Oh, wow, that's funny. How long did we? I think we beat them by like 11 minutes. Honestly, I'm really happy about that. Yeah. I want to say about 11 minutes. At least 27 killed in Kharkiv in the past day. Ugh. All right, let's get off. There we go. Nope. All right, let's see what the suits are saying. We haven't done that in a minute. So let's go to the back and see what the suities are saying. Okay, markets live. All right, so Treasury 3-year sale boosted by desire for liquidity. Yeah, still safe haven. Stocks have had an epically bad start to the year. You know when Bloomberg says that, and they start using words like that, it means things have been bad. Stocks have had, I'm gonna write that one down, epically bad start to the year. You could hardly call this year's equity weakness quiet. Yeah, no kidding. Last night, let's see here. This was the, okay, oh, wow, listen to this. Through the first 44 trading days, I think they used the Dow and the SPY. The Dow and SPY have had their second worst year ever in 123 years. Holy smokes. That's back to like, what, that'd be back to like 1899? Because I think the stock market came to existence in what, like 1877, was it? It's my guess. I'm going with 1877. Stock market. Let's see. History. So Dutch East Indies Company was 1611, but I want to know about the U.S. When was the U.S. stock market created? Oh, I was wrong. Oh my gosh. 1792. No way. Wow, I was really wrong. New York Stock Exchange, 1792. Oh man. That's very interesting. All right. Let's listen over here. Well, let's see what else the suits are saying. So let's see here. What Bernanke said about oil and inflation in 2004. Ooh, this could be interesting. So Bernanke, let's see. The stock market's price action follows the path. The stock market's price action so far follows the path of 2018. Oh, that's crazy. When that's similar to what somebody mentioned this morning in that screenshot I showed you this morning. But I'll show you the overlay here in a second. That is really cool. It will eventually lead, yeah, that's interesting. It will eventually lead the Fed to abruptly stop the hiking cycle, but this time high inflation exacerbated by an oil shock has tied the hands of the central bank, meaning the strike price of the Fed put is a lot lower now. Okay, so let me translate that. Basically, they're saying, yeah, last time we were pricing in a hawkish Fed, this is what the market did, which is very, very similar to what we're seeing now, right? The problem is the Federal Reserve now has to deal with high inflation. So that means this low could potentially be even lower if that's sort of the trajectory that we're heading on. Who knows? Maybe this is the bottom. If that's the bottom, then this bottom could be even lower. That's wild. All right, let's listen in here.
Area of the market that is now kind of reversed course throughout the course of the day. That's the energy sector. We've seen oil prices come off of their highs in the wake of that President Biden announcement of the ban of Russian U.S. or Russia's ban of Russian imports for oil. You see the energy sector spider just around that noon time today is when we saw that real dip below the highs of the session down towards where we are now. By the way, energy, not the only place that the reversals happened. Check out gold prices and wheat prices, believe it or not, went limit down at one point in trading today. So a lot of that unwind happening. And then check out what's happening with Enphase Energy, Solar Edge, SunPower, Sunrun, the Invesco ETF that tracks many of these solar companies. They're all up massively today. A lot of this is this notion that as oil prices continue to go higher, if this is a regime, if you will, of higher prices over the longer term, could there be more demand for those alternative energy types? Watch those solar names. Kelly, they are surging and trading right now. Although I will point out, if you look at a one-year chart, they are all well off their highs for the year. Kel, back over to you.
Absolutely. Dom, thank you very much, Dom Chu. Crude oil prices surging towards the intraday highs yesterday of $130 a barrel, then taking a breather after the president officially announced a ban on Russian oil imports. Here's what President Biden said moments ago about how the U.S. plans to fill the gap.
We already went through this. I want new news, not old news. I think I might have a little new here. Putin just signed a decree on special economic measures restricting imports and exports to protect Russia's security. That's interesting. I'm going to learn more about this.
A recession induced by demand destruction. Joining me now is Bob McNally, founder and president of the Rapidan Energy Group and a former energy advisor to President George W. Bush. Bob, it's good to have you here. Does demand destruction have to involve a recession?
I'm afraid it does. You know, oil demand is the lifeblood of a modern economy. It's not a discretionary.
He's calling for a recession.
It's not movie tickets or cigars that we can just go without if they get pricey. So it's required for us to get to work. It's required for factories to work and so forth. So these types of energy shocks usually are at the scene of every recession. And I'm afraid it might have to be the same way again.
Although even the last big one in 2008 happened as the financial crisis was already in motion. There were a lot of things that really pulled down the economy. And I just wonder if this time's different because you have consumers with a lot more sort of pent up spending power. Gas prices are not anywhere near where they were in 2008 in real terms. And so are we necessarily going to see something that's 2% of household spending send the consumer into a recession?
Well, we're going to find out, I'm afraid. We may have to go to 3 or 4%. At Rapidan, we expect crude oil prices to start causing...
By the way, the Apple event has begun. I hate showing the Apple stuff because they just block my videos every time I show like an Apple event. But I just mentioned that. I will provide updates on what's being announced, though, kind of as we go through. But there's an Apple event that just started. And it looks like Tim Cook just now is getting on stage. So, I mean, we'll watch the markets and kind of see what's going on and report updates as those come through.
Stay at home during the worst of COVID. The irony is nobody wants to do that again. So I'm curious what you think the message should be to Americans who are facing sticker shock. Should it be to try to use less, or should it be, no, hey, get out there, we're reopening, everyone's excited to travel and drive and see people again? It's a very difficult time for this all to be coming to a head.
You know, it's a very difficult time, and I'm glad I'm not in the White House right now. I was there after 9/11. I've been there for crises and high oil prices.
Yeah, it's boring.
There's really no good.
All right. So anyway, I do have, again, I will be watching Apple. By the way, Apple's up about 1.9% right now. Still down a little bit from that all-time high at about 182. But yeah, looks like now they're talking about some movies, Ryan, including an animation and an obligatory Ryan Reynolds production. Come on, man. Ryan Reynolds is great. Oh, well. All right, let's listen in.
So let's run through the numbers for a second. My understanding there's about 6 million barrels a day of Russian oil, seaborne oil and exports and that sort of thing that are potentially at risk here. Although, again, this is just...
Oh, quick note also, BTC kind of making a little bit of a move back up here. You can see that right here. BTC sitting about 39.2 right now. A nice little recovery from about that 38 we had earlier.
Million barrels a day of crude oil, and then almost 3 million barrels a day of refined product. But let's just talk about crude oil. We have a 5 million.
Oh, Free Guy was so good. Really good movie. Loved Free Guy. I bought a Free Guy costume, but I never wore it.
Shippers, especially at the seaports, they're not picking up the Russian crude. But let's just talk about offsets. 5 million barrels a day is the problem. Inventories are low, so we're not going to draw those down much more. OPEC Plus could probably drop in half of that, mainly in Saudi Arabia and UAE, but they're not doing that, or they're not doing it at a fast enough speed. You sign an Iran deal, maybe you get another 1 million barrels a day in a few months starting after that. That would help. Venezuela, a few 100,000 barrels a day in a few months if you ease sanctions. So with inventories low, supply demand tight, the problem is you have a 5 million barrel a day risk, and you don't have 5 million barrels a day to quickly bring on to offset that. That's why prices have to do their terrible work and enforce consumption.
Very well said. And as people have pointed out, really China could help a lot here. If they pick up those Russian barrels, then at least they won't be competing with the rest of the world for the remainder of that demand. So let me ask you the most politically loaded question here, but the most important one for U.S. consumers. What can be done to rapidly increase U.S. oil production, given the political realities of this administration? Like the other day in the Journal, there was a piece from a bunch of Alaskans saying, look, we want to do our part to help, but the permitting process has been a nightmare, the environmental review and so forth. You know, Keystone, obviously, we know what happened with that, and now we face a need to get this going quickly. Are there any near-term things that can be done politically to get oil flowing?
Absolutely. The Biden administration just needs to go to the Obama-Biden archives and pull up all of the above. All energies can be used, oil and gas being bridges to a clean fuel future. We need to rescind the Keystone Pipeline cancellation, welcome and open new infrastructure permitting, tell the IEA to stop calling for a ban on new investment. For some reason, the administration has adopted a very anti-oil and gas posture, even relative to the Obama-Biden administration. We should be open to exports and not even threaten to ban exports. So if we remove these above ground risks and you see investors come back and the economics come back, you will see the U.S. oil investor and worker respond. You can bet on that.
Although finally, before we go here, I think it was Goldman who ran the numbers recently, because the economy is so tight and we're already doing what we can produce in the oil patch. They were saying U.S. oil producers would have to increase their capex by 45% from this year to next year in order to try to just pump an extra, let's say, 500,000 barrels a day. So even if we saw, you know, sort of political appetite, how quickly could we realistically increase production?
I think you're looking at real increases probably next year. That's right. When we talk to our shale oil clients, you cannot find
this is, by the way, what we were talking about this morning, where it's kind of like, they're probably not going to actually be able to increase production of oil, right?
Everything fall into place, but you're still talking about next year before I think you realize positive net production growth up over what we're going to do. We're going to do 700,000 barrels a day this year. Don't get me wrong. Shale oil is going to come back this year, but to keep that going into next year and the year after, that's what we're talking about. For that, you need these changes.
Yeah, it's a difficult inflationary environment, even for them. A lot of challenges, Bob. We appreciate you joining us today. Thank you.
Thank you.
Bob McNally. Quick programming note, be sure to catch our special CNBC program tonight at 6 Eastern. Oil Shock, hosted by Brian Sullivan and featuring the CEOs of Occidental, Pioneer, and Williams companies. Again, that's
seeing the CEOs talk about the good old how they're not going to increase production. That's just what we want to see. Oh my gosh, it's I don't know. High gas prices suck. Although they make for good TikToks. Everybody's making TikToks right now about how high gas prices are.
Chris, please make this point, because I understand why we all, are concerned about the recession risk, but at the same time, this is a strong economy that to some extent can absorb the higher prices.
Yeah, hi, Kelly. Thanks for having me on. So we're in a very unusual period of time, to not state the obvious. You have supply shortages throughout the economy, whether it's in housing, whether it's in autos, whether it's in semiconductors, or many other areas. At the same time, higher prices at the pump are starting to hit consumers, not only on the lower end side, but also on the higher end side, apart from the wealth effect that lower stock prices does as well. And so ISM, which is a traditional indicator of industrial activity, we think could stay very strong.
Let me give a quick update here just on Apple. So it looks like they're talking about, well, Apple right now is about 2.1%. It is the most actively traded company today, by the way. They're talking about the A15 Bionic chip coming to the new iPhone SE. It does not have, with the touch button at the center. Important model, says Tim Cook. Basically, it's just going to be a faster chip. So iPhone SE getting the A15 Bionic chip. And the previous SE had the A13 from 2020. So Tim Cook's talking about how a lot of new users are coming to Apple or to iPhone. The A15 has a 6-core processor. I believe the before was 4. 6-core CPU. Crazy. Let's see how Apple stock's reacting. AAPL. I mean, I think it's gone up a little bit. Let me see here. Let's go to the date. Well, it's kind of just been rising with the market today. Hoping Apple announces the headset. Oh, like a VR? There's no way. I mean, that would be amazing. But I'm not going to hold my breath on that one. Mostly because I think they are, they're perfectionists, and it takes them forever. I will say Cloudflare sitting at 94 is not horribly unattractive at 94 with up at 3.16%.
JP Morgan exactly is the name that we're suggesting.
So let's highlight that, Jason. You're investing in a stronger consumer in an environment where we're talking about $130 oil. Why doesn't that faze you more?
Well, you pointed out that actually the real cost of commodities for consumers is actually not at a terrifically high level. But more to the point, for me, I've been a fixed income investor for a really long time. I look at the balance sheet first. And the consumer's balance sheet looks really good. It's actually corporate balance sheets and government balance sheets that are more challenged. So the consumer is entering this slowdown in a good place.
Chris, do you want to respond to that, especially as it relates to whether there are parts of the stock market that would still do pretty well in this environment?
Well, I think clearly you have to have a quality bias. You have to look at leverage ratios again and not invest in high leverage, lower quality companies. We think if we got out of this stagflation geopolitical risk, that we're in, that regional banks and banks in particular can do well, because we'll kind of go back to the environment we're in.
The banks have not been doing well, though. Like, they just have not. I don't know. I think they have not been a good place to go. So I don't know what this guy's thinking. Maybe he's going to tell us more.
Or inflation, Chris? I mean, is that possible that this is still more of an inflationary problem than not?
Well, we've been in the view that we're in a stagflationary environment. That's the outcome of this. We're in the middle of a flare-up, if you will. We'll continue to see flare-ups over the course of time. And if you think about what's happened over the last 2 weeks from an economic point of view, you have higher structural inflation emanating from this, along with slower growth. I mean, growth has to slow down. Every dollar change in the price of gas at the pump is $150 billion annualized that comes out of consumers' pockets. And I don't think there's enough excess savings for a lot of consumers to offset that if these prices are sustained. So we have to have a quick resolution to the Ukraine-Russian conflict for, I think, us to avert a real strong slowdown here.
And Jason, a final word on that. Where do you see the consumer balance sheet starting to really come under strain?
today, where the consumer is struggling is actually at the lower end of the income spectrum, especially where the consumption basket's more heavily with food and energy. But by and large, if you're looking at bank earnings and the quality of those balance sheets, they're quite strong in the consumer sector. So while there is additional pressure, no doubt about it, it's kind of the cleanest dirty shirt in this environment.
We'll leave it there. Gentlemen, thank you both today. Chris Senek and Jason Brady with some different investment landscape. Coming up, Apple holding its first launch event this year, holding it right now, in fact, and they're expected to make a big bet on the global consumer. We're going to bring you all the headlines from CEOs.
Yeah, we'll see. We're actually, I'm going through these as well. So far, they're still talking about the SE, kind of comparing, talking about battery life, 5G connections, so on and so forth. It's so far, I mean, there's nothing earth-shattering coming from this. 5G connections, 5G chips. Well, of course, they don't want to make it seem so great that it ends up cannibalizing their more expensive phones. One thing to know with Apple is the latest phone. I have to say, what's really cool about it is you can do multi-SIM in it. So you could have like one phone and then have multi-SIM. Wow, $429 for the iPhone SE. That seems really isn't that cheaper than usual? $429? Maybe somebody in the comments will know an answer to that. But I would say that sounds cheap, $429. Is Shift almost up 17%? Is that true? The market's really rallying right now. Cloudflare's moving up. Enphase is going up. Tesla's going up. Matterport's going up. Wow, yeah, Shift is up 17% just today. Holy schmokas. Wow, it's a good green day today. I like it. Airbnb, ooh, 10%. It was 131 this morning. Ooh, new iPad Air to have M1 chip. The new iPhone SE will start shipping March 18th. $429. Is that a recession price? That's really cheap. That's what I'm saying. Like, that seems really cheap. Does anybody know what the iPhone SE was first? Or how much it would cost? I think their website's gonna be down. Let me see. Maybe I can get it. No, yeah, their website's down. Yeah, I noticed Discord's down too. I was gonna ask if Discord was down, but I noticed Discord's not loading. iPhone SE cost. Oh no. Okay, never mind. It was $399 to $449 was the previous. So if anything, they've actually increased the low price. Never mind then. I never realized you could get an SE that cheap. SE is the cheap model, yeah. Okay. So Apple announces new iPad Air. Ooh. New iPad Air to have the M1 chip. Oh, that's big. But the Air is not the actual big iPad. That's the smaller one. Let me see what else we're getting here. Yeah, new iPad Air run through straight away. We're talking about performance based from the chip. Massive leap. 60% better performance from the iPad Pro. Wow. That's what I'm on right now. Putin decides to ban the export of products and raw materials outside the Russian Federation until December 31. Whoa. I wonder what that's going to impact. Yeah, U.S. official. Let's see here. That's interesting. I do want to figure out what's going to happen there with that Biden or Putin ban there. All right, let's listen in over here for a moment.
Curious about how they would price this thing and go after that lower end of the market where they've been losing market share over the last 2 years. And it's going to be really interesting to see if 5G is enough to convince people to fork over that extra $30 over the last model. And on top of that, one other surprise, a deal with the Major League Baseball to air 2 exclusive baseball games every Friday night on Apple TV Plus if you're a subscriber. So that's a big first sports deal for Apple and a sports rights deal for Apple. That's really interesting too.
So that was long rumored, maybe we could even say long expected, but today it is the case that for people who want to watch those certain games, I mean, I guess maybe they could see them if it's in their local market, but otherwise they would have to have Apple TV in order to stream them.
That's right. And it's not just the Apple TV box. Keep in mind, Apple TV Plus, the service is available in smart TVs, Roku's, Amazon, you name it. So it's going to be everywhere. If you have a device, you can still watch it and stream it and subscribe.
How important, Steve, are people saying that this cheaper iPhone is, which normally would be margin dilutive? I don't know if it is in this case, but how important is that for Apple to have a handset that they think the global consumer will take them up on?
Yeah, it's super important, especially in emerging markets, as we already know. But even before now, the iPhone SE line has been too expensive for some of those markets. So it's going to be really interesting to see if even increasing the price on that for whatever reason it was, whether it's margins or the
Inflation
5G or whatever it is, it's going to be interesting to see if people will still be able to go for that or if it's going to keep people from switching from Android.
All right, Steve, for now, thank you.
Thanks,
Steve
Kelly.
Kovac, good to see you. Let's turn and get more reaction now from Amit Daryanani. He's a fundamental research analyst at Evercore ISI. Amit, it's good to have you. I think, what is $429 is the price point? Is that a little high?
It's only higher than the $399 they had, I guess, the last time around, right? But it's about an 8% uplift. You know, I would argue it's not terribly different than what they've been doing with their entire product launch the last 6-9 months. They've slowly been creeping up the ASPs. It is, you know, Steve talked about 5G. You know, the 5G bill of material is somewhat higher. I suspect that is really what's driving a lot of these decisions on their part.
The iPad Air is getting an upgrade to its front-facing camera as well, probably the back one as well. I never see people using the back camera on the iPad, honestly. Like, if I could spend $50 less and not have the back camera, I would probably be willing to do that. Like, does anybody take pictures with their iPad? I don't know.
If there is one of those years ever, this would be the year you should be attracted.
You know, let them take more margin too. Like, save me $50, save you guys $70. Fine, fair, whatever, or $20, whatever. Like, I don't care. You don't have to pass it all on to me. Increase your margin, it's fine, but get rid of the stupid camera.
At the end of the year, and then you're going to have a very, I think, sizable capital allocation update in April when they report their earnings as well. So these are things generally you want to be more positively biased to Apple versus not. We think the stock continues to do well. The stock should work on the 2 to 10 price point, and you should get good demand tailwinds for the rest of the year.
And they made a point of saying that the iPhone SE they just introduced will include 5G, but as Joanna Stern reiterated this morning, she's not sure that's really moving the needle for anybody at this point.
Yeah, you know, I have the latest, greatest iPhone. I'm not sure if I use 5G functionality the way I should, or you know, I'm not sure what the functionality is, right?
Stop. Okay, I knew somebody was going to do this. Haven't you seen the meme pictures of Chinese tourists taking pictures with their iPads? Yes. Okay, yes, in fairness. I'm just saying, for me, and I think most of us here, if there was an option to not pay for that, I would probably take it. Looking forward to the new iPad Pro later this year. Hold on a sec. What is this? Apple is adding M1 to the iPad Air an entire year after adding it to the iPad Pro, so it'll be outdated within a few months. Wait, what? Oh, because the iPad, the other iPad is getting the M2. Oh, that's interesting. So iPad Pro likely getting the M2 later this year. I see. So Air getting the M1 is a bit dated already. Interesting. Okay, but the iPad Air is going to be a lot cheaper. Well, I will say, I mean, I have both. Like, here's my Air is right here, and then I'm typing on this one right here, which is the Pro. The Pro is a little too big for my desk, but if I ever have to do annotations or like I read like a PDF or whatever, I love the full PDF size. Let's listen in here.
Grand scheme of things, it's 4 or 5% of the revenue numbers, right? The iPad, the Macs are, so I would actually take a different perspective. I think this is a very interesting time to provide a refreshed lineup of iPads and Macs.
$599 start price for the iPad Air.
And realize the hardware is 3 years old and too outdated. This actually may be a great time for them to cross that entry point.
That is a great point.
Yeah, Discord, Spotify, Cloudflare, and AWS all having the same outage spikes. Yikes.
Apple has all the new products we need to go buy now.
How convenient. I mean, thank you so much for your time today. It's good to see you.
March 18th for the new iPad as well.
Makers are feeling the pain at the plug thanks to a shortage of some key components like nickel right now. Nickel suspended for trading today after jumping above $100,000 a ton. Look at that chart. We'll have more on the.
Oh, interesting. iPad Pro LiDAR scanner gets tons of use by one of my clients. They bought something like 300 iPad Pros. Wow. Maybe the like Matterport kind of scanning, huh?
Ethan Harris, Bank of America's global economist, joins us coming up on The Exchange.
All right. Hop over.
And where in that does gender identity come in?
I want to even be a coach someday, just to help other kids get to where they want to be.
Insane. I don't need
Stop.
to do. What do you watch? Okay, when you're not doing, when you.
Oh, man. I hate this TV. Somebody told me to change the batteries in this remote. I didn't do it because I want to say it's working, but it's not. There we go. It's just there's such a latency in when the button actually pops up. All right, here we go. Oh, they're coming out with a new M1 chip, M1 Ultra. Oh.
Kyiv, as we've been reporting, but what they are resorting to and what they plan to resort to at all of these city centers, these population centers, is a siege. They're encircling them. They're firing missiles and rockets and artillery into the cities, killing civilians at an incredible rate.
Unclear, though, if that new iPad Air is going to have that Ultra.
Inside Mariupol, that they haven't had water in 5 days. So the impact on civilians, they are using civilians as a weapon, and they are not afraid, the Russian forces, to kill civilians in the process.
Jan Griffin for us at the Pentagon with the latest on that. Jan, thank you. Sandra, you know, this is the same technique, same tactic, same twisted strategy that Putin used when he attacked Georgia, when he attacked Chechnya, and that is to lay waste to the civilian populations in some of these beautiful old Eastern European cities, just to try to break the will of the population, maybe to put pressure on their political leaders to say it's time to throw in the towel.
Yeah. And by the way, a mention on International Women's Day on Alex Hogan's reporting, obviously Jen Griffin's as well. And Alex continues to bring us these images of women helping each other out. We have seen so many babies and children, refugees from Ukraine making it over the border. And this image really has stayed with us throughout, hasn't it, John? Of strollers being dropped off by Polish mothers, knowing these Ukrainian women are coming over the border with babies in need of things like this. And it is a sign of strength in the middle of so much horrific things that are happening over there, that women always step up for other women, and we always help each other out and never mess with a mother, right, John? We're both parents, and what's happening over there, it warms your heart to see acts of kindness like that towards each other.
It really is quite amazing, and in the toughness of the Ukrainian women as well. And we're going to be talking to one of them, Kira Rudik, who is a member of the Ukrainian parliament, toward the end of this hour. She has armed herself to the teeth in preparation to defend her country. We should point out that one other thing that we're going to be talking with Robert O'Brien about, and others as well, is Dmitry Peskov, who is...
You know, it says they are areas secured by Russian forces. I don't believe that. I think there's still a lot of fighting happening in these areas. I don't know. I could be wrong, though.
Section of the country, and we could end this tomorrow. Of course, the Ukrainian leadership is saying no to that.
Very interesting analysis. I know we were going through a lot of that this morning. John, we look forward to that with Mr. O'Brien coming up. The mayor of Lviv, meanwhile, says his city has reached its capacity to take in Ukrainians displaced by Putin's invasion. Some 200,000 people are currently staying in that city, while another 50,000 pass through the rail station daily. Senior correspondent Mike Tobin is live in Lviv for us. He's on this story. The pictures are unbelievable, Mike.
And Sandra, the flow of refugees here is constant. They're coming by car. They are coming by train. They are coming by bus. You mentioned the train station there. It really conjures up images not seen since World War II. Mostly women and children. As you mentioned, some 50,000 people are passing through that train station every day. Some are arriving by bus, and they show up at the Lviv Arena, which has become a coordination center to get the refugees fed, cared for, and get them into some kind of temporary housing.
The most, you know, what's interesting, just a quick note while we watch this refugee crisis here, is the European Commission has announced that they plan to cut their dependency on Russia by 2/3, quote, well before 2030. Okay, well, it kind of signals that you got lots of work to do, honestly. It's just, I mean, I guess it is what it is. But I don't know. M1 Ultra, 128 gigabyte of memory. Wow.
Lviv, and they need somewhere to stay. We found an art studio downtown converted into temporary housing, and a woman there who fled the fighting in Donbass to live in Kiev, and now she had to flee the fighting in the capital city.
Why would anyone deserve being deprived of their houses, deprived of their families, their dreams, their lives, just for no reason? I don't think someone deserves it at all.
And to give you an idea of how everyone in this area is part of the effort, Victor Stepanek is the coordinator at the Lviv Arena. And he says whenever they run out of food, he just puts a message on Facebook or on Twitter and food shows up. John, Sandra?
You know, yesterday, Mike, we were talking with Franklin Graham, whose organization Samaritan's Purse has sent a field hospital there to Lviv to deal with the influx of people. In terms of,
you know, I have to say, I don't know how they keep getting these chips so much freaking better. Apparently, they're now the M1 Ultra for the Apple event is going to double the memory, and they're up to a 20-core CPU now. And it's 8 times faster than the M1. I mean, it's really incredible.
Are swamped. Everyone is busy, but they can handle the injured who are coming in. You don't see that many injured, frankly, and what you heard from Victor Stepanek, the people who are injured psychologically because of what they've been through.
Mike, all that video you just brought us, you know, it is humbling what these people are going through and the human suffering involved and the strength that you see from these people. We've been talking about the kids, especially those that Alex Hogan has been showing us filing onto the buses there after they make the long journey across the border. And the strength of those kids, it stays with you, those images, as much as they've been through, the smile on their faces.
Okay, regarding these cores, I want to say this really quickly, and it is terrible what's happening with the refugee crisis. What's happening? I would say it's a 20-core CPU. It's actually a 64-core GPU, 128 GB of mem, as we mentioned here. Thanks in the chat there. So this is the M1 Ultra desktop chip. So I don't think this is going to be in the iPad. It's a desktop chip, and they're talking about it afterwards. 32-core neural engine for AI. They call it the most versatile and powerful iPad ever. The iPad Air. And what is this? There's some talk about the C port. Does it not use a C port already? Yeah, that's USB-C. Yeah, it already has a USB-C port on the Air. I don't know why they're talking about it then. Okay. Let's see what else here. Yeah, the price increase of the SE to $429 is interesting. Good old inflation. I wonder if that gets picked up in CPI. All right, let's keep listening here. Mac OS automatically scales with M1 Ultra. All right.
and God bless them. You know, we really, as you point out, don't know exactly what Putin is after. Is he after Crimea and the Donbass region? Is he after the entire country? Avril Haines, who's the director of national intelligence, was talking before the House Intelligence Committee this morning and suggested that based on how Russian troops are doing in Ukraine, Putin's ultimate goals may change a little. Listen here.
We assess Putin feels aggrieved the West does not give him proper deference and perceives this as a war he cannot afford to lose. But what he might be willing to accept as a victory may change over time, given the significant costs he is incurring.
Robert,
Yeah.
what do you think about that Putin's goals here may be fluid?
Well, there's some truth there. I mean, remember, we were all very worried about the vaunted Russian military even a few weeks ago. And, Putin has said he wanted all of Ukraine. He said he wants all the Baltics. He's even brought in Finland and said he wants Finland. But right now, he's not doing too well in Ukraine.
Sorry, it does. Al, what does? I forgot what I said. Al here says something about it does, Kev. Oh, that is also glitching. There we go. Anyway, I have no idea what I asked.
And his goal for many years has been to reestablish the Soviet Empire. And
have the USBC? Yeah. Okay.
And we've got to continue to help the Ukrainians fight that, and we've got to keep our commitments up to the ball.
Verdict expected shortly in first Jan 6 Capitol riot trial against Guy Weasel-Riffit. Jury has been deliberating for over 3 hours, and Putin has signed that decree banning the export and import of products and raw materials out of Russia until December 31. I want to get more details on that, though. Still waiting for those to come through.
Well, there's nothing to suggest he still doesn't have a firm grip on the Kremlin. I mean, he was a KGB leader. He's surrounded by KGB leaders. They're good at hanging on to power. But I'll tell you, if I was Vladimir Putin, I'd start thinking about Xi Jinping and what he's looking at. And I think Chairman Xi was looking at maybe taking Taiwan if the West response to Ukraine was weak. But remember, in the 1860 treaty.
Let's go ahead and jump on over to CNBC again. Okay, commercial. No problem. We do have BTC sitting about 38.9 right now. Let's see. I want to see what else the suits are saying as well.
After they initially dropped on a wider than expected loss and weak first quarter guidance. Revenues did beat, though. Active buyers also rose 36% from the previous year. Joining me now to discuss these results in a First on CNBC interview is James Reinhart. He is the CEO of ThreadUp, along with our own Courtney Reagan, who is one of those active users.
I am. James, thank you so much for being here with us today. Really appreciate it. Kelly ran through some of those stats about the stock. And on the call, both you and the CFO really took time to...
I don't know much about ThreadUp, but let's see here. So Zelensky's remarks today, pretty similar. Market right now seems to be, let's see here. This is Airbnb. Here's the SPY. Looks like we're kind of relaxing a little bit there after that run. It's always the post-Biden speak run. It doesn't last, but it definitely comes. All right. Okay, more Apple talk. Here we go. Apple announces Mac Studio and Apple Studio Display. These are new external monitors, or a new external monitor alongside Mac Studio. Apple Studio Display. Apple Studio. Let's see. I want to learn more about that. All right. Well, we'll get some details on it. Apple unveils new Mac Studio and the Studio Display with M1 Ultra. So let's see here. I'm told Mac Studio, smaller Mac Pro / more powerful Mac Mini. Oh, interesting. Okay, so Mac Studio is a new computer. Ah, okay, got it. So a smaller Mac Pro, more powerful Mac Mini, and a new monitor. And it's going to run iOS. Aha. Very interesting. A-series chip for image processing running iOS. All right. Neat. Okay, the Jan 6 guy just got, it looks like, hit with the guilty verdict on all charges. A lot of news today. We go hunting and do some fundamental analysis, some of the fun stuff. This is so much news. Prosecutors win first guilty verdict in trial for a U.S. Capitol rioter. All right.
Yeah, you're right. Life must go on, and these new iPhones are basically a sign of the times, right? The spring launch is usually when they fill out the product line with, their advanced chips. You see Apple Silicon everywhere. So the M1 chip, the A15s are coming in, and it's making things more affordable, more accessible. If you were watching the show, I mean, they even had sign language interpreters online as well. It was going live, simulcast at the same time, and that made it actually, it's all about accessibility, affordability, and I think that's kind of what you're seeing with this launch. It's being about create power and performance in every single line. And, life must go on. We're still going to have to access digital content. And more importantly, I mean, this is the digital future.
I'm curious what you make. So many of the products announced today, I'm not immersed in this or nearly as the expert you are. 5G, they kept saying 5G. Is it me, or is this 5G thing not panning out the way it was advertised? I guess it does depend where you live. And I understand that a lot of carriers today, though they will only feature phones on their shelves that are 5G capable. I get that. But it seems to have been a bumpy launch, and it seems to have yielded bumpy results. What's going on with that?
You're right. I mean, the benefits to consumers for 5G haven't all panned out. The carriers are still doing build-outs in a lot of cities, but we're seeing 5G take an effect inside enterprises, inside office parks, stadiums, closed areas. You're seeing those benefits of faster data, more services. The benefits really came back to the carriers. It's actually a lower cost to actually transmit over time, and more importantly, they can push more services in those 5G networks. So it benefits the carriers. It kind of benefits the consumers. I don't think the consumers have noticed a big difference in terms of speed. In fact, in many cases, switching from 5G to different connection points actually has been worse in some areas, especially here.
Yeah, I just noticed, personally, I don't know about y'all, but I rarely get full 5G. I mean, I know it says 5G frequently, but I rarely actually get those full high-speed downloads. Sometimes if you're close to a tower, it's really good though. Makes you wonder how much we're getting radiated.
It's in bear market territory going in today. It's still in that territory here, but a lot of those names are bouncing back. It might just be saying, all right, we went too far, but we're watching it. We're also watching the growing list of multinational firms, McDonald's, the very latest, to say, no, Russia, we've had it. And
somebody here says something about Russia disconnect from internet. I haven't heard anything about that.
Maybe he loves Big Macs, and now he's probably buying up a lot of Big Macs because they won't be around very long in Russia. After this.
Putin buying the Big Mac. Yeah, right. Well, we'll see. You're banning them. Well, it's not getting banned. McDonald's just pulling out. It makes you wonder how many other places are going to pull out of Russia. And McDonald's is just sorry, see you later. Pretty wild. Oh, this is interesting. Here's an update from come on. It says online daters have lost a record $547 million to scams in 2021. Gee whiz. Romance scams, really popular.
Say Russia should be considered a terrorist state. Trey Yangst is in Kyiv, Ukraine for us at this hour. Hi, Trey.
Sandra, good afternoon. Today, Ukrainian President Volodymyr Zelensky addressed the British Parliament. He said, "We will fight in the forests, on the shores, and in the streets," echoing the words of Winston Churchill. He was really trying to rally these lawmakers to put more and more pressure on Russian President Vladimir Putin and officials in Moscow. He's calling for tougher sanctions in addition to any sort of military support that can be given to the Ukrainians. This could be in the form of anti-tank missiles, anti-aircraft batteries, and even ammunition. And he even doubled down on his calls for a no-fly zone, despite the fact that members of NATO have been very resistant to this idea. Zelensky continues to address lawmakers around the world leaders, and people who can make decisions and help the Ukrainian people in this time of need, nearly 2 weeks into the Russian invasion. But he's also speaking today directly to the civilians in Ukraine, urging them to maintain a high level of resistance and prepare for a fierce battle ahead. Here's what he had to say earlier today.
Snow fell. It's that kind of springtime. You see, it's that kind of wartime, that kind of springtime.
This guy's awesome.
But we will win.
President Zelensky releasing videos outdoors today showing the Russians where he's at, despite the fact there are credible reports against his life, reports about Russian hit squads coming to this capital city, and the fact that the U.S. believes he is #1 on the Russian kill list if they make it into the Ukrainian capital. John, Sandra?
The announcement, Trey, earlier today by President Biden that the United States is going to ban the import of Russian oil. The UK announcing similar things, that it's going to begin to phase out importation of Russian oil. Any response from folks that you've been talking to there on the ground in Kiev about this latest move?
Every time we see a major move here, the response from officials in Kyiv is basically what took them so long. There is this level of them being thankful for the support from the United States, but also a question about why it didn't come sooner. Last week, when I talked with Ukrainian President Volodymyr Zelensky, he said the same thing. He gave a message of thankfulness to the Biden administration and the officials in Washington, but also doubled down on this idea, asking the question, why didn't this happen sooner? And he said it was a pity that it took so long to receive this level of support. So I think the main message we will continue to hear out of Kyiv is one of urgency. It's one of despair, and it's one of a true need for assistance as the Russian invasion continues. John?
Sandra? It's the same thing with weapons as well. You got all these countries that are rushing to get weapons into Ukraine, and you've got the Ukrainian leaders saying, why didn't you do this back in November? Trey Inks for us in Kyiv with the latest. Trey, thank you. Sandra?
All right.
Wow, the Mac Pro is supposed to be 80% faster. I'm sorry, the Mac Studio with the M1, 80% faster than the current Mac Pro, which is what mine is, which keeps freezing. That's incredible. 128 GB RAM, 8 TB storage. That Mac Studio sounds cool.
9,000 permits to drill now. They could be drilling right now, yesterday, last week, last year.
The oil and gas industry is literally sitting on stockpiled leases and permits. Over 9,500 permits have been issued that are not being used. They've not taken advantage of the permits that they have on the land that they have.
So it's not any of their policies that are to blame for skyrocketing prices. It's the oil producers' fault. They're not tapping in to the access that they already have. Joining us now is Claire Chase. She is Director of Government Relations at Mac Energy Corporation.
Yeah, we talked about this quite a bit earlier as well.
Leases in the state of New Mexico, which I believe is the second biggest producing state in the country. Claire, great to have you here. As promised, we promised our viewers yesterday after we heard this exchange with Jen Psaki and our own Peter Doocy at the White House yesterday. Listen.
You say that you're going to do everything that you can to reduce the impact that high gas prices have on Americans. We're asking other countries to think about maybe pumping more oil. Why not just do it here?
Well, to be very clear, federal policies are not limiting the supplies of oil and gas. Let me finish. Let me finish.
An executive order his
Peter,
first week that halted new oil and gas.
Let me give you the facts here. We are one of the largest producers with a strong domestic oil and gas industry. We have actually produced more oil. It is at record numbers.
All right. So, Claire, you have a real insider's look at this. First, take on the 9,000 untapped oil leases in this country. The administration.
I have to just say really quick that new Mac Studio looks amazing. It's just a little box that you can put on your desk. They don't let us stream it, otherwise I'd be streaming it. But it looks incredible. 8 TB of SSD, up to right. So I mean, they're gonna charge a fortune for this freaking thing.
Other issues that the federal government puts on oil and gas companies. For example, we also need rights of way that allow us to build the road to the lease or to lay the line in order to ensure that we can move our product. And so, we have that issue, but then we also have the same issues that are facing every other industry today. We have the same supply shortages and we have labor shortages. So one, we can't find the people that we need to be able to man up a drilling rig. And two, we can't even find things like steel casing, which is what protects the groundwater when we drill through this oil. So I think what the White House is saying is disingenuous at best.
Because I keep saying, wouldn't it be obvious if those oil companies, like the one you're with, and I know that you've been in the oil business since you were a kid, since the day you were born. I mean, wouldn't companies want to take advantage of record high oil and gas prices? Wouldn't they want to take advantage of $130 oil prices? But still, the president said this morning when he announced the ban on Russian imports. Listen.
Nah, right off. Apple Studio Display is a 27-inch screen.
Back domestic energy production. That's simply not true.
Nobody better to respond to that, Claire.
Well, it is true, and it's true because the regulatory environment that they put on us as well. I mean, from day one, President Biden has signaled that he does not want oil and gas production on federal lands. As your reporter Peter Ducey had mentioned, he, on an executive order, paused the ability to lease federal.
I'm surprised they don't talk more about the Keystone Pipeline.
He canceled Keystone Pipeline. He's done more to harm this industry than he has good. And so for him to say, well, my administration's not doing that, it absolutely is. We can read the tea leaves. We hear the signals that you're sending. And, there's no reason then for us to want to really ramp up in a political environment that is going to try to then turn around and shut us down or fine us millions upon millions of dollars. And so the answer to all of this is truly for them to go back to the Trump administration policies that allow us to drill in the cleanest, most environmentally responsible way in the world and provide the oil and the natural gas that America and the European Union and the rest of the world needs. We don't need to be relying on Iran or Venezuela or Saudi Arabia. We can do it right here if the president would just let us.
Claire, let me just finish with this point, because one day in the briefing room, Jen Psaki, when she was touting those 9,000 untapped leases, she said back to one of our reporters, call them, ask them why they're not tapping. So is it fair, based on everything you just told us, to say the reason why you're sitting on these leases and not tapping them, even though oil looks very profitable for you at $130 a barrel, is because there's too much risk involved and uncertainty under this administration? Is that fair?
That is 100% fair, Sandra. I think we really need to know that once we start drilling for oil, that we're going to be able to continue to produce it without, getting fined or without new rules and regulations coming down on us.
Yeah.
We really do an incredible job of protecting the environment and protecting air and water.
Yeah, I'm going to pull back. They're making the counter argument here, which is a very common complaint against local production, is water contamination from fracking and such. Let's go ahead and listen to CNBC for a bit.
The reason this is coming up is because we heard from Adam Jonas yesterday, and I've heard from other analysts today, and almost all of them say the same thing, which is, I'm not sure where the auto industry is going to get all the nickel that it's talking about.
Right.
Somebody is going to be left holding the bag, or not necessarily holding the bag, but they're going to have to bring down their estimates. At some point, they're going to say, well, we thought we were going to build 1 million EVs. It turns out we're only going to build 500,000.
And this is the analogous, but also the issue for the.
Yeah, I hear from Twitch. A question is, Putin banned the export of raw material outside Russia. I saw that headline as well. Until December 31st, there's a ban of that. I still haven't gotten more details on that, but I'm paying attention to that too.
Possibly willingness to want to buy and desire to want to buy. So they're going to have to move heaven and earth to get all these vehicles produced.
And it's going to be a lumpy uptake when it comes to EV sales.
Yes, but it's still, it's just the latest. They must be losing their minds. Every time they turn around, it's something else. And now nickel, right? Who would have thought this 6 months ago?
Absolutely.
Pretty crazy. Phil, thank you very much. Phil LeBeau. Coming up, the Fed meeting kicks off 1 week from today.
Yeah.
The first on the street to up their target to 7 rate hikes is sticking with that despite the Ukraine war. B of A's Ethan Harris on the Fed's dilemma next.
Okay, looks like there's an update. Poland to transfer all MiG-29s to U.S. airbase in Germany at the disposal of U.S. government. Oh, TBD what they want to do with it. Interesting. Yeah, I don't know why it's taken so long to get some of the planes over to there. There's been a lot of talk about this. All right. We'll do a summary on the whole Apple event too, which I'm kind of just paying attention to on the side.
This is the feeling that we're getting here.
Wow.
They said, like,
Kara,
that's
really something. Do they believe this will work or have any influence over Putin's next moves?
So that's a good question. So we have like two sides here, right? The emotional one, the world is standing behind us, and the practical one is like how fast it would work, because the essence right now obviously is a time, and how fast Putin will feel the necessity to bend the knees, and how fast he will be like.
Putin ain't bending his knees. He don't bend his knees. Does he even have knees? He just rides horses.
Waiting for. We would like to remind Mr. Scholz on his promises that were given, because what we see right now is like trying to still remain with the Russian gas and oil for some of the European countries, and that then the sacrifice that American citizens are doing, that it will be just like not enough, because Russia will still have the markets. Russia will still be able to sell its resources. So let's see if it works. I can tell you like what would definitely work. And you heard me saying that, and I will say it once again, because this is for my people, because this is important. The no-fly zone will work. The jets that we need to receive will work. The additional Air Force protection will work, because it will give us the power to answer to the force with the force. And the military support needs to go along with the economic support. And we really see economic support from the United States. And we want to see the military support, because this is what we need badly. Because this time that is in essence, we are buying it with our own life right now, with our blood that we are spilling for sanctions to have time to work.
Starting price on this Max Studio thing, $3,099. $3,999.
You should have done it earlier, because he understands.
Display $1,599.
New sanction means we will have to give it like a month to work, a month Putin to get this feeling, and for people of Russia to start worrying and to start being really angry. And for this month, we will lose so many people in Ukraine. We will lose children who are dying right now of the missing water supplies. We will lose people who are in the cities under the siege, and our cities will be destroyed. And this is the war that we are all at together. And
I'm sorry. They're going to have the M1, the Studio. You'll have two options. The starting price for the M1 Max chip version will be $1,999, and the M1 Ultra chip, $3,999. And you could order today, available March 18th. Wow, cool.
When Russia first invaded, would this invasion have even gotten off the ground? But you mentioned, again, speaking of getting off the ground, this idea of a no-fly zone. Here's what the NATO Secretary General Jens Stoltenberg said about it yesterday. He said, quote, "The only way to implement a no-fly zone is to send NATO planes, fighter planes, into Ukrainian airspace and then impose that no-fly zone by shooting down Russian planes. If we did that, we'll end up with something that could end in a full-fledged war in Europe involving many more countries and causing much more human suffering." What do you say to that argument?
So first of all, there are other ways to provide us with a no-fly zone. And as we
just order today, so I don't actually think you can order it just yet. Because I just looked on their website and I still only see MacBook Air, MacBook Pro, iMac, Mac Pro, Mac Mini. If anybody else sees it come up, let me know.
Second, we are getting more.
I don't know what Prime Sub is, Mr. Dev on Twitch. I'm kind of clueless on Twitch, honestly.
About politics.
Let's go back to CNBC, by the way. I'm kind of tired of this person. There we go.
Economy. It's about a process of gradually getting back to normal, putting the funds rate at a place where it should have been. Probably we should already be on that path right now.
The 7 rate hike thing is this is not a surprise. This shouldn't do anything for the market.
He thinks a recession and demand destruction are kind of the only ways to rebalance that market. What would your response as an economist be to that?
I disagree. I mean, this is a serious shock. For the U.S., it hits an economy that's got strong momentum, a lot of savings in the household sector where they can, at least for middle and upper income families, can handle the higher prices. It is tough on low income families, no question about it. But there's a pretty strong economy here. I don't think this is a big enough shock to cause a recession. I think we would need kind of a worst case scenario with a major shock to the oil markets to start talking about a recession.
Looks like the Apple event's over, so I'll give a little lowdown here in just a sec.
And that's why people still are worried about a continued move higher. What about those who say, well, 2008 sent us into recession? This pattern always plays out.
Yeah, well, let's remember, if you go back into history, you really have to kind of think about all the events that were going on at the time. the 2008 experience is called the Great Financial Crisis for a good reason. What caused the recession was primarily the collapse in credit markets, the banking system, and the housing market. Oil was kind of an add-on to that. Certainly, it added additional pressure. But my view would be that if it had just been higher oil prices and you didn't have all those other problems, we probably would have coasted through that period with weak growth. So I don't think that proves that oil is this all-encompassing thing that always creates recessions. Recessions usually require a combination of factors, and oil is just one of them.
Ethan Harris, thank you for your time. Sticking to your call, we appreciate the explanation. Thanks for joining us today. Ethan Harris with Bank of America. And as we go out here, let's get a quick check on markets right here. The Dow is up as much as 500 points.
Apple down now 0.1%.
It's only up 43. Power Lunch starts right now.
Yeah, so it's really interesting. Okay, it doesn't necessarily say that they're going to be available today, that new computer. And heads up, before you like run an order of that new studio or whatever, they do think they're going to also announce a new Mac Pro at some point in the future. But not yet. So, and the Mac Studio is not on their website yet either. I think I already said that. But if they announce a new Mac Pro at some point in the future, it'd be interesting to see how many people end up buying the Mac Studio. And then, oh yeah, order now. Okay, wait, no, now it's just almost there. Okay, they literally just updated the front page of apple.com. I'll go there right now. Hold on. Apple. Let's see what we got here. So here's the order now for the studio display. I personally don't think the displays are worth it, but if they do come out with a new Mac Pro, maybe it makes sense to wait to see what the specs and pricing points are of the Mac Pro, then just hop into the Mac Studio. That'll be quite interesting. Replay will be available shortly. All right, here's what we announced. This is kind of what we've gone through already. The Studio, the cheaper SE and such. Okay, we'll wait for this to load a little bit more. Let's go ahead and look at some of the sticks while Apple gets their website together. Oh, look at that. Wow, what a crazy move here in the markets, folks. Mac Pro typically for the September launch. Oh, is that true? Thank you. Okay. Oh, that's awesome. Thank you. That's so cool. Thanks. If you have Amazon Prime, you get a free sub that normally comes. Oh, wow. That's cool. Thank you. Kevin talking about consumer product prices. Like, actually, no, I do care. Absolutely. $10,000 fully loaded, including the display. Again, I think the what's it called? The display is a ripoff. That's just my take. If I could, once their website loads and we can actually go to like the configure, that'll be fun. We'll do a little bit of a review. No, not there yet. Anyway, so we'll play with that in a little bit. iPhone SE and such. Okay, cool. So let me see what else is going on. Civilian evacuation from Mariupol fails again. That's just terrible. They just can't get their act together in a corridor negotiation with Ukraine. It's so sad. We should do a broad update on Ukraine. We could do that. I got enough info here, but let's listen in here for a moment.
Though the U.S. only gets about 3% of its oil from Russia. So does the U.S. produce enough to make up for that shortfall? With us now is Francisco Blanch, head of global commodities for Bank of America Global Research. Francisco, welcome. It's always good to see you. I want to go through several questions very quickly. I know that right now you are in Madrid. I know that gasoline is not priced in gallons there, but what would a gallon of gasoline cost in Madrid right now? Do you know?
You're getting close to $8 per gallon.
$8 per gallon.
Quick shout out, by the way, to those of you who are course members and those of you who joined today. Stocks, Psychology, Money, and the new course, Wealth, and the Path to Building Your Wealth. More lectures coming for that. Super exciting. So thank you to those of you signing up. That special March coupon is down below. Let's keep listening here, and then we'll talk about Ukraine in a moment.
I wonder whether you think that's true. Let me play a soundbite and get your reaction to some further comments he made.
The United States produces far more oil domestically than all the European countries combined. In fact, we're a net exporter of energy. We're approaching a record levels of oil and gas production in the United States, and we're on track to set a record of oil production next year. In the United States, 90% of onshore oil production takes place on land that isn't owned by the federal government. And of the remaining 10%, that occurs on federal land, the oil and gas industry has millions of acres leased. They have 9,000 permits to drill now. They could be drilling right now, yesterday, last week, last year.
Francisco, how do you react to that? Is the United States a net exporter of energy? Are we on track to set records in oil production? Can we ramp up production to take the place of the 3% that we import from Russia? What are the facts here?
So I would say yes, yes, and yes to all three questions. I think for quite a while, the Democratic Party turned in with a pretty green agenda, and that seems to be tilting now that prices at the pump are going up and inflation is biting into consumers' pockets. So we're saying, I think, is a major U-turn.
I actually do respond to you on Twitch. Yeah, I mean, when I'm looking, I can see y'all on Twitch. Russia hacked Discord to get valuable info from Kevin's channel. No. Yeah, this is true. Yeah, we've seen a lot of... I wonder if the down detector is showing this up. Let me see. Down... I guess we could look at it together. Let's see. Down detector. Let's see what we got. Yeah, so Discord's getting complaints. Spotify, Wiki had some. A lot of Facebook. Look at this. Cloudflare, Twitter a little bit. AWS, Google, Amazon, Snapchat, Netflix, TikTok soon. Yeah, you're getting a lot of hits here. Etsy. That's a lot. So a lot of hits.
Profitable to bring it back at these price levels. Now maybe it is. Am I understanding?
Now maybe it is, and now we need to see also if the federal government supports the industry or continues to pursue a green agenda. One of the big things that could come to the fore is the Keystone Pipeline, which was, as you know, revoked in the first day in office of President Biden. Approved on the second day in office, President Trump. So it's been a big contentious pipeline, I would say, politically. But, that would be a pipeline that could bring some Canadian barrels down to the U.S. Gulf Coast as well. So, so that's one idea. Then there's also crude by rail. You could see more crude oil coming out of North Dakota and other basins if the price is right and the government supports it.
I want to ask two other questions. I've always been curious with the Keystone Pipeline. Has the fact that the Keystone Pipeline has now been halted by this administration, has that meant that one drop less of oil has come out of the Canadian soils?
Good question.
At all? In other words, or is it just been sent over to the west coast of Canada to be shipped to wherever it goes to be refined or whatever?
There's no transportation capacity to the west coast of Canada from Alberta, so there's no pipeline. So actually, the Canadians have their own problems with some of the lands that go from Alberta.
So it actually has then meant that less oil has come out of the ground that otherwise would have.
Yes, it has. I think if you had Keystone XL in place and you had support for Canadian oil and gas production, you would get more energy out of Alberta. Yeah.
Let me ask you a question that is a simple one that a very smart friend of mine posed to me earlier today. He said that the gas in his station is going up 2 or 3 times a week and has gone up roughly, let's say, 75 cents or $1 in the last couple of weeks. But the gas that is at that station is not doesn't derive from the $130 a barrel oil that is priced today. It derived from oil that was brought out of the ground at a much lower price or sold at a much lower price. So are those retailers, are those companies profiteering by pricing gas at this higher price that actually where the cost of the good was much lower? Do you understand what I'm saying?
Sure. I'm not sure. I'm not sure that's right. I mean, each company does their own hedging activity, and they buy oil and turn it into gasoline, or directly buy the gasoline or the diesel, and they buy at different price points. Distribution is a very competitive business. At the end of the day, if you have to buy the gasoline gallons today to sell through your distribution network, you're definitely paying a higher price than if you had bought them 2 weeks ago. But that means you're going to have less people coming through your gas station, right? It's going to take people. People are going to go elsewhere, right? I mean, there's a competitive market. So, I'm not sure that necessarily. Maybe it's his gas station is a little higher.
I'll tell him to go somewhere else. I'll tell him to go down
he
the
can
street.
go somewhere else. It's a free market out there.
Okay, now we've got the ordering page up for the Apple Studio. So, but we don't have the replay video up yet. I really wanted the replay video up. But anyway, if you want to check it out, that's available to do so. Let's just play with it really briefly here. Okay, order now, available 3/18. So you can order this now, and it's already the more expensive one with the Ultra chip has bumped up to March 23 to March 30 here. What happens to the macro environment when inflation continues during recession? Oh, well, I mean, it won't, because a recession will reduce aggregate demand substantially, and prices will have to come down. Margins will come down. And so if you go through a recession, you're going to see companies and stocks are going to get hit the worst. The earnings are going to suck. But anyway, okay, so replay is up. Oh, is the YouTube replay up? Okay, good. But let me quickly look at this. So how much can you upgrade this? Let's see here. Customize your Mac Studio. So, okay, 48 core or 64. Ugh, for $1,000, I probably wouldn't do that. Okay, absolutely the memory. This is insane, but it's just so inconvenient having a smaller storage. Let me see what mine is. The storage I have right now is, I have an 8. Yeah, so I went for the 8T personally. Although I barely fill it up. Well, mostly because I delete so much of my stuff when I'm done with it. Okay, there's not actually terribly much to customize here. And the cheaper one goes down to 24 cores. Oh, and they don't let you go to the 128 GB memory on the cheaper one. Of course they don't. Oh, they're so smart because everybody wants the 128, but they would take the smaller cores on the CPU. Oh, that's funny. Well, they're smart. Apple knows how to sell. Oh my gosh. People are buying this like crazy, folks. Look, it just went to April 6, April 13. Because this was March. We just saw it. It was March 23 to March 30. It just backed up another, what is that? That's another 2 weeks back. So that thing's selling like cookies right now. And people want the new chip. It's not bad, actually. If you go here, in my opinion, so I would I don't know if I would do that one. I'd probably configure it like, that's just a lot of money, 7K right there, right? I don't know. Can you get away with the 5K maybe? And that's a lot. It's so much money for a computer. I mean, you could build a sick PC for this, right? But that's really interesting. I want to watch these delivery timeframes change. In fact, I'm going to take a screenshot of that. I'm not going to buy this. I'll wait for the new Pro. I mean, mine's not that bad. It is a Pro. I'll wait. But very, very interesting. So we'll keep an eye on that. Now, okay, somebody said I could get the replay vid because I wanted to pull the replay video and then I want to do sort of a recap of the Apple event. All right, give me a sec. I'll try to find it. Apple is out of control. Yeah, you don't say. AAPL. Apple's negative right now, down to 158. So buy the rumors, sell the news. Jeez. All right. Oh yeah. Okay. Cool. Their stream is up, which is cool. So we'll do a quick recap. Give me 1 sec, and I will do that. Let's listen in here for a moment.
They're not in the really long run expectations. They can't afford to let them get into the long run expectations.
And what does it mean to you that we've seen real rates collapse back towards negative 1%? We've seen inflation break evens on a 5, even a 10-year basis, kind of moving out to new highs. What does all that tell you?
You know, that's a risk-off move. Low real rates are sort of a flight to, hey, I'll take a negative 1% real yield for 10 years now, not 60 bips anymore, because, you know, my alternative is being in the stock market or being in places that are going through turmoil. So it's really a sign of risk-off. The fact that the break-evens are going up in the front end is more of a sign of the temporary dislocation in the commodity markets. If you look at the 5-year forward, 5-year break-even inflations, Kelly, and I know that's, you know, kind of a bond geeky stuff to throw at everybody, but it's something the Fed does look at. So you should think about it. It's where the market expects inflation to be.
I talk about those break evens all the time. He's absolutely right.
Or through the tips market, it really hasn't budged. It's still just above 2%, and it's been there for the better part of a year. So the inflation expectations are not dislodged now, and the Fed wants to make sure that stays the case. And I think that's why they have to be, or why Jay has had to be a little more hawkish than people thought he might be.
How hawkish do you expect him to be if the situation with the economy gets real hinky? In other words, slows down a lot globally. I mean, he's kind of, I mean, there's no Fed put here, is there?
No.
There is a Fed put. You know, Kelly asked me that the last time, and I tried to say that the strike on the put is just a lot lower. Or you could think about it as Fed insurance. You have Fed insurance in your market, but your deductible's higher than usual. You're gonna have to pay more of a loss before they pivot to help and insure you. So I think that's the right way to think about it. And importantly, look,
How often have I had to replace my computers? Yeah, I would agree with. I mean, 3 years honestly is this. I mean, the one behind me right here is I don't use it at all anymore, but usually I would be at a new iMac probably every 2.5 years, usually for an iMac was like my life expectancy for them.
3.8% unemployment. I mean, the Fed doesn't have a lot of reasons to be kind of giving some cushion here to the marketplace, at least yet. And I think they're not going to be your best friend like they've been in many other crises until it gets a lot worse than it is today. And that's been our message at Jefferies all year. We were saying that back in December when the market was at its highs. It's just not the same Fed with this inflation structure that's in place. And by the way, it would change a bit if we start to get negative payroll numbers, if we start to see the JOLT survey collapse, if we start to see the housing market crack, that can change. But we're a long way from that. And even a little crack isn't probably going to bring them to a place where the comfort would be that helpful, at least in the near term.
Yeah, it is not the Tepper formulation anymore, you know, from the past decade that either the economy's great or they'll come in and support you. Inflation makes it different. Dave, thanks so much for your time today.
Yeah, always good to see you, Kelly.
Dave Zervos with Jefferies.
All right, coming up, the executive chairman of Telluride discusses the changing dynamics of the liquefied natural gas market and whether his company can increase output. Plus, the House will vote today on their own proposed Russian oil ban. We'll talk to a congressman about some of the provisions that were left on the table. Plus, higher jet fuel costs pushing up the price of airline tickets. But by how much? Yeah. Top analysts crunching the numbers. All that when Power Lunch returns.
Yeah, the inflation's going to be something, folks. Okay, we're going to do a little review here of Apple in just a moment. I'm almost done prepping it. It's a cool event. Okay, cool. No, All right. So can we also configure an SE yet? Let me see here if we can. iPad Air, learn more. So no, not yet on the SE. It looks like on the SE. Oh, okay, there we go. Pre-orders starting 5 a.m., 311. So 429 as a starting price versus 399. Dang, that's an increase of 7.5%. They match CPI. That's funny. Oh, how much do we want to raise the price of the iPhone? What's CPI? 7.5%. How about 7.5% then? Imagine that's how they they come up with it. I mean, I guess you can't really blame them, you know. Hmm. Good coffee. All right, let's do our little Apple event review here. I do want to, before we start it though, quickly do. I'm going to quickly look here again. Okay, no, that's the same. Okay, April 6th to 13. So that hasn't changed yet. But yeah, that definitely moved back a solid week, 2 weeks. I'm about to raise my prices, Patrick. Patrick can join the train of raising prices. Prices go up over time. All right, let us do a little bit of an Apple review. In 1 second. Da, 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 da. Here we go. Okie dokie. All right, so I want to look at the stock too, and then we'll start that. All right, here we go. Hey everyone, me Kevin here. This is a reaction to the Apple event that just took place. Apple was, so far throughout the day here, the 6th most traded stock on the day. Does look like we had a little bit of a boost after the Biden event, which is when we saw the NASDAQ and the S&P 500 boost. And we did see some excitement throughout the Apple event, or at least leading up to it. But as usual, traders, and when it comes to Apple, you almost always see buy the rumor, sell the news at Apple. So Apple stock down now about 0.62. So this is off of its highs of about 181 down to 158 right now. So the first big announcement was the iPhone SE. The iPhone SE first came out in 2016. It's the smaller, cheaper iPhone. And the iPhone SE is well, let's see here. It's coming out. We're gonna have pre-orders available on March 11th, and it looks like they'll be available for delivery starting March 18th. Hold on a second here. Where did my video go? Oh, there it is. Dang it! Misplaced where my video went. All right, I'll fix that. That's all right. There we go. All right, sorry. There we go. Now we have this. So here's the iPhone SE, the new one. Again, this is the refresh of the 2016 model of the iPhone SE, which they've refreshed every single year. They're coming out with this newer green option for it as well. It'll use the A15 Bionic chip. That's a 6-core CPU. And this is the... Hold on, I'm screwing this up. The green is actually for the Pro that they came out with. I wrote that down here. New green option for the iPhone 13. Yeah. That's right. They put those together, and then they talk about the SE. All right, fine. Let's go forward to the SE. Pre-order Friday, March 18th. That's the pre-order Friday. What is it? That's this Friday is the 11th. Okay, hold on. I'm screwing my thing up. That's all right. We're going to learn it together. Where is the SE? Here it is. Tim announces the SE. Okay, I get it. I screwed it up. No worries. Okay, that's fine. I understand better now. So we'll redo that. Give me one sec here. White House is working on a time for Biden to meet with family of Trevor Reed, who's being held in Russia. Senate Republican McConnell says omnibus spending bill will include $14 billion in aid for Ukraine. Let me get these updates, and then we'll come right back to the Apple. 14 bill in aid for Ukraine. Okay. All right. So no major other news there. All right. Let's go back to the Apple one. Let me do this one correctly here now and actually get this done properly. So again, we'll go back over here. All right. We'll take two. Usually I can one take. There we go. Hey everyone, me Kevin here. In this video, we're going to go through my reaction of the Apple event that just took place. Apple did hit, obviously, a high this year of 181, down to about 158 right now. As usual, we got buy the rumor, sell the news. We did have a little bit of a run-up after the Biden event. We saw that in the S&P 500 and the NASDAQ, but we did also see rotation down in the SPY and the NASDAQ at the same time as we got sort of that sell the news on the Apple event. It was the sixth most traded stock today, and they did come out with a new green color for the iPhone 13 and the iPhone 13 Pro model, but the iPhone SE has had a little bit of a price increase. Here's Tim Cook discussing the iPhone SE. The iPhone SE first came out in 2016. It will be available for pre-order at 5 a.m. Pacific time, March 11th, which is Friday morning. It will be available for deliveries on March 18th. It's using a new 6-core chip, the A15 Bionic chip. And previously, the iPhone SE was using the A13s from back in 2020. So this will be a nice big boost for the SE. It's also going to be taking advantage of 5G connections, which we were talking about that on the live stream earlier, that not a lot of people actually get to use full 5G. It seems like it's kind of rare that we actually get full 5G, but at least now it has that capability. And I expect as we expand the 5G networks and we finally deal with how 5G ends up clearing with like the FAA, because there have been a lot of blockages to the expansion of 5G because of concerns regarding planes and the FAA, Federal Aviation Administration, then maybe eventually we'll actually get more 5G availability. So anyway, here they're comparing the CPU to the iPhone 8. They're showing that it's 1.8 times faster than the iPhone 8. Obviously, at this point, the iPhone 8 is a pretty older model. What they're really trying to do here is make sure that they're not losing customers for like models and the more expensive models, since obviously the iPhone SE is targeted to the lower entry point demographic. The iPhone SE is going up about 7.5%, matching inflation, going up to $429, excuse me, again, starting to ship March 18th. A lot of folks talking about how this is going to be big for emerging markets, still kind of expensive, though, potentially for everyone in the emerging market space. So, but again, you definitely saw an inflationary increase there in the iPhone SE price. The next thing to talk about is the iPad. So they're coming out with a new iPad Air, which I just briefly want to give my thoughts on the iPad Air. I really like the iPad Air. I have the iPad Air right here. And if you haven't bought the Magic keyboards for them yet, I really recommend them. I use them almost every single day, and the keyboard seems really expensive because it's like $300. But the keyboard seems really expensive. But in my opinion, it's always been worth it, and the iPad actually stays on it pretty decently. So I really like these keyboards. I have one for my iPad Air and for my iPad Pro that's right in front of me. Really good. I haven't noticed that this is any slower than the iPad Pro, even though I know it is. They are talking about how this new iPad Air, which is not this is an old iPad Air, but they're talking about how the iPad Air is expected to have 60% better performance over the older iPad Pro. It'll also have a 5G chip. And they spent a lot of time comparing how the iPad Air is going to have a better front-facing camera. So for, FaceTime or conferencing or whatever. So big update to the front camera. They're also updating the rear camera. It's got the same USB-C port, which it has right now. We are expecting that the iPad Pro is likely to get the new M2 chip later this year. So the iPad Air is going to be getting the M1 chip. Now, this gets a little confusing because there's a lot to talk about with chips. So you got the new iPad Air. That'll get the M1 chip. Then you're probably later this year going to get the iPad Pro, and that's expected to use an M2 chip, but that wasn't announced at today's event. What they did announce was the new M1 Ultra chip, which we'll talk about in just a moment. For those of you who aren't familiar, I suppose it's worth just kind of comparing the Pro and the Air in terms of size. So since I have both of them here, you can kind of see the difference here. This is very comfortable to hold with one hand, the iPad Air. This is not. This gets heavy with one hand. This is great with one hand. And so you can kind of see that size difference if I put them over each other right here. This gives you a little bit of a size difference. One thing that I really like about the Pro is that it, when I annotate, I like to use GoodNotes. A lot of people ask me what software it is that I use to annotate on. And I annotate a lot of PDFs on GoodNotes. And when I have the PDFs vertical, I can get the entire screen on my iPad Pro, but I can't on my iPad Air. So for example, when I go into like GoodNotes like this, and I want to highlight articles or whatever, I can do that really easily on a full page on the iPad Pro. So I personally really like that about the Pro. But in terms of taking up desk space and carrying it single-handedly, the iPad the iPad Air is much nicer. I like the iPad Air for actually like traveling with it or whatever. So new iPad Air is exciting. The new iPad Air is coming out with a starting price of $599, and it'll also come out on March 18th. They're calling it their most versatile iPad ever, made with 100% recyclable material, which I always think that's interesting when they when they say things like, oh, it's made with 100% recyclable material. Kind of implies that it's made with recyclable material. It's just made with stuff that could be recycled, not made with recycled material. A different little note there. Also available for orders March 11th. So that's the iPad. Now we can take a look at some of the specs here. This is the replay here, 2532. Let's jump on over here to get the pricing. You can see that about 25 and 30 seconds into their stream here, $599. That's the starting point. Starts at 64 gigabytes, and you can get all the way up to that 256. Now, here's some more of the specs. We can just pause on this really briefly here. 12 megapixel camera, 4K video. Again, I personally mentioned on my live stream earlier, I wish they would just get rid of the back camera and save me the money, like charge less for the iPad, because I don't like using the rear camera. But somebody mentioned in our live stream earlier that a lot of people use the LiDAR sensor for the iPad Pros, and they use that for 3D scanning. Pretty neat. So then we've got some more iPad specs. Obviously iPad pencil compatibility, really good, by the way. I have an iPad pencil for each of my iPads, and I also keep a spare backup pencil just in case one of them dies. Then the next announcement that came out of this event, they had a quick note, by the way, that Apple TV Plus is having its first exclusive sports deals. They'll have 2 exclusive MLB games that'll be streamed with Apple TV Plus. I believe they mentioned that was on Friday nights. So I think that's their first exclusive Apple TV sports deal. Okay, let's now talk about the M1 and the M1 Ultra. So you can see the M1 lineup in their stream. About 27 minutes in is when they start talking about the M1 lineup. And so this is the M1 lineup here. You went from M1 to M1 Pro to M1 Max. And they announced now the new one, which is the M1 Ultra right here. So the M1 Ultra, this is supposed to be their new chip that's kind of like they described it as combining 2 M1 Max chips together. The M1 chip is this new Ultra chip. I don't believe is in the iPad Air. They made that pretty clear that this was just sort of a second announcement, but I think there could be some confusion on that. And again, it connects 2 M1 Max chips. The reason they really sell the M1 Ultra chip here is because they're introducing their new Mac Studio computer, which we'll talk about in just a moment. And they talk about how this doubles has memory of 128 GB, this M1 Ultra chip, 20-core CPU, 8 times faster than the M1, 64-core GPU, which is crazy, and 32-core neural engine for AI. Really incredible new chip. So anyway, this chip is available or not available, depending on which one you want to choose, in their new Mac Studio that they announced. They announced that about 40 minutes into their presentation today, and that's their new desktop computer here. Their new desktop computer is kind of seen as a smaller Mac Pro, more powerful than the Mac Mini. Also has a new monitor that comes with it. Well, it doesn't come with it. You could pay for it. Another Retina monitor. Now, I want to say I'm actually using right now to record this video a Mac Pro. And in addition to having the Mac Pro, I have the Mac Pro display. Now, if you're not familiar already with the Mac Pro display, let me show it to you. Because it's expensive and people are like, oh, this is a game changer. You could move it from a horizontal position to a vertical position. And people go crazy for this one, or did when it first came out. And a lot of people made fun of it because the stand was ridiculously expensive. I think the stand was somewhere around $1,000 alone for the stand. Let's pull it up over here. Yeah, here you go. So this is the Pro Display XDR. This is the old one that's not with the new studio display that they're releasing now. And here's that stand that's quite expensive. So I have this, and you could get nano textured glass or standard glass. Here's the Pro Stand. Pro Stand, $999 just for the stand. It allows you to rotate that screen, right? Let me just put it this way. Even though they end up announcing a new screen as well with this Mac Studio, this screen's not worth it. Like, I can't stand the fact that I spent $5,000 plus $1,000 for the stand on this screen. It's what I'm looking at right here. Not worth it. So just my opinion, the screen, not worth it. I suppose maybe if you wanted to really like show it off to people, that'd be good. But I don't even get to show anybody it. It's just hidden over here in the background. So my take, not worth. Now, this Mac Studio, I'm very interested in this because they say that this Mac Studio is 80% faster than the Mac Pro, fits on your desk, 3.4 times faster than the fastest iMac, 80% faster. Well, we already mentioned 80% faster than the top-end Mac Pro, and that's because it's going to have the M1 Ultra in it. Now, we're comparing to the top-line version of this because you don't have to get the top-line version of it. Now, we'll go through the configuration of this so we can see the pricing of this. I personally got excited about this. It's also got some great peripheral ports here. We've got the classic USB-A's here, HDMI, audio. This is the 10 gigabit Ethernet over here. You've got 4 Thunderbolts in the back. You've also got the SD card in the slot, in the front here, along with some USBs in the front. So that makes it really convenient for actually having it on your desk if you had it on your desk. But for me, what I really like looking at, we'll grab the specs here really quick, and then we'll look at pricing this thing out. And then I'll tell you if this is something that I'm going to be pre-ordering. So here are the specs for it in terms of how far you can upgrade this. But when we go to the order screen, there are 2 options. You can get the M1 Ultra, or you could get the old version. Well, I shouldn't say the old version. It's just the older M1 chip. Let's take a look at it here. So this is the order page for the Mac Studio. And if we go to order now, which we'll jump right to order now here, here are the 2 choices. You have the M1 Max, which we saw as the older lineup of the chip, and then the new M1 Ultra. Like, all the comparisons they did are with the M1 Ultra. So if you wanted those good specs, the best specs, you go for that M1 Ultra. In my opinion, if you're going to get the Mac Studio, it makes the most sense to actually get the Ultra chip because it's the new technology. I feel like that's the reason to get it. We did notice that when this order page first came up, the order delivery dates were that you could order it now and you would expect to get it between March 23rd and March 30th. About 5 minutes after the order screen coming up, this actually got pushed back 2 weeks on both ends. So now the range is April 6th to April 13th to get the more expensive one. The more expensive one with the Ultra chip starts at $3,999 compared to $2,000 for the smaller Studio. I have to say, I suppose if I were going to compare to a Mac, like an iMac itself, though, would I potentially just consider getting the Mac Studio over getting an iMac? Maybe. Because we bought an iMac 24-inch, one of these colored ones. I bought the green one right here. And I have to say, I'm not very impressed with it. We got the most basic one for like $12.99. And it's kind of a lemon. I hate to say it. I'm a big Apple fan, but I'm really disappointed that this new computer is nowhere near as good as some of like the old laptops that I have. And I know I'm comparing to like This is a MacBook Pro from a couple years ago, but still, it's a couple-year-old technology, and it blows out of the water. They're sort of entry-level iMac here. So I suppose if I were going to, I mean, let's look at the pricing difference here, though. If we look at the iMac and we upgrade the iMac a little bit, let's go with the 1 TB. So here's about $2,000. Let's see how the Mac Studio compares. Now, one's got a screen and this one doesn't, right? But if we go on the lower end here and we compare the entry level here, look at what you get on the entry level Studio. The entry level Studio, you're getting 10-core CPU, 24K or 24-core GPU, and then of course their neural core. We don't even have to upgrade that. 32 GB of mem. That's twice as much as you're getting over here. So you're getting here, you're getting the 8-core CPU and the 8-core GPU. Here you're getting 10-core CPU, 24 GPU. I mean, this blows the iMac out of the freaking water. 16 GB of memory for the same price. Over here, you'd be getting 32. You're getting twice as much, roughly the same price. Okay, a couple $100 more if we match the storage here. And you're getting a lot more peripheral ports. You're getting almost twice as many peripheral ports for Thunderbolts. Actually, you're getting even more because you have 6 Thunderbolt ports on the Mac Studio. So I really like this Mac Studio. I think there's a lot of value in this. Because they do have that HDMI port, I personally would just get myself a cheap monitor and get this over an iMac, hands down, any day of the week. Like this whole oh, but the screen is a Retina display or whatever. I don't really care. Get me a $300 screen and a really good computer, or just build your own PC. Is obviously another option. I know PC people hate it when I make Apple videos, but obviously I use almost all Apple products. I mean, right now I'm on an Apple Mac Pro or MacBook Pro, and then there's the Mac Pro right here. So now, personally, would I buy this one? Which also, by the way, they're the display which you can buy for this. Me, again, wouldn't buy it. Way too expensive to buy these Apple displays. This is where it just gets ridiculous. But if you wanted to, here's the new 27K, 27-inch 5K Retina display. Now, what I will say, what's cool about this is it's a lot cheaper than the Mac display. The fact that you could get this for $15.99, way better. Like this is going to cannibalize, in my opinion, the sales of the Mac Pro display, because the Mac Pro display is like $5,000 plus another $1,000 if you want the nano texture display, right? That's insane. And the stand, oh my gosh, is the stand $1,500, or that's included in the price? That better be included in the price. Yeah. Okay. No, that's included in the price. Okay, thank goodness. I was going to say, what is happening here? So no, that's included in the price. That is way more affordable. And it's still a ridiculous screen. Don't get me wrong. So when I say it's affordable, again, I prefer the $300 screen. But I'd much rather do a $1,500 display here with the tilt adjustable stand, the basic stand that comes with it, or just get the mount for it, for your desk mount or whatever. Way more affordable than paying for what we saw over here, which if we go under Mac, we go to displays. This is the new one's the Studio display. This is ridiculous. The Pro XDR, I have it, 32 inches. It's upright right here, 6K display. I'll tell you, I would never notice a difference. I spend all day looking at my iPad screen, iPhone screen, the laptop screen. The big one here, not worth it. So my take. But anyway, much more affordable. This also has a camera in it, which, you know what really bothers me is that my $5,000 screen right here, the Mac Pro one, does not have a camera. And the Mac Pro doesn't come with the little fingerprint thing. I bought this keyboard afterwards. This is the Apple keyboard here that comes with the little fingerprint option here. It doesn't work with my Mac Pro. I'm like, come on, that should just be a software thing. Like, I think I spent like $16K. 10K for the computer and then 6K for display. And seriously, I can't do the fingerprint thing. Like some of the things they did, it just bother me. But anyway, no camera on the screen anyway. The Studio display, they finally fixed that. They put a 12 megapixel camera in it. I believe they also put a chip in this. I believe it's the A13 is going into the screen. Yeah, A13 Bionic inside. That's for the cameras and the speakers that they have, because they have the 6 speakers inside as well for that studio style sound. Cool. I mean, I was happy with this Apple event. Now, would I buy the Studio? Because I've also been having some issues with my Pro. Probably not. I'll probably wait for, actually I will. I'm just going to so I'll make that decision now. I'm not going to buy the Studio. I'm going to wait to see what the new Pro specs look like. Although part of me is tempted that if the new Pro comes out and the specs aren't like mind-blowingly better than the Studio, I'll either just keep the one that I have now and just suffer with some of the problems that it has, or I might actually consider downgrading to the Studio if the Studio's specs, which they are a lot better than the top of the line Mac Pro, which we have right now, which we already know that is true. The high level Studio is better than the old Mac Pros. But I don't know if it's going to make sense for me to stay in that Pro line. I might jump down to the Studio line when it comes time for a new one. But I won't buy now because I'm going to wait to see those stats, and we expect those stats to come out in September for the new Pro reveal. So that's my take on the Apple event. Hopefully you found that insightful. And yeah, let's see what Apple stock is doing now. Actually, yeah, let's see. Hey, it's climbing a little bit. We've got about 1 hour and 15 minutes left in the close on the day here. And after that, sort of sell the rumor, you're getting a little bit of climb here. Cool. All right, let's go see what else is going on in the market. All right. Let's listen in over here.
Our coverage here on Poland. I think there's been a little bit in Romania as well. How is the organization there in terms of non-governmental organizations coming to the table or governmental organizations coming to the table to help people as they cross the border?
It's been impressive on kind of a grassroots level. I showed you that housing tent. It's kind of dark right now, but across the street, the Boy Scouts are set up. So, for example, yesterday I met this guy from Israel, and he had a friend, a guy he knew from Slovakia, young guys, probably in their 20s. The guy from Israel just came in, and he showed up at that tent, and he said, "Hey, I'm here to help." They put him to work right away. They found him a job coordinating. Then the housing tent is set up here. A lot of that social media, from what I can understand, people sign up on Facebook or some other platform and say, "I'm available to host." It'll get to these guys, and they'll get it. Then we spin around just real quick, and we come down. There's an information booth over here. I mean, again, all this is not really official organizations. The Red Cross is in the distance. That's the biggest group I could see. And then right down here in the corner, there are these buses that come in constantly. So when someone comes across the border, this is pretty rural area that we happen to be, small towns, the buses will take them to a bigger city, Košice in Slovakia, and then you can connect. So, they're doing it the best they can. And it's really grassroots. Just a quick story that popped into my head. I met this guy from England yesterday. He lived in Kyiv for years. He's a high school teacher, and he got out. It was difficult to do it. But when he got out, guys, he immediately came back here, started volunteering and helping with this whole process. That's the kind of thing you see a lot.
What a great story. Connell McShane for us in Vishnenemechka. Thank you, Connell. We'll see you again soon.
Yes.
All right, Sandra.
It's just wild what's happening in Ukraine, and obviously on the border there in Poland. It's also sad thinking about how how many refugees are coming over, but also the differences in how the refugees are being treated compared to the Middle Eastern refugees. Oh, let's hear this on the Jets.
Sandra, well, it appears that the U.S. government was somewhat blindsided by the Polish statement today, suggesting that they're willing to transfer all of their MiG-29 fighter jets to Ramstein Air Base in Germany. That's a NATO air base where U.S. forces are, of course, deployed. The news has gotten picked up by Russian propaganda channels like Sputnik News. Clearly, Russia is taking note of the Polish offer to provide the MiGs to NATO. The real question really comes into place, and I think what's happening here is that Poles have obviously offered President Zelensky, who made a passionate appeal for not only a no-fly zone, but needing warplanes like these MiGs that the Ukrainian pilots know how to fly. The Poles have those MiGs. The Poles have been asking the U.S. government, saying that we'll provide the MiGs if you can provide backfill with brand new F-16 fighter jets. The U.S. does not have those in an inventory in a manner in which they can export them to the Polish government. But you heard Secretary Blinken say this weekend that the U.S. would not stand in the way of the Poles providing those MiGs to Ukraine, but that would require flying those planes from Poland into Ukraine, Poland is a NATO ally, and the Russians would view that and have said they would view that as an act of war. So now the Poles are saying, hey, we will fly these MiGs to Ramstein, a U.S. air base in Germany, which is farther from Ukraine than the Polish border. And the U.S. officials that I'm speaking to said they didn't know anything about this. And it's not clear at this time that they have agreed to.
It's such a friggin' disaster.
Right now, I would urge caution with reporting on the transfer of these MiGs. Clearly, the Poles would like to try to help President Zelensky, but it's very complicated in terms of NATO allies.
Okay, they just announced a ceasefire as well from 10 a.m. Moscow time Thursday. And then I don't see an end date here, but it does say Russia will stop firing from 10 a.m. Moscow time Thursday, ready to provide humanitarian corridors. There are also a lot of notes, by the way, that suggest that Russia could be doing this corridor announcement as a way to provide more Russian propaganda in Russia about how they're saving Ukrainians from the from the Nazis.
And I know you'll keep us posted when they do. Jennifer Griffin at the Pentagon Force. Jennifer, thank you. John.
A little more breaking news now. According to the TASS news service in Russia, it's going to stop firing from 10 a.m. Moscow time till Thursday evening to provide humanitarian corridors from Kiev, Kharkiv.
There you go. I beat him to it again. Yes.
So that's a little bit of breaking news. And now we've got some more video out of Ukraine. Brian Yen is joining us from New York with the details on that. Brian.
Yeah, John, this is brand new video from the Ukrainian military showing a destroyed column of tanks and vehicles. This is, again, drone footage from the military there in Ukraine. We also have video showing servicemen that have captured what is boxes of ammunition inside of some of these the trunks of these vehicles. We have seen so many of these videos of the Ukrainian military saying that they've destroyed over 300 tanks, Russian tanks in that country so far. We also have video coming in out of Irpin. This is the really the suburb outside of Kyiv. This is elderly people that are being just evacuated from a nursing home in that suburb. This is where that bridge was blown up by the Ukrainians to keep the Russian forces back, and where that family of 3 tragically died in that mortar attack over the weekend. And you can see it is usually the most vulnerable that suffer the most, especially in times of war, those people being evacuated there. We also have this video of a driver helping out Ukrainian refugees. This is an IT worker who has now begun driving refugees from Lviv on the western part of the country to the...
Lviv, there's a new one. Lviv. I mess up these names a lot too, though, so I'm not perfect.
This volunteer, out of so many hundreds of volunteers, doing all he can to transport people to safety, women and children especially. And then we have this video from a bomb shelter in Kharkiv.
Oh, wow.
This is a violinist. Her name is Vera Litovachenko. She's a violinist and a teacher who is playing her violin in a bomb shelter for people there who are really there trying to survive shelling that has killed at least 170 people in that city, including some 27 civilians who've been killed in that city in the last 24 hours. And that just shows you the continued resilience of the Ukrainian people. One last thing, John. We are now hearing from the International Committee of the Red Cross, a spokesman there saying that they are, quote, apocalyptic conditions right now, especially for the people in Mariupol in the south of that country, where hundreds of thousands of people are in dire conditions. They are running out of food, clean water, and are without heat and need medical attention. A lot of attention in that city right now. John.
Terrible situation across the country. Brian Yennis in New York. Brian, thank you. Sandra?
John, our nation's top diplomat accusing Moscow of mocking the notion of peace talks. Senior national correspondent Rich Edson has been traveling with the Secretary of State. He joins us live now. He's in Paris reporting from there. Rich.
Oh, good afternoon, Sandra. And this is the final stop of what was a 6-day, 7-country trip across Europe. He ended up here in Paris to meet with French President Emmanuel Macron. The reason for all of this, Macron is one of the rare Western leaders who's actually stayed in touch with Russian President Vladimir Putin. They've spoken 4 times since this invasion started on February 24th. Before traveling to Paris, Blinken met with leaders in Estonia, where he addressed Russian government comments that the U.S. and Russia should return to a Cold War relationship of what they called peaceful coexistence.
Peaceful coexistence has 2 words. The first is peaceful. And Russia is doing everything in its power to make a mockery of that word through its aggression on Ukraine. So if Russia wants to engage in peaceful coexistence, which of course, in principle, we welcome, it needs to start by actually making good on the word peaceful and ending the war.
On this trip, Eastern European countries had pushed the U.S. to ban Russian oil. We asked Blinken this afternoon how the administration would prevent even higher energy prices when it takes Russian oil off the market. Blinken says the administration is trying to ensure that energy is widely available, that Europe needs to move beyond dependence on Russian oil and gas. He says Russia's attack on Ukraine only underscores the imperative of moving quickly to transition to renewable energy. And as the Biden administration moves to steadily isolate Russia from the global economy, American diplomats are also in negotiations to revive the 2015 Iran nuclear agreement. Russia is part of those discussions. We asked the secretary whether Russia would negotiate in good faith, given this massive sanctions campaign. Blinken says Russia continues to be engaged and has its own interests in reviving the agreement. Now, one Western diplomat tells us that he expects over the next few days that there could be an agreement. Negotiators could reach something here. But he says anytime you have the United States, Russia, China, and Iran all trying to agree to the same thing, the outcome is far from certain. Back to you guys.
Yeah, that's a really good point. Russia, Iran, and America trying to agree the same. It's a good point. It's tough. It is so. I just can't wait for this crap to end. I'm so tired of this. Now, keep in mind, I'm still trying to get information on this blockade of ban of exports from Russia. Let's see if we can get that information now.
An author with decades of experience on these issues, one of the most knowledgeable people when it comes to nuclear weapons.
You're very kind, John.
So this is Russia's nuclear arsenal, at least in the western part of the country. And we were talking about this. We were both at the same event on Sunday.
Yes.
We talked about if Putin feels like he's backed into a corner, he has threatened to use tactical nuclear weapons or just nuclear weapons in general. What are the chances of Joe, if he gets backed into a corner, he pulls the trigger?
Well, that's the danger. Ironically, if he is losing the war, the nuclear risks grow. The stakes for him become very high, and he may feel like a gambler at the table who's losing his hand.
This, by the way, is the stuff that makes the market usually go down, is all this talk about nukes and nuclear retaliation.
To try to back off the West if they're losing in a conventional
Now,
battle.
would he use that against a military post? Would he use it against a civilian population?
Various options are laid out in Russian doctrine, and one is to use it against a military target. There's also speculation you could do a demonstration shot, for example, in the Black Sea,
So
to show your seriousness.
fire it from one of these facilities into the Black Sea to say, this is what I got, back off.
Yeah, or use one of your air-carried munitions to do that from Russian bases here or in Kaliningrad.
Wow, that is frightening. One of the things you mentioned Kaliningrad, because in recent days, 6 MiG-31s carrying what's called this Dagger missile. This is a hypersonic weapon we're seeing flying into Kaliningrad. This can fly at like 4,000 miles an hour. It is nuclear capable.
What?
It can carry a warhead of about 5.
Is that true? 4,000 miles an hour? That's like Mach 6, isn't it?
Hiroshima. How big of a threat could that potentially be?
Well, then if you go beyond use of a small yield nuclear warhead to something like this, well, now you're talking about World War III. This is when everything starts to escalate out of control. Something like this would easily take out a medium-sized city, a major military facility. We've passed the nuclear brink if we're talking about use like this.
Now, again, these have been stationed in Kaliningrad, which is right here. It's this little tiny piece of Russia that's sandwiched between Poland and Lithuania. They have a range of about 2,000 kilometers, or about 1,200 miles, which would put it basically approximately in an arc like that. So you could hit, with the exception of Madrid and Lisbon, any European capital.
Absolutely. That's why the stakes are so high here. You know, supplying Ukrainian forces with Stingers and Javelin missiles is one thing. Sending planes brings us a little step closer to a direct confrontation. And of course, something like this would be a direct hit on NATO Europe, and that would require a massive U.S. nuclear response.
So this is all terrifying.
Yes.
Do you see an off-ramp here? How does this potentially end?
Well, this is the closest we've been to nuclear war since the early 1980s, when there were mass demonstrations in the street and when both sides were afraid of it.
Jeez, man.
What that tells you is that you've got to arrive at some kind of diplomatic solution here. It's possible that either you...
Thank you for... somebody here is fact checking 4,000 miles per hour is correct. That just seems insane.
The statement by Zelensky today that Ukraine would no longer seek NATO membership, at least put that on hold, is one step towards that kind of diplomatic relationship solution. You've got to...
No, see, if I type into Google MiG-29 speed, I only get 1520. I have never heard of a jet flying 4,000 miles an hour. Like I said, that's like Mach 6 or 7. Like, I don't even know if Elon Musk's rockets, they probably go a little faster. They're probably like 5,000 or something. I don't know. I'm not an engineer for this. That 4,000 just seemed like wrong.
Zelensky is what is moving markets at the...
Oh, the missile. Oh, that makes sense. The missile goes that fast. Okay. Yes. That would make sense. Yes. Yes. Okay. Y'all got it. Okay. Thank you. That makes much more sense. And that makes sense. Like when I'm comparing it to Elon Musk and rockets. Okay, good.
Having donated $1 million to the American Red Cross to support their mission in Ukraine. If you would like to donate, help out, go to redcross.org. John, we pray and hope the absolute very best for every person and child involved in this conflict at this hour.
And we'll keep watching to see if what Zelensky said about no longer wanting to join NATO moves Russia at all. That's a big question.
Indeed. We'll be back here tomorrow. I'm Sandra Smith.
And I'm John Roberts, the story with Mark.
Okay, we got to talk about this. Well, first of all, hold on.
In New York. Two really big developments in this story on day 13 of the war in Ukraine. The U.S. and the UK both took a really big step today, doing something that Ukraine has wanted very much, and that is the banning of Russian oil into our countries to kind of cut off, as President Biden said, the subsidizing of Putin's war. And just moments ago, a very major shift. Poland says that it will lend their MiG-29 jets, Soviet-era jets, to that fight. But they will send them to the NATO airbase in Germany, Ramstein. So how will they get to Ukraine, and what pilots will fly them into Ukraine? Those are very big issues that go to the idea of escalation and participation, and what Russia would consider sort of a head-to-head confrontation between NATO and Russia. So the Institute for the Study of War also saying today that a full assault on the capital city could come in the next 24 to 96 hours in Kyiv. General Jack Keane is standing by. He's the chairman, of course, for the Institute of the Study of War. And first, we want to go to State Department correspondent Ben Hall, who is live on the ground in Kyiv. Good afternoon, Ben.
Yeah, good afternoon, Martha.
We're going to pull off this just for a moment because I got this this from the Wall Street Journal here. And take a look at this. So Russia set to ban commodity exports following the Western sanctions. So I found this was very interesting. I want to read this together with us here because remember, Putin signed a decree banning essentially certain exports throughout the year. And I want to see exactly what some of these things are. So we'll do that together. And I believe that was December 31 was the note that we saw. So, okay, Wednesday, not Thursday. Oh, okay, interesting. Yeah, another thing here, an earlier update from Reuters here mentioned that they would have a silent period and a ceasefire 10 a.m. Moscow time Thursday. That was actually wrong. It's actually Wednesday, which... time in Russia. That's okay. That's in about 11 hours. Okay, got it. In 11 hours. All right. Time. Wait, Moscow. Okay, that is the time in Moscow. Okay, yeah. 11 hours then. All right. So what do we got here? So banning the exports of certain commodities and raw materials. The actual commodities that will be banned will be determined by the Russian cabinet. Okay. By Russian cabinet. Because those commodities will probably see some price moving here. Mach 10 sounds fun. Hey, Kevin. NASA's Jet X-43 can reach 7,000. Wow. That is, yeah, that would be Mach 10, wouldn't it? Holy smokes. Okay, so Putin gave them 2 days to come up with a list of commodities. Okay, 2 days. And countries subject to the ban. The decree comes hours after Biden says that the U.S. would ban imports of Russian oil. And the European Union said it would aim to cut imports of Russian natural gas by 2/3. Yep, we talked about that earlier. The UK government also said it was phasing out oil imports by the end of 2022 and is exploring options to end Russian gas imports altogether. So, yeah, this is really retaliation here. Russia is the third largest oil producer in the world, biggest exporter of natural gas. Oil prices rose. I'm curious to see. Okay, so I don't. Okay, Russia is a major. Why is it doing this? I'm not doing that on purpose. Russia is a major supplier of grains and metals such as aluminum, nickel, and palladium. We've seen all of these skyrocket so far. In fact, I mean, we got to look at the chart for nickel. I'll show you in just a sec. It accounts for 40% of the world's production. Major supplier of grains and metals. Sweeping ban on exports could upend the global commodities market. Nickel hit an all-time high already today. Jeez. Okay, so no details exactly yet. Amazon has now stopped accepting new cloud computing customers in Russia and Belarus. It's interesting. Let me pull up nickel because that chart's just insane. Like, we thought wheat was bad. Let's see if I can get the nickel spot price here. Yeah. Oh my gosh. It's just insane. So this was, I'll show it in just a sec, but it was trading for around 24,000. Now that's in February already. So nickel had been trading last year. Last year at this time, nickel was trading for about 16,000 a ton. It's now trading for 48,000 a ton. That's 3x. And the line over the last year is just parabolic. I'm going to go to the 1 month chart and pull it up here. Oh my gosh. It actually just ticked up to 50,000. Holy moly. Here, I'll pull this up one sec. Look at the nickel chart here. That is crazy. And again, this is where we were. And yeah, now we're sitting at, look at that. On February 7th, Feb 7, nickel traded for 23.398. That was the trade. Now on, what is today? March 8th, we're sitting at 50,300. Oh, that's insane. Ay, ay, ay. All right. Looks like a meme stock. Yeah, commodities are the new meme stocks.
Much to all of our surprise, haven't been able to achieve that themselves. I mean, I really believe the answer here is not a safe zone. It still doesn't guarantee the safe evacuation of people. I mean, safe corridors on the ground, motorized evacuation, I think is the best option here. But what our viewers have got to understand, dealing with...
I will be right back. I must go for like 2 minutes. Be right back.
And topple the government. To accomplish that also, they have another military objective. And believe me, it is an assigned objective. And that is to kill as many of the Ukrainian people as they possibly can by toppling their neighborhoods and their residences to break the will of the Ukrainian government. This is a way of war for Russia in all of their previous campaigns. And actually, in Chechnya, as we pointed out, in Syria, it has been absolutely devastating. And that could still be in front of us in terms of massive carpet bombing and wholesale killing of civilians.
So
that is their way of war.
And we're seeing it play out. So I'm asking now, before I let you go, what do you expect to see in Kyiv? You said over the next 24 to 96 hours. And before you answer that question, I just want to play one moment from President Zelensky addressing the UK Parliament today, and then we'll get your answer on the other side, if I may, General.
The question for us now is to be or not to be. Now I can give you a definitive answer. It's definitely yes to be. We will not give up and we will not lose. We will fight till the end at sea, in the air. We will continue fighting for our land, whatever the cost. We will fight in the forests, in the fields, on the shores, in the streets.
Real Churchillian language there that I think a lot of people will recognize, and obviously speaking to the British Parliament. But what do you expect to see in the skies over Kyiv and on the ground there in the coming days, sir?
Yeah, well, what's happening there is it looks like they're making preparations to restart an offensive, and this one is likely to have considerably more combat power. On the east, they're coming from Cherniv and also from Sumy on converging axes, and they will come down to Kyiv and attempt to encircle the city on the east side. On the west is one we've been very familiar with that has come down as far as the Homostel airfield outside of Kyiv, and they've had significant difficulty. We've seen, interesting enough, that there are fighters there in the lead who are Chechen fighters. There's a group called the Liga Group, which may be a renamed Wagner Group, who have considerable experience in Syria, Libya, Mali, and Venezuela. And they may be with armed forces attempting to make the penetration and also go down the west side and encircle the city, hammer the city with attack area weapons, rocket artillery, bombs, to be sure, topple as much of that city as they possibly can, try to seek a surrender. And if they don't get a surrender, then they would move into the city, and that would involve some very significant urban fighting. The Ukrainians have had 2 weeks to prepare the city for this. If they go inside that city, the Ukrainians are going to fight them as hard as they possibly can. The level of violence and, of course, casualties in urban warfare, if it comes to that, would be very high.
Devastating. Before I let you go, what do you think about the president and how open he's been about where he is? In fact, I think we could roll this video quickly. He was at his desk in his office in the Capitol.
I just quickly want to say, like, what he's saying about this offensive against Kyiv, that could be a game changer here. Because if that offensive that they're ramping up, the Russians are ramping up, if that offensive fails, then that's going to be the hugest morale boost, I feel like, in Ukraine, because then it's just like they gave him everything they had, or almost, at least, sans obviously nukes. Yeah, ugh. But best wishes to those in Kyiv.
My hat's off to him.
Yeah, absolutely. When you think about the changes that he has forced in just the past few days with getting jets and also getting an oil ban from the United States and the UK, he is pushing, and all at the same time telling them how grateful he is for every single thing that they're doing, but you must do more. And he's getting it, which is really an extraordinary example.
Yeah, and remember, Zelensky is there. He's in Kyiv, and it's the capital. So I wonder if the ceasefire is actually going to allow them that opportunity to kind of move up and then get ready for their sort of takeover assault on Kyiv. We'll see. That ceasefire about 11 hours from now.
I'm all for that. Ban it.
Ban the oil.
Ban the oil come from Russia. Yep.
Ban the oil. Neil Cavuto tells us whether your wallet will take an even bigger hit.
Nancy Pelosi.
As a struggling actor, I need all the breaks that I can get.
Thanks, Sarah. Good to be here.
I have to give you some credit because I was looking back on some of your prior interviews. You were on with us in January talking about expecting very high oil prices to surpass $100, which people weren't actually talking about back then. And it wasn't on a war in Russia and Ukraine. It was just on the demand and the opening up from COVID. Now that we are seeing this huge supply shock and moves like today where the U.S. is banning Russian oil, where do you think we're headed next?
Yeah, I think this awful war was just an accelerant to kind of the fire that was already burning on the oil supply side. Again, with 7 years of significant underinvestment in our kind of immediate desire to switch to alternative energy, we made some really bad policy decisions over the last 7 years, and I think that high prices, again, Sarah, will end up solving that because it'll be.
Oh, Starbucks just followed McDonald's. Starbucks suspending all business activity in Russia. I don't know how many stores they actually have in Russia. That's crazy. I wonder, see, this is going to start I mentioned this earlier. I go, who else is going to quit after McDonald's goes out? But now Starbucks is suspending all business activities in Russia. I mean, they got to have a ton of stores in Russia. Let me see. Starbucks, how many stores? Here we go. Starbucks CEO. The company has 130 Russian stores. And they're going to donate, but those are all franchises. And they're donating royalties to humanitarian efforts in Ukraine from Russia. But let's go look at how much those might be. Starbucks investor relations annual. I don't know if we'll be able to get it so quickly, but let's try. So let's get their annual report and just see what it says about Russia. Russia, nothing. It's not even mentioned once. Okay, how about, well, yeah, I mean, Asia's not going to work because obviously it's going to be under the Asia Pacific category, but anyway, so they have 130 stores. Let's try that. So how many stores do they have? But then we have to determine how many licensed stores they have as opposed to stores that they have. It'll be a little tricky. Well, hold on a second. Here we go. As of October 3, 2021, Starbucks employed 383,000 people worldwide. Oops. In the U.S., Starbucks employed 245,000 people, with 235,000 in company-owned stores and the remainder in corporate support. Approximately 138,000 employees were employed outside the U.S. Okay, it doesn't tell us store, so that's how many. That's a lot of employees. It'll be interesting to see how many stores they actually have. Oh, here we go. Look at that. Okay, so international. So in total, Starbucks has 17,000 stores. And of their licensed stores, they have 9,735. So really 130 Russian stores divided by 9,735. That's pretty low. That's not an impact like McDonald's. I think it's more like symbolic. Yeah, that works out to 1.32% of licensed stores, or about 0.7% of all stores. And then what kind of fees do they get from just their Oh wait, do we have Russia here? Well, that would have come up in search, wouldn't have? Yeah, look, they just put it under other. I'm surprised. Okay, what about revenues? So let's see, revenues. Revenues from licensed stores accounted for what? Revenues from our licensed store account for 9% of total revenues. That's it? Licensed stores then generally have a lower gross margin and higher operating margin than do company-owned stores. Under the license model, Starbucks receives a margin on branded products and supplies sold to the operator. Revenues from our licensed stores account for 9% of total net revenue. Oh, that's really low. So this is 1%, 1.3% of licensed stores that would close in Russia. of all their licensed stores, and their licensed stores only account for 9% of revenue. They're going to see like no movement on their income here. So this is not like a McDonald's move at all. Let me try to see. Can I get, where's the income statement? Okay, here are the statements. Balance sheet, cash flows. Where's income? Comprehensive income. I don't like that one. It's too complicated. There we go. This is what I want. Oh, yeah, look at that. Their licensed stores do like nothing compared to the company operated stores. That's where they make their money. And I guess the Russia ones are licensed. I don't know if they have any corporate-owned stores in Russia. I think it was just... Let me see, because we just had this up on Google. Let me try to find it. Starbucks stores in Russia. Yeah. Okay, that it is. Those are just licensed stores. Okay, so that's nothing. All right. Well, that's interesting.
Given this global conflict, China is at a major crossroads here because this is not strengthening China. China desperately has to buy energy, and energy prices are up. Crude oil prices are up $50. Food's up 40-50%. Wheat skyrocketing, right? So all of the inputs that China desperately needs daily are pricing to the moon in dollars. So I think China's in a really difficult position today.
Yeah, it would seem difficult. We'll see how it all plays from here. Kyle, thanks a lot. Kyle Bass.
Thank you.
We have some breaking news out of Washington on Ukraine relief. Elon Moy has the details. Hi, Elon.
Hi, Mike. Well, Senate Minority Leader Mitch McConnell has said that Republicans and Democrats have reached a deal on a government funding package that includes $14 billion in aid to Ukraine. That is up from an initial White House ask of about $6 billion. Just yesterday, lawmakers were talking about $12 billion. Now they're at 14. That gives you a sense of how quickly this crisis has escalated. Senate Majority Leader Chuck Schumer also said that there would be $15 billion for COVID relief as well. The House is expected to vote on this package tomorrow, and the goal is to get it through both chambers by the end of this week, because otherwise the government will run out of money. Guys, back to you.
So this is part of the overall government.
That'll get passed. You got to get the stopgap bill done. That'll go right through.
This would not just be a stopgap bill, Mike. This would be a full year.
Never mind.
Bill that would cover appropriations through the end of the fiscal year.
I stand corrected instantly.
Whole fiscal year. Elon, thank you very much.
Wow.
I guess we don't want to throw a government shutdown into the mix right now.
No, we should be thankful for the things we sidestep, I guess, at this point. All right, we have 39 minutes to go before the bell. The Dow is up 150 points. It has been all over the place. Very modest gains. S&P 500 is still well below yesterday's open. It's down about 1/3%. Still ahead, Energy Secretary Jennifer Granholm joins us to talk about today's decision to ban Russian oil and what the administration...
Oh, Fox was railing on her the other day. We'll see what it's like when she comes on here.
Top search tickers on CNBC.com. The 10-year yield back on top, followed by crude oil, Tesla, the S&P 500, and Apple. We'll be right back.
Apple's pretty much flat. Let's go look at some of the sticks. I wonder, Enphase probably pulled back. Let's see. Okay, let's see here. So there's Apple dancing around. Shift. No, Enphase is still up there around that 180 range. Nice. 11.4%. Not as high as it was. Same with Shift. Some of that euphoria has chilled back a little bit. Jets up 6.5. That's the aircraft, I should say airline ETF. This has gotten pummeled since we saw the invasion, of course. So what's going down today? We got the VIX going down. Trade Desk still getting hit today. I do wonder if there's Trade Desk news. And oh, look at that. The wheat ETF. Oh, getting a little bit of a 10% drawdown here. Let's see if there was news on Trade Desk. Why did Trade Desk fall today? All right, let's see. So Trade Desk. No. No, I don't see any news on Trade Desk. Oh, never mind then. Okay. There it is. So no news on that. Let's see what the suits are saying otherwise. And okay. So the suits are telling us cyclical versus defensives sends the S&P 500 a note of caution. An equal weight index of cyclicals. Okay, well, we're gonna write this down, break this down. Okay, so cyclicals, which are financials, energy, materials, industrials, and consumer discretionary, has fallen discretionary. There we go. Lowest level versus, oh, that's since end of 2020. Let me see here. Yeah, November of 2020. Lowest level versus defensives, which are utilities, consumer staples, and real estate since November 2020. So I could show you that ratio chart. It'll give us a little bit of an idea of how the market's done over time with that. So let me get that chart. Okay. There we go. Okay, image. Got it. There we go. So here's the chart. So this is just basically if you peg it at 100 to start, the cyclical stocks have done quite well going into 2021, coming out of 2020. You sort of had a little bit of a rally there. But now they're falling versus defensives. The last time we had this was really here in the pandemic, when the pandemic began, and everybody went really defensive here. And we're still at, decently high levels. And we were probably somewhere around here, end of 2018 levels. Oh, that's interesting, because remember, end of 2018, we had the little taper tantrum there when Fed rates were going up quite a bit. And so you see, this was probably closer to a level of about 105 at a bottom down here. And now it's at about 115 over here. That's quite interesting. All right. In chart. Should put all that together. Well, thanks, True Trading Group. Appreciate the $100 donation. That's awesome. So, what else? Since Feb 24, energy has been a standout outperformer. Well, yeah, no duh. So far, the leading declining sector in the S&P has been consumer discretionary. Wow. IPO drought, likely hitting banking revenue, potentially further depressing an already underperforming sector. Okay. All right, let's go look at the sticks a little bit here. So this is the wheat ETF, which if I go to the hour, we're kind of almost creating a little bit of a double top here on the wheat ETF, which wouldn't surprise me. I think there's a lot of speculation in this. So I'd be careful. What's also fascinating to me is that DWAC has started falling. because it's been on this beautiful uptrend and it's just now breaking trend. In fact, let's look at that. See, I mean, if we just go with a simple diagonal trend here, simple sort of channel. Yeah, kind of. It's too hard to say. If maybe a little bit of a wedge here, which, yeah, we'll keep an eye on this. But you're starting to get that U-turn on DWAC that you haven't seen in quite a while. I mean, it hasn't been at this level of oversold 37 since ever. This is the most oversold DWAC has ever been. Just a quick like RSI check here. I wonder what let's look at what TradingView says. Ooh, yeah. Let's get into my TradingView. So this is my 1 hour on NVIDIA. Oopsies. There we go. Let's get to DWAC. So here's DWAC. It didn't send a sell alert on the hour here, but you're definitely in those oversold Bollinger Bands. And the problem with using the bands on the momentum stocks is when momentum stocks crash like this, I mean, you could just break through that Bollinger for quite a while. Let me go, like, I wonder if we could see an example of that with Hood. And then I'll go out to the day on Hood. Okay. And let me kill this for a moment because it's a little confusing for some of us to see the linear regression like that. Yeah, so this, you didn't even get the day's Bollinger chart. I mean, yeah, you kind of just rode the green, but gosh, that did like no good over here. I mean, I don't think you can do TA, honestly, on a stock when it just does this. Hold on. This. Like, you know what's funny? And it's kind of sad now, but you see this crazy weird line I drew? I drew this back here in like December. And I'm like, I'm just going to draw a line from the top to 0. And it's totally supposed to be a joke, but I don't, it certainly didn't help the stock. Yeah. Oh well. U.S. Undersecretary of State says the Poland decision to put its MiG-29 jets at U.S. disposal was not pre-consulted with the U.S. It's interesting. Kind of like, here, U.S., you guys take the jets. We don't want to touch them. All right. So I'll listen in over here.
For women than men, peaking at 16.2. It's the blue line there. Yep. Men is the orange. The good news, as you can see in the chart, the recovery has been swift. Unemployment rate has fallen sharply, and it's basically on par with that of men at 3.9%. The bad news, a lot of women have simply not come back into the workforce. Participation not back to normal, healthy pre-pandemic levels for women, and actually fell last month. It's much lower than that level of participation for men. One troubling reason why, childcare. It's become even more expensive and even harder to find. Take a look at the labor force participation among women with young kids under 6 years old. It's 28 percentage points lower than men with young kids and 10 points lower than women with school-aged children. So you can see why they're not going back to work. According to Wells Fargo, if we could get those women with kids under 6 to match the rate of just those women with older kids, that's 1 million more workers in the workforce. So how do we do this? Address the child care issue. Costs have surged. People have not come back to work at these daycare facilities. Check it out. Employment at child daycare centers remains down 12.4% since COVID, far steeper than the 1.9% drop in total employment. That's hundreds of thousands of fewer spots available for kids and their families. Worker pay has not kept up with overall wage increases in the sector, and yet the cost of childcare has surged for family. This is not a new problem. We've had a broken childcare system in this country for a long time. It's just bad economics, but it is indicative of the fact that it's holding us back in terms of the number of workers and making the labor shortage worse. These companies.
Kids are expensive. I got two. It's a disaster.
In this area.
I was going to say it's probably the single biggest pool of workers who could get back into the workforce, loosen up the labor force, and probably want to on some level. Women with younger kids. Although, you know, remember when the push for Build Back Better was in there and there was childcare credits and all that in there, people were wondering if that would have been a fix, simply because it would have thrown so much money into the preschool and daycare economies, then maybe prices just go up. I mean, it's really difficult to kind of do it with one stroke.
I think the general consensus around the industry and those who follow it is it needs federal funding, as do schools. There's a community good. And Wells Fargo has done a lot of work. I got some of the charts from them. They say the pandemic has left 460,000 families still in need of alternative childcare arrangements because of this dynamic, that people just aren't coming back to work in the childcare industry. It's pretty stark.
Without a doubt. Well, an important little sticking point in the economy for a day like today. Time for CNBC News Update with Rahel Solomon.
Yeah, that's interesting. I mean, really, it makes you wonder, like, how much did our stimulus actually, like, lead to an increase of childcare costs? Because so much money originally flowed into, you know, the childcare sector. I don't know. You know, we had the child tax credit, the unemployment pay. I wonder, a lot of folks just wondering, is it really that childcare has gotten more expensive, or do people just have more money in their pockets? It's probably a combination of both. Anyway, stocks selling down a little bit right now. This is your SPY going down into the close, trying to rival what looks like the lows of the day, honestly. Let's go check out QQQ. And we do have a little update here from Zelensky that came in. Here's QQQ, still higher than where it was. Zelensky, spokesperson, says that we would like to have an embargo on all Russian goods and services, not just oil. Yeah, well, that's crazy. Crazy times. So, all right, let's keep listening here.
Here's where we stand in the market. The Dow and the S&P 500 have now turned negative. Got some momentum at the beginning of the hour and have seemed to lose that. We're down 0.4% on the S&P, adding to the losses we saw yesterday. Worst day for the S&P in 17 months. NASDAQ just barely positive. Russell 2000 small caps up more than 1%. So big divergence. Bank of America is down about 20% just over the past month. But it is getting a pop today on an upgrade by one analyst.
Man, everybody was saying, go buy financials, because that's where you want to be in a rising interest rate environment. I'm like, no, thanks. I don't want to own the banks. People got mad at me when I said that. And it's just straight down, these things. Now, I'm not right about everything I do, but one of the things that I personally stand for is I just don't want to buy stuff that I don't want. So, like, I just don't want banks. This is also one of the reasons I've been a little bit anti-commodities, because I just think they're going to, I mean, I know they're going to crash at some point. They're going to crash devastatingly. But well, look, there's money to be made there. If you could trade there in the meantime, please go make money. I'm all for it. But I would let me put it this way. If I was in commodities, I'd have trailing stops. That's what I would do. I should have done that with my gold. Just set a trailing stop, good to cancel, and, you know, set it for 4% or something like that, 5% if you really want to stay in it a little bit longer to wash out those fluctuations. Set a trailing stop, 4 or 5%, just set it, forget it. McDonald's down about 1/3% after the announcement on Russia. Really not much of a move there at all. And Cloudflare flat at about $92. Still expensive because they're not very profitable, but I like Ross Gerber a lot. I don't know all of his holdings, to be honest, in GKA. I just don't know. Shorting SoFi. Yeah, we talked about that earlier. A lot of people shorting SoFi. Canadian Armed Forces Mobile and the U.S. military. Okay, yeah, I'll talk. All right. So what else? Everybody went on commercial. All right. Well, I'm just looking to see. There's old stuff that we missed. Carl Icahn sells Occidental profit at a profit for $1 million. That's insane. And I do want to talk a little bit about this crypto thing. I don't know if this is like how much is really exciting about this, but I saw this here. Democrat warns against crypto crackdown. So I'll just read some parts of this. So it says here, one of the Senate's most powerful Democrats warned his colleagues against cracking down too hard on the booming cryptocurrency industry, likening it to the internet in its infancy. And this is Ron Wyden, who is the chair of the Finance Committee, one of the architects of internet regulation. Ooh, fancy title. Urged members of his party to protect crypto innovators, despite concerns about fraud and money laundering. Well, that's a nice way to put it. Internet or crypto innovators. Wyden's warning comes as senior officials in the administration of Joe Biden look to clamp down on the unregulated crypto activity, especially trading platforms such as Coinbase. Gosh, Coinbase has really become like the butt of the joke. There's obviously a debate about stricter regulation, but I want to be on the side of the innovator. When I think about crypto, I think about remittances, or somebody who has a kid 1,000 miles away and wants to get them help in an emergency rather than go through scores of banks and credit card companies. Ooh. I keep looking for innovations, he added. That's where my heart lies. The demand for cryptocurrency has rocketed in recent years, driving the total value of such coins to about $2 trillion. Gary Gensler says there's a risk of fraud, scams, and abuse. Concerns that cryptos could be used to evade sanctions. Section 230 of the Communication Decency Act has been dubbed the 26 words that created the internet. That's come under fire, blah, blah, blah. Wyden hit back at attempts to rewrite Section 230. Okay, that was kind of boring. I mean, that's cool. So Wyden likes us crypto enthusiasts. Ferrari and Lamborghini are suspending business in Russia. Just in, apparently. Haven't been able to confirm that just yet. But that's interesting. And yeah, as wheat falls, it looks like corn and soy are still staying up there. All right, let's listen in a little bit over here. Are they talking about Bank of America? No, that's kind of boring. Apple event.
M1 Pro, the M1 Max, now the M1 Ultra. So in a sense, you know, they are distancing themselves and weaning themselves, or they have been, from Intel and other chip makers. And for a faster chip, I think the M1 Ultra is something like 7 times faster than an M1 chip. So yes, they are more independent, and they skirt or bypass that supply chain issue.
Yeah, no. What about any other production problems, John Mayer, that you see that could be an issue for Apple? I mean, we're talking about, we're still not, we have not fully recovered from the supply chain crisis. It's not at the top of the Wall Street Journal today. Ukraine is, but that is still a backlog around the world, whether it's shipping containers or aircraft. We're still not out of that yet. Has Apple put that behind us?
You know, even though Tim Cook is a supply chain genius, I do expect a lot of Apple's new products, especially the new personal computers like the Mac Studio, to experience multi-month wait times within a day of it going on sale. So I do expect that. But really a highlight.
Wow, that guy's real bullish.
You know, based on today's announcements, there's just truly, and I mean truly, unprecedented hardware now coming out of Apple. You know, we've reached a completely new sophistication of speed and really just personal and professional computing, U.S. superiority.
Oh, he's not wrong. Look, it's already bumped again. Earlier we checked this. Remember, it said April 3rd to April 10th. It just bumped again. And it seems, and this one just got bumped back. This one, the cheaper one, got bumped back a week, and then this one got bumped back another week, the more expensive one. Look, I have to say, I'm tempted by it. I'm very tempted by it. I'm gonna wait. I'm gonna be patient, but I'm getting a little bit of FOMO.
It would be interesting to see is if there is a conflict involving China, what they would do. That's when they really have to make a tough decision.
Well, you know, Xi Jinping has been very quiet in all of this. There's a lot of speculation about why. Can't get into it now. We're out of time. John Meyer, John Swartz. Gentlemen, thank you very much. Appreciate it.
Thank you.
Well, we've got some more breaking news for you right now. We've been watching President Biden since he's landed in Fort Worth, Texas. Upon arrival, he was asked about gas prices. The president responded by saying gas prices will go up, and he blames Russian President Vladimir Putin. Now, Biden is expected to talk to veterans in this hour about expanding access to health care and to benefits. But remember, earlier today, he announced a ban of all imports of Russian oil and gas. With more pressure to expand domestic drilling, the administration has been on the defensive.
Yeah, we know. Someone made this interesting little argument here in an op-ed piece here in the Financial Times, just basically talking about how we haven't really seen shock and awe in Ukraine yet, and that those things that could happen, right? If they end up lashing out, if Russia lashes out, and they really perpetuate their shellings, right? That would be bad. So hopefully not. Let's listen in from this White House here.
Russian President Vladimir Putin, but prices have been increasing steadily before that. Now, President Joe Biden banning the import of Russian oil, natural gas, and coal into the U.S. That ban immediate. The president acknowledging this will be painful in his address. Listen.
The decision today is not without cost here at home. Putin's war is already hurting American families at the gas pump. And with this action, it's going to go up further. I'm going to do everything I can to minimize Putin's price hike here at home.
Yeah, and this comes as gas prices hit that record level, $4.17 a gallon for regular unleaded. Some areas are higher than the national average. California, for example, an average of $5.44 a gallon. Now, the price has been on a steady, sharp rise for the past 7 days at least, as the Biden administration telling me that there is no change in their energy policy. You can see that graph there. Now, the American Petroleum Institute CEO says that the U.S. can not only single-handedly lower gas prices, but also supply the energy Europe needs as Europe finds itself tied closely to Russian energy.
This is really a consequence of really decades.
Another big one just came through. Coca-Cola now suspending business in Russia. Wow.
Of energy that is hostile to its interests.
So both the governor of North Dakota and the governor of Alaska both say that, yes, the U.S., one molecule drilled here in the U.S. is much cleaner, significantly cleaner than a molecule of oil drilled in, say, Venezuela or Iran or Russia even. Now, talk about Venezuela and Iran. They have no idea. Those governors have no idea why the U.S. is even talking to Venezuela and Iran about oil coming into the market when we can do it here in the United States. As you mentioned, President Biden in Texas, he is not talking oil. He's talking health care for veterans, basically.
Well, and since you're at the White House, I mean, has there been any more response from the White House in the last couple of hours about all these reports that Biden is actually considering going to Saudi Arabia?
No, and in fact, Jen Psaki was asked about that specifically. She said there's no plans to read out about him going to Saudi Arabia. You know, if you take a step back on this, the worst thing you want to do is have a president go to a country asking for something and come away empty-handed. And the Saudis have been very clear about their message in terms of, could you produce more oil? It's been no, over and over and over again. The administration has gone at least, 4 or 5 times this year over the past 3 months.
Ed Lawrence, great reporting from the White House as always. More countdown coming back.
Yeah. Well, I think McDonald's, by the way, is really driving this this everybody like escaping Russia right now, because you've got Ferrari, Lambo, Coke, McDonald's, all just today announcing suspensions. I just tweeted. If you don't yet follow me on Twitter, follow me on Twitter. But I'll show you what I just tweeted. I tweeted McDonald's, Starbucks, Coke, Lambo, Ferrari, all ceasing activity in Russia. Russia's starting to sound boring. At least they still have Teslas, so you can autopilot your way out. I don't know. Maybe that's not sensitive, but it's true. They do still have Teslas that you can buy in Russia, but a lot of pain coming that way. Caterpillar shares are headed towards the biggest 5-day gain since the pandemic as investors are looking for a hedge against inflation. Really? Let's look at CAT. CAT being an industrial stock. It's actually not one that I have on my little watch list, so I should put them on there. Oh yeah, 7% for CAT. It's not bad. CAT. Let's throw that on here. There we go. Why don't I like bank stocks? Well, one of the biggest drivers of income for banks is lending. And I think people are just going to borrow less. As rates go up, you're actually going to see a substantial decline in lending, ironically. So that's one of the reasons I didn't like bank stocks. That's just my belief. I know people are like, oh, but then they can make higher interest. Yeah, but I mean, if you look at how mortgages, for example, are securitized, it's not a matter of the interest. It's a matter of volume. And as volume goes down, income goes down. We're also seeing trading revenues decline substantially at the banks. So that's another big oopsie doopsies where when all of a sudden you're like, oh, but the banks are a great place to be because they've got the brokerages and the lending divisions. Yeah, but wait a minute, what's happening? Retail volume is plummeting at the banks and the trading desks are losing money like crazy. Each of the last earnings reports were showing us from these banks that trading activity is plummeting. And it's certainly not getting any better because more people are starting to lose money in the market. The more people lose money, the less they actually get involved in the market and the more trading revenues go down. Plus, on top of that, you have in this sort of crazy market, nobody wants to IPO. You've got way less SPAC deals than you used to. The glory days for the banks, at least since 2020, behind us. Sorry. Okay. Okay, good. So, how are we doing here? 10 minutes to the close.
We're trying to figure out what's going on there because they have about 4.3% of revenues coming from Russia, and they've got a few $billion in terms of exposure. They've got a dairy business and Pepsi as well. The Wall Street Journal reported that Pepsi's looking at its options, including potentially selling off its Russia business. But here from Coca-Cola, once McDonald's went, it was like everybody with any Russian exposure had to.
In a sense, because McDonald's does have a significant commitment there and has for years. It's very tough to quantify what any of this means, except that it underscores this idea of disengagement, of localization, deglobalization. So I think that's something that we're going to have to reckon with for a while, of course, with the growth effects that are also going to be absorbed here in Europe.
Supply chain, I think there are questions about that, whether their plants and the companies don't really spell that out. Mondelez has a plant in Ukraine that's shut down. And also, just does this ever reverse?
Well, that's the thing. Yeah, you would think that typically sanctions kind of stay for a while, and we'll see if voluntary sanctions by companies do so too, and what the benchmarks will be for them to decide that. Meantime, oil prices up again today, trading around 14-year highs after the Biden administration announced a ban on Russian oil, natural gas, and coal imports. ConocoPhillips CEO Ryan Lance joined CNBC earlier today to weigh in on the administration's decision.
No, we're focused on the short term and trying to send a message to Mr. Putin and what's going on in Ukraine. But we need to be thinking about the medium and the long term impact. If this lasts for a while and we continue to stop the exports, it's going to have a material impact on the market for a longer period of time. And we need to think about that.
Joe, obviously material impact for a longer period of time is something the market is.
Wow, my Apple video got blocked. You're right. What the heck? By whom? Copyright owners Apple? What? Yeah, they just totally blocked it. Wow. That's crazy. Well, I'm going to put in a little dispute. That's interesting. See, this is why I didn't want to do, imagine my entire stream got blocked, you know? This is why I didn't want to put up any of the Apple stuff. I didn't even put any audio in. That is so annoying.
Has already been not to transact on Russian oil. The Russians being denied access to SWIFT payments, that created, obviously, an environment where you are unsure how you would financially be transacting for any type of barrels. But we had traders already step away. So self-sanctioning was in place for the oil market. Mike, I think the bigger challenge comes in a lot of other commodities, comes for agriculture and a lot of base and precious metals. There's no OPEC for agriculture or base precious metals. How do you increase the supply there? To me, that's the bigger challenge. I think oil prices 125, 130. That's priced in. It's going to stay here. We already know that. That's a known.
Yeah, exactly. And you are seeing things like nickel and wheat, of course, have tremendous.
Yeah, check this out. Look how lame this is. I'm just going to put a screen up. Like, other people are going to be able to do their reviews, and I just get fully blocked. How lame is that? Just because of this right here of Tim Cook. And we didn't even play his audio. That's so lame. Just fully blocked. Video cannot be seen or monetized. Just blocked in all territories. How lame is that? Anyway, I submitted a dispute, but it's going to take forever. That's so dumb. You suck, Apple. You really suck.
Great, sure. So thanks for having me. I think Joe actually just teed me up very well with all of this because it's clearly oil and gas, but it's a lot of other things as well. I'm sure your listeners know, 17% of natural gas, 15% each of thermal seaborne coal, seaborne met coal, 11% of oil, 5% each of copper, aluminum, nickel, and even a little bit more of platinum. So, Russia is the source of a lot of these things. I would agree that that market is essentially cut off from the West at this point and probably will be for the next several years. And so that's a higher inflation environment, at least for the commodities. And as you said, CAT's historically been a great store of value during the 1970s. I hope that's not where we're headed again, but during the 1970s, CAT was a massive outperformer for a decade and as a store of value. And I think to the second point, we are going to need to find other sources of these commodities. And we're going to have to build out capacity in other places. And CAT is a key producer of equipment for both mining and oil and gas.
But is it more of an inflation beneficiary than it is one of global growth, which is slowing on this whole thing with Russia being cut off, the ripple effects on Europe, the potential for another European recession and any spillover effects there? Isn't that traditionally how Caterpillar is judged by the market?
Well, I hope we're not right with this, but it may outperform by just doing a little bit better than a weak market. Having said that, there's going to be a lot of growth. As I just said, we need to replace
It is a defensive, right? Getting into Caterpillar.
Mining sections, but also in oil and gas. And so you've seen, Germany's building LNG terminals, and they're going to need a source for that. And building those terminals also uses equipment. And let's not forget, we do have this build out of infrastructure that's still sort of in the pipeline. We haven't really spent even $1 of that yet, but it's all approved and ready to go. And so I actually think the growth side of this is going to be okay. But either way, I think you win.
Stephen Volkman. Stephen, thank you very much.
Thanks for having me.
Joe, before we let you go, I want to zone in on your top trade idea in this market, all over the place market. What are you going for?
I made a new purchase today. After listening to the president, it's clear that EVs are still top of mind for the administration. Sensata Technologies, the ticker symbol is ST. It's a small cap company based in Massachusetts at about $9 billion market cap. Reasonable valuation, somewhere around 17 for a PE. But this is a company that is in the charging infrastructure. It's in the electrification. It's contributing thermal components, sensors, fuses, and we see the growth in EVs. Sensata Technologies is going to be a significant contributor to that.
Joe, I guess it's the question for any manufacturer in this general area, but what's the exposure on their part to inputting commodity costs and things like that?
I think it's significant. for, in particular, internal combustion engine producers. And I think, Mike, that's why you're seeing both Ford and GM correct significantly. But I think this is going to elevate once again and kind of revive that EV trade that was in place for the better part of late 2020 into early 2021.
All right, Joe. Well, Tesla up 2.5%. Obviously, the bellwether in that group. Joe Terranova, thanks a lot for joining us today. We will catch you again soon. With 2 minutes left to go.
I'll look that one up just here in the back end for a sec. We'll see.
Another renewed sell-off here, and actually very heavy volumes, not just the skew. Obviously, advancing volume well ahead of declining volume. The average stock is outperforming the indexes today, but there is still plenty of volume happening. It's actually not been really a panic or a rush for the exit. It's been much more an orderly, methodical reduction in exposures. S&P trading now below 4,200 and has.
So Sensata is, let's see, I'm just going to look at their balance sheet really quick before the closing bell. Well, actually, we'll look at their income and expenses first. So revenue growing at about 10% forecast, was growing at about 25%. Now it's going to grow between 10 to 4% for the next 4 years. So definitely declining growth curve. Net income of about 15%. So they're profitable. EPS at about $4. They're only trading for 13, 14 times 2022. It's actually not terrible in terms of the PE ratio at all. I'll look at their balance sheet as well. I mean, their growth is low. So a PE of 13, the growth is below that. So PEG, you're paying 1.5 times. But balance sheet, do I have time for that? 40 seconds to go? Probably not. I'll pull up the balance sheet and we'll look at it after the bell.
It is now up about more than half of 1%. So another new closing low we're looking at here for the S&P 500 on this move, Sarah. But again, it's more just a slide. And we did have that rally middle of the day showing that there is a sensitivity to any headlines that suggest we get de-escalation or some of the pressure, upward pressure coming off of commodities.
That's going to be a disappointing close for the Bulls, down 0.7% there for the S&P. Welcome back to Closing Bell. I'm Sarah Eisen along with Mike Santoli today. Coming up this hour, Energy Secretary Jennifer Granholm on the new U.S. ban on Russian oil and gas imports and the impact that will have on.
Yeah, I want to see what she has to say. So, okay, there you have it. Dow down 0.57, S&P down 0.73. NASDAQ Tech actually only down 0.28, and the Russell 2000 outperforming. The small cap outperforming. I want to take a look at that. On Sensata, actually, it's not terrible, the balance sheet. I don't mind it at all. I don't know what the company does. I'll look at that really quickly before we look at some of these other things. Let's just try to understand what the heck they do. Here we go. So this is, what do they make? Oh my gosh. Pressure sensors, temperature sensors, force sensors, relays, circuit breakers, actuators and motors, inverters. So a lot of mechanical things and software. Wow. Very interesting. Never heard of it. Sounds interesting. Don't know if I'd buy it. Mostly because of that substantially declining growth we're expecting. It doesn't seem to be really, it doesn't have a growth factor anywhere near what the EV revolution is showing. Just at least with estimates, but who knows? Maybe it'll grow better than estimates. So, okay, how did some things? You know what? We'll keep an eye on it. We'll put it on the chart here since they pitched it, and it is kind of in our EV world here. How's it been doing? Day chart. This is kind of the day chart for CAT. Let's grab that ST there. ST day chart. Wow, it's traded flat since 2021. That's very interesting, and it's been. $54. It's trading for the same place it was trading for right before the pandemic. How interesting. All right. So let's see what lost money today. So DD. We got to do the DD on DD. 11%, down at $3.45. Outlet goes down 11%. Oh, things at $2.40. DWAC down almost 10. Seagate, Shopify gets blown up here. Shopify going down another 8%. CrowdStrike 6%. Trade Desk 5.6. Ouchies. Xpeng Motors. This one's been all over the place. Corsair back down to about 21. This one's also been all over the place. Look at it. It can't stay above that line. Zillow down about 3 again. Gave up a lot of its post-earnings rally, I believe. Yep, certainly did. See, here's earnings. We got that little rally there on earnings, and it just gave up right after that. What else? Walmart, Twilio, Home Depot. Okay, let's go a little bit more. Let's look at the upside. Wow. TMC. Holy smokes. 33% today? Why? I want to see that. Let's take a look at that. This was you saw some massive momentum in this stock previously. This was a SPAC, by the way. Let's see what the news was on TMC. So it sounds like momentum. The metals call option activity shares rise 50%. Yeah. Universal Music Group suspends all activity in Russia. It's a lot. Everybody's coming in now. Pepsi suspends. Oh, of course. They probably just waited for Coke within 10 minutes. Wait, hold on. So Coke suspended at 45, Pepsi 11 minutes after. Wow. They have 20,000 Russian associates in Russia. 20,000. Holy moly. And they're stopping all their ads and promotional activities in Russia. Oh my gosh, they're just getting destroyed. Nikola's up 13%. Is that true? That's incredible. Let's see. Nikola's been on a ride. NKLA. I mean, even if it is, it's our main chart here is not so hot. What else did well today? SunPower, 18%. Shift, 14. Oh, yeah, there's Nikola, 13. Wow. Enphase, almost 11. SolarEdge, 10. Sunrun. Airbnb, Purple. Oh, Purple coming back a little bit. It's incredible how extreme the moves are on the market. But the problem is, even though you're seeing these big moves, like 18% on SunPower, the chart still looks like crap. Okay, Bumble is now suspending its app from the App Store and Google Play Store in Russia and Belarus. Holy smokes, you can't even go dating anymore now. What's next, Tinder? Oh, man. If Baba dies, does Amazon become more valuable? I don't know if Amazon has a significant presence at all in China. I actually have no idea. I think that would matter. Google will exit Russia next. Jeez. Yeah, Russia's getting rinsed. Oh, man. They really are. All right. So what else do I have here? Okay, now CNBC is talking about Pepsi. We beat them again. All right, let's listen in a little bit.
That way. Despite the fact it's a short-term hit, despite the anxiety that all of these events are causing, looking beyond that, there are positive factors.
You know, from a longer-term perspective, Professor Siegel, globalization and even the secular decline in commodities as a central, point of our economy has been given credit for higher valuations in equities, right? I mean, it's part of the long-term story for why equities have actually done well and have generally gotten higher value.
Oh, Bumble just reported as well an increase in active paying users, 10.6% to 3 million. Total paying users increased 10.6%. Fourth quarter paying users increased 29%. Let's go look at their earnings versus expectations. Let's see here. So Bumble guides better. 2022 revenue. No, I'm sorry. Is that the midpoint? That's about right on target. Midpoint here, guide 944 minus, let's see, 934 is the range. That's if I take 5 off of that, minus 5. That's actually a tiny little miss on guide there. Q1 forecast misses estimate. Yeah, well, there you go. Okay, but they did guide higher for the first half. Looks like they missed on sales, 208 mil. Adjusted EBITDA came in higher, though. So kind of a mixed read there. I don't know if that's like really good or bad here. Let's see. Bumble. Oh, it's up 7% in after hours. So people are really happy with it. Probably because it's just gone down like Robinhood's gone down. And news that it's even still alive is doing well right now. Yeah, I saw that about the Apple copyright thing. It's really lame. I disputed it, but it's really, really annoying. I might just re-upload it and remove that little section because they only complained about one little part of it, but it's just so stupid. 43 seconds into 227 is what they complained about, which it was all it was Tim Cook standing on stage. Like, how lame is that? I mean, it's pretty useful. It's all the iPhone SE part. They just don't want you to use any of that video. It's just stupid. I disputed it. Whatever. I'll just let the dispute ride. Bumble now up 12%. Somebody here says companies are not suspending services or products out of solidarity of Russia being bad. They're doing it because they have no way of getting paid. Well, sure, they could get paid in rubles. Everybody wants those. All right. How are we doing in the after hours here? Bumble, great. Otherwise, everything else relatively stable. Trade Desk down 60. I watched Trade Desk. I really think this one's starting to set itself up for a little bit of a deal here. Just watch it. If we end up hitting a lower low here, it's going to be interesting. And it does these crazy downtrends. Look at how many times it does this. Well, I guess here in February, you had this crazy downtrend. Then you had this downtrend here in July. Here you have another downtrend. And I feel like you're starting another downtrend channel over here. And that could give you an opportunity. But all of these downtrends, with the exception of this one, seem to be, yeah, these three were higher. This one's obviously bringing us lower with some more fears here. They could get paid in vodka. Oh, man. Anyway. So, okay, a couple other earnings coming in, but nothing relatively large here. Oh, Figs reports. I wonder how Figs did. I bought a Figs doctor's coat, lab coat. It's really good. I like it. Yeah, let's see how they did on earnings. But I didn't buy the stock because I thought it was going to be a fad. Oh, well, shares are up 14%. Maybe not. Fig sees fiscal year 2022 revenue 550 to 560 million. The consensus was 547. That's a beat. The EPS comes in at 9 cents versus 3 cents. They're freaking killing it. Net revenue came in a little bit higher than expected. I mean, this is a triple beat here on FIG, so FIG just dominated. Still think it's going to be a fad. I'm actually glad I didn't buy it, though, because unfortunately, the stock has not been doing great. GE suspends operations in Russia.
With the exception of providing essential medical equipment and supporting existing power services to people in the region, a spokesperson for GE telling me we continue to work closely with the proper authorities to ensure compliance with sanctions as well as all laws and regulations. But GE here suspending operations in Russia as it pertains to footprint. In Russia, it has about less than 1,000 employees and revenues that represent about 1% of total revenue in Russia. Shares basically unchanged after hours. Guys, back to you.
The great Western retreat continues from corporate America. Seema, thank you. Seema Modi. We are just getting started here on the second hour of Closing Bell. Up next, we will be joined by Energy Secretary Jennifer Granholm with her take on the new U.S. ban on Russian oil and gas imports, what that means for energy prices ahead. And later, Bridgewater's Rebecca Patterson on whether she thinks a crypto comeback could be on the horizon. We're back in just 2 minutes.
Whoa.
We're all looking
All
at
right.
the same sky.
What else? So let's see here. We've got, I want to see if the CPI numbers have changed at all, because we do have CPI expectations coming out this week. So we'll have to talk about that. And okay, let's take a look at those. There you go. Month over month, still 0.8%, and minus food and energy, still 0.5%, and then 7.8 year over year is the expectation. So those come out Thursday morning. That's going to be a big deal. If we get a big miss on that, that'll be an issue. Yeah. Okay. All right. Well, take a listen into Fox over here.
Where it needs to go. We can even have LNG distributed on trains and create the North America energy superpower that is counter to the bad regimes that we're talking about today, to the OPEC cartel, to Russia, to China. Everybody has to do business with North America. That is in front of us. And the good news, Larry, is that the president really, really wants his renewable energy provisions, solar, wind, energy storage, hydrogen. But there's going to be a cost to doing that, I think, in the United States Senate, that if the president wants those renewable energy provisions, he's probably going to have to give on some of these ideas that I just laid out as a condition of them, or he's going to be very sorry. So that's why I think the cavalry's coming.
Yeah.
And if not, the
Yeah.
election will be
It's gonna
run
be.
on energy policy
He's
in
got-
2020.
You know, he's got all these crazy regulators. This is a regulatory jihad. You know, Steve Forbes called it modern socialism. This is through central planning, regulatory central planning. These people are crazy. They're crazy. Look what they've done. This 3 centuries ahead on the social cost of carbon, right? And for that, they're raising the price of carbon so you can't do any. I don't know. I mean, this. I'll tell you what, the cavalry's coming in 2022, but we got to get the cavalry in 2024. Mike Summers, thank you, buddy. Dan Clifton, thanks ever so much. Coming up on Kudlow, President Zelensky now says he's willing to give up on NATO membership, maybe negotiate a compromise with Russia. I don't know what that means. I'm not sure why he said that. I think it's a step in the wrong direction, but we will ask former Deputy National Security Advisor Matt Pottinger to explain Zelensky's change of heart. I don't know. Hasn't gotten much play. Stick around on Kudlow, though. I've got to explore this. He said it in an ABC News interview. What does that mean? Anyway, we'll be right back with more.
All right. When are we going to get that energy lady over at CNBC? Let's see.
the road on the table. He specifically brought that up last week. So the market has to price in the probability that if inflation doesn't decelerate, as the Fed is expecting, maybe the Fed has to speed up the pace of hikes, or that they can be more aggressive on quantitative tightening. So we've got a hiking cycle that we're about to embark on next week, in our view, without forward guidance. And that's what marked the last two hiking cycles. And then I have to say, inflation is inherently uncertain, very hard to forecast. And now you've got tighter financial conditions and how that's going to feed through into the economy. So there's a lot going on. So I would say volatility is here to stay. We are, though, expecting that the Fed will start to raise rates because we're at zero. So they're going to argue that the economy can handle some rate hikes. So we expect, interest rates to rise. I think the rate hikes that are priced in are fair, very much in line with what we're looking for. It's quantitative tightening, and any talk about that next week, and we think the Fed starts that, that's going to push longer end rates higher. I think more on the real rate component rather than inflation. But I do think the 10 years is likely to continue to rise, even with the stagflationary shock that we're living through.
What about credit risk, Priya, which we have seen rise, and we are paying attention to it? What is the signal you're getting from corporate bonds right now?
Right. So I think we're seeing the risk premium going up. We're also seeing the market pricing in greater credit risk because of exposure. And, I should say there's the direct exposure to Russia, Ukraine, but then there's the indirect exposure to Europe or European banks or somebody else who might be exposed to Russia. So, I think the knock-on effects are still being felt. It's an illiquid market. There's not a ton of price discovery. I am worried about credit, particularly because there's no clear policy backstop to credit. And, I think that widening is likely to continue. The one place where we've seen it in the rates market is in the very front end. We're seeing dollar funding pressures showing up. That's where I am a little less concerned, because we have central bank swap lines. We have a lot of liquidity.
Yeah, you got JPOW with the money printer.
In 3 months CP. But credit spreads, I think all risk assets are getting repriced to cheaper levels, and credit is part of that.
Yeah, well, it's reassuring you don't see too much of an alarm in the short-term funding markets. I do wonder what your read is on the Treasury yield curve. Sarah was mentioning earlier,
the 10-2.
It's compressed down to about a 1/4 percentage point between the 2 and the 10-year. Now, on the one hand, that seems very flat as the Fed starts to hike rates, but on the other, that 2-year yield would seem to incorporate several rate hikes to come. So what's the takeaway?
I think the flat curve is telling you the market's really concerned that the Fed might overdo it, because they're nimble, inflation's high. So do they raise rates too much plus do a lot of QT and have to reverse course? Because the consumer would be dealing with, not just higher mortgage rates, lower stock prices, as well as higher prices for everything they're paying for. So I think that's the fear, which is why the yield curve is pricing in rate cuts. For the first time in the last month, we've actually priced in cuts in 2024. So the market's saying the Fed will raise rates this year, next year, and then they'll have to turn around and cut rates. And I think I'm hoping that the dot plot next week, or Chair Powell can talk about how they're going to try very hard to achieve this soft landing and not overdo it. And if it means pausing in this hiking cycle, this need not be a series of rate hikes. It might be more volatile, but in the process, they prevent that overdoing or policy mistake idea. I think the yield curve is telling you that the Fed might make a policy mistake, and I think as a policymaker, they really want to push back against it, because that's very negative for risk assets as well as the.
Nobody wants to see the Fed screw up the markets. By the way, Stitch Fix just fell in the after hours. It's down about 19% in after hours on missed forecast.
Thank you very much. Great to get your thoughts today, Priya Misra.
Thank you.
Coming up, Energy Secretary Jennifer Granholm joins us following America's ban of energy imports from Russia.
Now, okay. So let's see here. A couple updates to make. Yeah, but yeah, that sucks for Stitch Fix, especially since they've already been down. I mean, they were. It's so wild. Before the pandemic, Stitch Fix was trading for about $27. It fell to $10.90 at the bottom of the pandemic. It went meme stock of viral, ran up to $113 a share. And now it's all the way back at $10.29, and now it just lost 19% on top of that, and it's trading for $8.90. Ugh. Ouch. Das ist ein Bummer. Well, what are you going to do? So, anything else? Bumble's up 20% now. Wow. They really killed it on their beat. So they're doing the opposite. Oh, yeah, and they keep running, too. How'd Tesla do today? Tesla today. Okay, Tesla today down about 0.42. Okay. So, couple updates here that I want to go through. Okay, we're going to do a couple vids, and we'll work this together. And then we'll go from there. So, first is going to be on the market. Let's do it. Okay. 1 sec, though. Wow. UK says UK government can detain any Russian aircraft that enters into UK airspace. Nice. Could you imagine having a job of detaining another aircraft while you're flying? Anyway, okay, let's get these two things done. Coming up on a 7-hour stream here, so let's knock this out. All right, here we go. So we got video number 1, and then we'll do a Ukraine update too, just sort of a broader summary of everything. All right. Wait, who are they covering? Oh, Stitch. Yeah, that's funny. I was just talking about Stitch and Bumble, and then they stacked them next to each other. They're watching. Oh, I like CNBC. It's okay. We watch each other. All right, let's talk about these two videos. Okay, here we go. So number 1 is on stocks and inflation and the Fed. All right, so let's go for it. Hey everyone, me Kevin here. In this video, we're going to talk about what to avoid in the stock market, provide an inflation update, and we'll talk about the Federal Reserve as well as upcoming catalysts. This video is brought to us by FTX, which is linked down below, and you can learn more about them and sign up for free cryptocurrency when you sign up for FTX. Okay, so first, listen to some of these quotes here from the suits. Stocks have had an epically bad start to the year. Those are the suits now calling it epically bad. Blue chips are technically in a correction. That was on the front page of the Wall Street Journal today. Throughout the first 44 trading days of this year, the Dow and SPY have had their worst year ever. Their second worst year ever in 123 years. So second worst year ever out of 123. That makes this a pretty special year. You've got Better Mortgage, the company that was famous for having their CEO fire like 1,000 people on a Zoom call or multiple thousands of people on a Zoom call, just fired an additional 3,000 people. This is happening at the same time as banks and financials are just getting wrecked, which is ironic because a lot of people are like, oh, but banks and financials should be doing better during an interest rate hiking period, right? Not necessarily, because banks and financials really like transactions, and transactions go down in an interest rate hiking environment. It used to be that banks liked the interest rate. Don't get me wrong, they still do to some extent. But lower transactions, lower brokerage volumes, killing financials right now. And so maybe it's no surprise that credit card companies are starting to raise their fees for transactions. We'll talk about that towards the end of the video. And then when we look at some of the numbers that we've got out here, Brent crude right now at $128.78, the 10-year Treasury at 1.84%, up a little bit from yesterday, and the 10-2 spread now down under 25 basis points. We're at a spread of 23.88 for the 10-2, This is the lowest level that we have been in since the inversion of the yield curve in 2019. And remember, anytime we've had an inversion of the 10-2, we tend to have a recession within 18 months thereafter. Now, yesterday in my interview with Kevin O'Leary, he says, don't worry, it has to stay inverted for a while. But that part is up to debate to see how long it has to stay inverted. So we'll see. 5-year break even, which is a measure of the potential future expectations for inflation, just broke the highest level again. It has been going straight up day after freaking day. And you don't even want to look at this chart because it's gross. Look at this for a moment here. It is at 3.51. It's absolutely crazy. Absolutely crazy what's happened here with the 5-year break even. Oh, hold on. The energy lady's on. We'll come back to this video after the energy lady.
On it. So how much of an impact do you think it will ultimately have in terms of hurting Putin?
Well, first of all, I think it's really important that we not finance Putin's war. And I think that's why so many people in America have felt that way too. Surveys have shown over the past few days that up to 70% of Americans agree that they are willing to even sacrifice themselves by paying more at the pump in order to not fund that war. If you combine this, of course, with the sanctions that have already been collectively announced against Putin, these are extremely damaging. Now, let me just say that we know that the United States is in a privileged position in this way because we don't rely that much on Russian oil and we don't rely on Russian gas at all. We know that our allies across the world may not be in that same position. And so we are not asking them to do the same thing. But for us, for our nation, for our citizens, this is an important statement.
Should we not be boosting energy production right now in this country to meet demand, both domestically and in places like Europe?
We should be boosting all around the world and in the United States, and we should be investing in moving toward clean energy as well. That's what our message is here at CERAWeek. We want to see increased supply. We want to see it in the United States to the extent that the industry can do that. We want to see us move as well toward solutions that don't have us relying on fossil fuels from countries that do not have our interests at heart. We have to do both, and we have to accelerate.
How much are you willing to do on that front? Because there's been a lot of criticism for this administration in particular for being tough on oil companies and limiting production, not allowing the federal leases on federal land, not allowing the Keystone Pipeline to go through. Is there some regret and potential change?
There is nothing that would have increased production. If the Keystone Pipeline had been approved, it wouldn't have even been built by now. So that is just a talking point. There is this administration, under this administration, oil is almost at record production. By the end of this year, it will be at record production. Natural gas is at record production. Liquefied natural gas is at record production. Every molecule that we can liquefy, we are exporting in terms of natural gas if there is a facility to liquefy it. There are 9,000 permits that have been issued that are not being taken advantage of. And I say that to encourage the oil and gas sector to take advantage of the permits that they have. There are 20 million acres of public lands that are under lease right now by the oil and gas industry that are not being used, that are not being produced on. And remember that 90% of oil drilling is on private lands and not public lands. So this is not about that. Those are talking points. What we want to do is to say we are in an emergency. We have to increase supply so that we cannot, that we can make sure that people are protected at the pump. And we have to move to clean energy solutions with great accelerating both right now. But clean is in the end where we should be so that we don't find ourselves in this position again.
Secretary Granholm, given that it is an emergency and given that you're trying to access supplies everywhere, and you mentioned you don't want to be financing Putin, is the administration any closer to trying to encourage production by other countries to fill in some of these gaps? And I guess a similar point, would you look to try and close off revenue from the sale of Russian energy products to other customers, to other countries at this point?
Yeah, I mean, as I say, the other countries are in a different position. because we do not rely so much upon Russian oil, and we don't import Russian gas at all, natural gas, we don't import coal, we are in a different position. And that's good for us, but we want to make sure that we are not putting pressure on countries who simply cannot survive without access to those resources, but who are themselves, for example, our European allies, had just announced a plan to accelerate their movement toward clean. And to your first question, we are calling upon all producers across the globe to increase supply. We've got to make up for 8.5 million barrels of Russian oil that could potentially come off. That's what they export. And so we need to make up for that. So we want to encourage producers around the globe, including in the United States.
There's no quick fix, as you know, Secretary Granholm, and $4.17 is the price for the average price for a gallon of gas for regular gasoline in this country right now. How high do you expect it to go, and how long will that last?
Yeah, it's that's the question. We don't know. Of course, we don't know how long Putin is going to terrorize Ukraine. We do not know how long his war will last. But let's be clear: these increases are because of Vladimir Putin. This is Putin's war. These are Putin's increases, and we cannot allow it to stand. So it may take a bit. In this sacrifice, we are fortunate that we are not being asked to sacrifice our sons and daughters to go and fight this war, but we may have to take on other sacrifices. And it makes me so proud that so many Americans are willing to pay a little bit more at the pump in order to accelerate the end of this war.
There have been calls for additional reserve releases globally in international reserves that countries have control of. Is that something that's an active discussion?
Yes.
Okay. It is. And do you have a sense of when there might come to be a decision on that?
Yeah, I think there's a sense of urgency about this. We are in active discussions with our allies. As you know, we just did a release of 60 million barrels collectively as a collective action with the International Energy Agency last week. And we will be having further discussions both internally to the U.S., but also with our allies.
There's also some concern that in an effort to boost the production of oil globally, that the U.S. is maybe being friendlier than it would ordinarily to places like Iran, Venezuela, to try to fill the gaps in oil that are not our friends. Can you address some of those concerns?
Well, I know that the Biden administration has conversations with allies and adversaries all the time. I know that we are looking to create partnerships with countries that may be unusual in the broader spectrum of energy, including energy technologies. I've been meeting with folks here at CERAWeek who are from all manner of countries who also want to be part of the solution in the move toward clean energy and decarbonized fossil fuels. So there are a series of discussions happening around the world, and that's all I can say about that.
But is it your expectation that the Iranian barrels do come back online if there is a deal here on the nuclear agreement soon?
That's certainly something that is a possibility, but of course you have to get to the deal first, and the reason for the deal is a denuclearized Iran. That's the reason for the deal. If there is a byproduct of increased supply, so be it, but the deal is all about making sure the world is safer because Iran doesn't have a nuclear weapon.
And Secretary Granholm, can you give us a sense of just other things being explored? I'm sure it's pretty much everything, but whether it be trying to ease petroleum taxes or something else that you're looking at in terms of potential short-term leverage to pull?
Yeah, as I mentioned, the release from the Strategic Petroleum Reserve is one thing. There's a whole array of ideas that are being kicked around. I'm not going to talk about them. I'll let the Biden administration release that when it's ready. But suffice it to say, there's a lot that's on the table.
And finally, Secretary Granholm, you said that the time frame on these elevated prices depends on Putin and the war. What is the off-ramp for these energy sanctions?
This is a very fluid situation. We do not know what is the next shoe to drop in this war against Ukraine. So we are taking this one day at a time. clearly, we don't want to see people hurting at the pump for a long period of time, which is why we're looking at increasing production. And that's really the most important thing to do. Ultimately, it's difficult to imagine flipping a switch and seeing those barrels, those Russian barrels, come online and be acceptable around the world, given the egregious activities of Vladimir Putin. So this is why increasing production is really, and increasing clean energy, transitioning to clean energy are the solutions for being able to reduce those prices at the pump.
But doesn't clean energy just raise oil prices even more? Because we're still dependent very heavily on fossil fuels, and it's very expensive to get there.
It is not expensive. Clean energy is the cheapest form of energy. Wind and solar are the cheapest forms of energy. So no, it does not. In fact, if you drive an electric vehicle, not that everybody can afford one, but just if there were a transition to an electric vehicle and you filled up today at the pump with your vehicle, it would cost you maybe between $50 and $60 to fill it up. If you charged it at home, it would cost you maybe $12 to fill it up. So no, clean energy is abundant. It is cheap. It is accessible.
Pitch Tesla.
And that's why it's very important for us to continue to press. There are new technologies that make energy even more abundant and dispatchable and like baseload power. Those may not be quite ready yet, but certainly on the renewable side, it is ready to go.
No, I asked because even Elon Musk is advocating for increasing energy production, which is a very unlikely source as he's the king of making EVs.
I think everybody recognizes that we have to increase supply right now because we are in an emergency at the same time as we need to move toward clean.
Secretary Jennifer Granholm, thank you very much. An important
Yeah, I wonder, I calculated my fuel economy and tested mine a while ago. My fuel economy was, let's see here, 1 gallon of gas worked out to about 33 kilowatt hours of power was about 1 gallon of gas. So if I have a 330, yeah, but see, let me see. Where's my bottom line? Because it's a little easier if I look at it. There we go. So I'm trying to remember my miles per gallon. Here we go. Miles per gallon, so I got about 66.9 miles per gallon was the conversion that I made. 10K miles then cost me about $448. 10K miles now would cost about $750. I get about 2.78 miles for 12 cents. 2.78 miles for 12 cents was the conversion that I made back in the day. So if I get... if I have, let's say, a 278 mile battery, let's say on my Tesla, that's 100 times 12, $12. $12 to get to 278 miles. That seems about right. And then if I did 278 and divided it by, let's say, 30 miles per gallon for a car, that'd be 9.26 gallons. Times $5 gas in Cali, that'd be about 46 bucks. She's actually not wrong with her math. Yeah, I mean it's a lot more expensive than that overnight kilowatt per hour math. Well, that makes sense. Okay, cool. So, all right, let's hop on over back to the video that I was doing. So we got to go back to, so we left off on this break-even chart right here, which is just absolutely insane. This is what we left off on. And now we're going to keep moving on from this. So hold on, where's my clapper? Yeah, I did my clapping. Okay. All right, let's get back into that video. Back into video mode. All right, so in this video, we're going to now move on from all of this craziness, and we got to talk about how to position in the stock market. We'll talk about what to avoid, and we'll also talk about inflation and some catalysts coming up. So first, some background. We're clearly seeing this rotation into cyclicals, which are stocks like financials, energy, materials, industrials, and consumer discretionaries. And that's because, we're seeing a rotation out of those because, let me redo that section. I screwed it up. That's what happens when you mess up the flow, man. Okay, that's fine. Let me put that right there. There we go. That makes a lot more sense. Okay. All right. Yeah. So the 5-year break even is crazy and inflation is going nuts, but we've got to talk about how to position for the stock market, what to avoid, and an inflation update as well as catalyst update towards the end of the video. So right now we know that cyclicals like financials, energy, materials, industrials, and consumer discretionaries are pricing in at their lowest levels relative to defensives, which are utilities, consumer staples, and real estate. We're at the lowest levels since November of 2020, which is worth noting. November of 2020, remember what happened right before November of 2020? In October of 2020, we had a lot of fear in the market. We had fear that getting a new president was going to lead the market to fall, that there was either going to be election uncertainty or that the results of the election would be uncertain. And so we had a lot of fear in the market. And anytime we get this fear in the market, we see a move over to things like utilities, consumer staples, and real estate. And we've even got a chart for this to kind of look at some of the difference here. So let's go ahead and pull up that chart just to see. This is the cyclical to defensive chart right here. And the more cyclical stocks become expensive, the lower this ratio is, right? The difference between the two here. So right now, anytime we see this line go down, it means defensive stocks are taking a little bit of a stronger positioning. And you can see that fall, obviously, over here. This was our, going mostly defensive time frame where we break under 100 in terms of a ratio. This is where people are more in defensives than they are in cyclicals. Which again, cyclicals being like consumer discretionaries, which could be like your Etsy's or your Amazon, right? And real estate being on the other side, being a defensive, being more like investing in REITs. But anyway, now we're seeing that same or similar kind of fear, a level that we really haven't seen since about here, which was around that November of 2020 time. And we really took off when fear left the market. So I think the easy way to kind of conclude this sort of chart here is anytime you see the line go down, it means the market is getting more defensive. Every time you see the line go up, it means the market is taking on more risk. And so the last time we saw that sort of low point was around that election time frame when we had a lot of uncertainties in the market. And so you're seeing more people maybe crowd those defensive sectors right now. And one of the big takeaways of the video here that I want to talk about is stock crowding. Because stock crowding, in my opinion, is generally what you want to avoid. And so that could potentially mean that maybe there are opportunities to buy the dip on some of those uncrowded positions and stay away from the more crowded positions. And I'll show you a chart as to why. But first, what are some things that we know are really, really crowded right now? Well, in this particular chart, we just saw defensives are getting crowded. We also know that commodities are going to the moon. I mean, everybody's talking about how not only has nickel like 3x'd over the past year and a half, but that wheat's going to keep going to the moon, that oil's going to keep going to the moon. We're getting these outlandish bets that oil's going to go from $128 a barrel to $200 a barrel or $185 a barrel. And that's crowding a lot of folks into these energy stocks, especially like non-diversified ETFs like XLE, or people are following Oxy or Warren Buffett into Oxy, which Carl Icahn just sold out of, took $1 billion profit on it. So he's getting out, but Buffett and a lot of retail are flowing in. We saw yesterday $340 million of retail money go straight into energy. That was the biggest retail buying sector out of all retail buys yesterday. Yesterday, retail bought $1.5 billion worth of stocks. And so you're seeing a lot of money going into energy and commodities right now. And so they're becoming pretty crowded. And one of the big lessons that you always want to remember when it comes to the stock market is take a look at this chart. Okay, this is a critical one right here. It's this. Popular does not equal profitable. Anytime you get crowded stocks, you tend to see an underperformance. And that's literally what we've seen so far year to date. This is a year-to-date performance stock of retail sentiment indices. They threw ARK in here as the blue line, the crowded fund index, the hedge fund's most crowded stocks, all since December 31st. And what you can see is this massive underperformance of these crowded plays. So you see the S&P is the top line. That's down about 12% since December 31. You see the crowded fund index and the hedge fund most crowded trades. These are down to about 83 or 80, so basically down 17 to 20%. And then, of course, ARC's down there at about down 39%, along with the retail sentiment basket from Goldman Sachs down about 32%. So you really see that if you're in crowded trades, you tend to underperform. And so one of the warnings that I have for the market is that even though it's popular to get into those defensive stocks right now, to get into the XLEs, the energies, the wheat basket, and some of these defensives, one of the things to be cautious of is the more crowded the trades become, the harder they can fall. So be careful. It's kind of just like that meme momentum, right? The more we go up, the harder we can go down, and the faster we can go down. And so one of the things that I advocate for is setting those trailing stops. So if you're investing in these, set those trailing stops 4 or 5% on some of the more crowded trades. So that way, in the event there's a U-turn, you're a little bit insulated. Now, the other thing that I wanted to talk about was inflation, and how obviously we're seeing a big move and a lot of fear that inflation is going to be a lot more long-lasting. And the worst-case scenario is that inflation ends up becoming anchored, because when inflation expectations become anchored, then the Federal Reserve has to work to unanchor them. Right now, Jerome Powell is really proud because he says that they have done a very good job at keeping inflation anchored low. And that's because when we look at things like the University of Michigan consumer sentiment indices and inflation expectations, we see that consumers expect inflation to come down, like halve over the next year. As long as that stays low, the Fed might not have to Paul Volcker us. But we have these massive fears that we could end up in a situation where used car prices keep going up. They're up 40.5% over the last year. Used cars make up 5.5% of CPI. New cars are up 12.5% over the last year. They make up 4.5% of CPI. We know that rent makes up 9.6% of CPI, and housing in total makes up 39% of CPI. And this lags. So even if we see car prices come down a bit, if we just see rents move up the way they should, because they use the stupid owner's equivalent rents and they super lag on CPI, well, then we could end up seeing inflation really move up substantially over the next few months, especially as oil prices drive up inflation. Remember, if we hit $150 a barrel, we would expect CPI to be 2% higher solely because of higher input costs from oil, which is a lot. And so this does still create this downside risk for the Federal Reserve. And we've got the CPI report coming out in 2 days. But I just want to urge a caution that that CPI report isn't really going to give us the data that we need yet. Whether we get a miss on Thursday or we get a beat on Thursday doesn't really matter, because we want to know what inflation is, not from a snapshot from February, but from March and April and May. That's what we want to look at. Because remember how messed up it is in terms of how they measure inflation for volatile things like gas prices in CPI. What they'll do is they'll say, okay, here's our CPI for February, let's say. The expectation right now is that CPI is going to come in at 7.8%. And the month over month is expected to come in at 0.8% minus food and energy 0.5%. So write these things down. You should have these written down, by the way. These are the expectations. So 0.5 month over month without food and energy. So these are the expectations. This is annualized, 9.6%, which just means we multiply by 12, right? This annualized is 6%, again, multiplying by 12. So these are the expectations. But whether we get a miss here or not doesn't really matter, in my opinion, because why? Well, the energy shock isn't really going to be fully priced into this February CPI report, because the way they'll look at February is they won't look at Feb 28th and say, okay, oil was, let's say, $100 per barrel. Let's include that in CPI via gas prices or whatever. What they'll actually do, because they're not looking at oil prices anyway, they're looking at gas prices, but gas prices follow oil prices. But anyway, what they'll actually do is they'll look at what were oil prices Feb 1 to Feb 10. Then they'll do the same thing for approximately Feb 11 to Feb 20, and then the same thing for Feb 20 to Feb 28. And then they'll take these three little baskets right here, and let's say oil prices were 90, 95, and 100. Well, then they'll just take the average, and they'll say, okay, cool. Gas prices are essentially close to 95. Okay, sorry, one sec. There we go. Yeah. So that shows how CPI lags. CPI lagging is a problem because it means if we end up getting like an 8% read this time, let's say, when the expectation is, what did I say, it was 7.8%, we get an 8% read, fine, probably going to end up being worse next month. So I actually think April, for the CPI release that we get in April, that's probably the one that's going to create more heart palpitations than this CPI release. So I'm not hanging my hat much on the CPI release. I'm more concerned about that longer term, because if we don't see that inflection point down, there's still a massive risk that the Fed ends up U-turning ugly on us. Now, the easiest way, in my opinion, to understand how the Fed's kind of been playing us is to think about it like this. So let's say that going sort of down here is them supporting the economy and being like helpful to stocks, right? To being helpful to us, right? So the Fed's kind of been playing down the fears of inflation forever, calling inflation transitory. Well, in December, we got this really ugly shock where all of a sudden they're like, big U-turn. Oh crap, inflation's horrible. Inflation's no longer transitory. We have to taper faster. We have to taper more aggressively. This is terrible, right? Absolutely terrible for stocks. And this is why we saw that pain in December and January, especially when those minutes came out in January. Well, because of the crisis in Ukraine, we've kind of seen a little bit of a softening in the Fed's stance, but I don't want to say that they've turned super dovish. I think they've more gone onto pause here. And there's a real concern about them going into this pause mode because we're going to get this data here for Feb CPI. Then we're going to have the FOMC meeting on the 16th. So this is on the 10th. And then we're going to get the March CPI in April. March CPI, we'll just write April right here. And it's entirely possible that if we keep seeing inflation come in with these terrible reports, that the Fed will actually just sort of be like patient for the time being. We'll see these over and over again, 25 basis point hikes over and over and over and over again. But if CPI continues to come in high, it's still entirely possible that the Fed could end up having to Volcker us and they come in with some crazy interest rate increase where all of a sudden they come in with like 100 basis point increase or 75 basis or 50 basis point increase, and then they rug pull us. So this is still very much a reality or potential for 2022. And this is why the two big things that I want to really address in this video are, number one, be careful about those really crowded trades. But number two, we're not in the clear. Just because the CPI report on Thursday comes in at expectations or below or above, stand by. I don't think we're in this market where we want to be all in just yet. At the same time, you're still seeing companies raise prices. I mean, just today we saw Apple raise the price of the iPhone SE by 7.5%. Also, according to the Wall Street Journal, Visa and MasterCard are now raising their merchant fees. These are the fees that businesses have to pay. They don't really, they're sort of invisible to the consumer because we swipe our card, we don't really see it, but they're sort of the back end fees. And both of them, both Visa and MasterCard, are raising their fees. In 2021, just for example, merchants paid $55.4 billion in merchant fees and credit card fees. These fees, by the way, lead to like huge profit margins for Visa and MasterCard. There's a reason they bring like 40 to 50% to the bottom line. A lot of it has to do with these fees. And so apparently these fee increases will affect mostly online purchases, though it looks like really all fees are going to be increased, with the exception of some of those on lower businesses with Visa who have less than $250,000 in annual consumer credit card volume, which that's a really low number. I mean, if you're only selling $250 in goods, that's not a lot for any business. So that's like the micro businesses there are getting a little bit of support, but otherwise those fees are going up. So all across the board, you're seeing companies, and of course every earnings report that we've looked into, all across the board, you're still seeing price increases. Those have not all been reflected yet in CPI. So I think we have two massive warnings. And of course, shout out again to FTX before I recap those two. FTX is the awesome way for you to use trading views, technical indicators, at the same time as being able to trade cryptocurrencies. I have this up every single day on my computer, and you should as well. Check out FTX via the link down below. But the big takeaway here is twofolded. The number one big takeaway, in my opinion, is be careful about those crowded trades, the ones that seem really sexy, the one everybody's going into, the palladium or the nickel or wheat and oil-related trades. And those are great for making quick money, momentum, meme style. But always remember to set yourself a stop loss so that way when and if that trade reverses, you've got some protection. I do think that buying commodities could be a hedge against maybe your, let's say, tech portfolio or portion of your portfolio, or maybe even the indices in general, because the more we see oil go up, for example, the more the SPY and NASDAQ seem to come underweight. So it's entirely possible that those could be a hedge. But again, just set your limits so that way you're not part of a big sort of cycle to the downside in these. I mean, there's a reason the CEO of Occidental Petroleum today mentioned that we're not planning on significantly increasing our production because we're just going to take the extra cash we're making now from more expensive oil and we're going to use it to pay our shareholders when the oil market comes down again. Like when the CEO of the oil companies are telling you this, it's because they know these prices don't last. They come up and then they fall. They come up and then they fall. It's all a game. So just remember that if you're making bets on these. And then another thing, obviously, to keep in mind is that Fed rug pull that we talked about. Be careful because there are a lot of things that could still lead them to rug pull us. There's also talk, and I thought this was sort of just an interesting little bonus note. One of the individuals who was interviewed on CNBC this morning, they mentioned that we might actually walk into what's being referred to as a sentiment recession, which is if the global economy starts getting too nervous about the outcome of potentially war with Russia certainly war with Russia and Ukraine, but also potentially war with the European Union nations or NATO, then there could be a, quote, sentiment recession where you see people purposefully start paring back their borrowing, which you're already seeing in China, and increase their savings. And then you get those negative comps where all of a sudden you actually start seeing negative year-over-year comps, and that's your start to a potential recession, which could be why that 10-2 yield curve is also fallen. But best case scenario, we could get over these hiccups, these shorter-term catalysts, inflation catalysts, Russia catalysts, and we just go back to the moon. But until some of these catalysts get cleared, I'm not super impatient in trying to time my entries, but I'm definitely entering when there are big fear days. So, but again, still not all in, certainly not YOLOing onto call options, more interested in selling calls, selling puts, and staying out of margin and debt. All right, that's that for that video. Thanks so much for watching. Make sure to check out FTX via the link down below, and we'll see you in the next one. Bye. Okay, so that video is done. Now we'll hop on over here for a moment, and then I do want to give a Ukraine summary as well, so we'll do that. But let's listen into here.
It certainly didn't work last week when they tried to do it. But if they go for a bigger, I think there's more than 500 million barrels per oil in the Strategic Petroleum Reserve. We'll see how big they decide
and with
to
international
go.
partners as well. I think that's the idea.
But oil keeps going up and the market keeps going down.
It has kept going up. Yep.
That's going to do it for us on Closing Bell. Fast Money begins right now.
Live from the NASDAQ market site overlooking New York City's Times Square, this is Fast Money. I'm Melissa Lee. Tonight's trader lineup, Guy Adami, Tim Seymour, Dan Nathan, and Karen Feiner.
Let's see what they have to say for us.
Apple's big reveals. Tim Cook taking the wraps off a new budget phone. But new colors for the 13, a powerful Mac chip, and exclusive Friday night baseball. Investors sort of yawning, though, at today's event. Gene Munster standing by to tell us how Apple and tech can get their mojo back. Plus, an about face for McDonald's. Last night, we told you Mickey D's was keeping the doors open in Russia. Well, today they decided to shut him down. The details and the important symbolic message straight ahead. And the sun shining on solar stocks today. Is it time for Guy and the gang, more so the gang, to get a tan? Oh. We start off with a wild roller coaster ride for the markets. The S&P rallying sharply midday, climbing more than 1.8% at its highs. The Dow jumped nearly 600 points, but easy come, easy go. Markets bounce all around this afternoon, finally ending the day in the red. So what happened? Tim, you sort of called it on the midday call here.
So let's call this collective because Dan's sitting over here. I think we said it two different ways. Dan said, hey, look, I would be concerned if this market, and this was intraday highs. We have our production call. And Dan said, I'd be concerned if this market finishes lower. And as in down on the day. And I said, I would not be surprised if the market finishes down on the day. And the headlines were, look, we want the headlines that were part of the drivers to see that turnaround. But you look at the technical damage in the market, you look at what was already going on with commodities. And, any day that equities are rallying and oil's up 6 or 7% is not a good day for equities. And
that's a good point.
Guy talks all the time about the move in the volatility in the Treasury bond market. 5 of the last 6 days, you've had at least a 15 basis point move intraday on the 10-year. The dollar continues to strengthen. The commodity complex is eroding spending power by the second. We have central banks that, if anything, the urgency has become greater for them to work, and yet inflation expectations have been driven higher. And in fact, interest rate expectations have actually come in off of where we were 3 weeks ago when people thought central banks were going to be more aggressive. On a week when we've got,
this guy's on it.
In a month where we've got a Fed meeting and we're about to start to digest some of the interest rate policy, interest rates and markets are doing the Fed's work for them. And it's a fascinating time in history.
I mean, what were the headlines specifically, do you think, that sparked that little midday turnaround? I mean, was it Biden's oil ban, which was largely symbolic? Was it the notion that Ukraine wouldn't seek membership to NATO, which was a Russian sticking point?
Yeah, I suspect that. I mean, I think everybody wants to see a de-escalation of this, and they want to see, off ramps for Russia here. And so, the Biden thing, I think, was fairly well telegraphed that we were going to ban that. The UK had already come out earlier in the day, had said that. And we did see oil stocks and crude in particular come off a little bit, which seems like somewhat counterintuitive. Guy has been saying it pretty aptly that really will create a near-term difficulty for, as far as supply is concerned. As far as my view on the markets when we were talking about it midday, it just felt really squeezy. I was looking at the things that were rallying and the way that they were rallying, and it seemed like a sort of knee-jerk sort of reaction for stuff that was very, very oversold. And I think one of the comments that we all agreed on is that there were certain...
All right, I do want to provide the update on Ukraine. So this is just a more kind of thorough update on all of the larger updates that we've been dealing with in Ukraine. So if you haven't been caught up on sort of what's going on in Ukraine, I think this would be a useful video. So let's talk. All right, here we go. Okay. Today has been a big day for Ukraine, and if you haven't gotten caught up with everything that's going on between Ukraine and Russia, this will catch you up with what's been going on over the last 4 days, the weekend, and the first couple days of this week. So the United States has had numerous companies today announce that they were going to shut down their operations in Ukraine. This is on top of the many other companies that have already announced that they were going to stop doing business in Ukraine. Those companies that had already announced are companies like Apple, Burberry, EA, Hermes, H&M, IKEA, Nike, Under Armour, Ford, and many more. But today we got a lot of updates on this. We heard that Porsche and Ferrari and Lamborghini are potentially or restricting their activities in Ukraine. We also heard that McDonald's is shutting down all of its stores in Ukraine, and it's keeping all of its employees on payroll. It is continuing to pay its employees while they shut down all of their McDonald's stores. As soon as McDonald's pulled out, Starbucks pulled out, Coca-Cola pulled out. As soon as Coca-Cola pulled out, Pepsi came out and said, we're going to remove and stop spending money on any of our ads in Russia. We're going to stop whatever. And Pepsi, basically any business in Russia. And Pepsi went as far as saying they have 20,000 associates in Russia, and they're going to work to continue to support their livelihoods while they pull out of Russia. So massive shutouts here. The U.S. has also warned about potentially shutting out Chinese semiconductor manufacturers for any companies that violate Russian sanctions. In response to this, Putin immediately came out and signed a decree. Now, we still don't know all of the details of what's going to be in this, but apparently Putin gave his ministers 2 days to determine exactly what kind of commodities they will now ban from being exported to potentially the United States and other countries. So Biden's cabinet has 2 days for a list of commodities and specifically which countries are going to be subject to that ban. He did sign this decree, and this decree would ban these commodities exports all the way through December 31st. Now, this could be a problem because 40% of the world's of certain parts of the world's corn, wheat, and metal markets come from Russia. Nickel, for example, has 3x in price. Palladium skyrocketing, aluminum skyrocketing, wheat, soybeans, all important commodities that come out of Ukraine and the Russia region collectively. Of course, Putin's decree on coming out of Russia won't affect so much so the things coming out of Ukraine, but you've got a war going on there, and you've got factories shutting down in Ukraine, and you wonder how many of the wheat fields are going to survive unscathed when it comes time for wheat harvest in August. We just don't know that yet. So you've got this change coming up within the next 2 days. That was signed today, and so we'll have a big announcement on those items in the next 2 days, and that could lead to even more of a move on some of these commodity prices. We've also heard from the Director of National Intelligence that there are likely somewhere between 2,000 to 4,000 Russian soldiers who have died at this point. Ukraine says that they have killed 11,000 troops, and Russia says they've killed that only 500 Russian troops have died. So the truth is probably somewhere in the middle of this massive range here. Russia is apparently also not retrieving the bodies of Russian soldiers who have been killed, which is very abnormal. Moscow, according to the Director of National Intelligence, has severely underestimated the resistance that they would face in Ukraine. There are stories that military individuals from Ukraine were told that they were just going to, from Russia, were told that they were going to train at the border of Ukraine and train with Belarus. And then all of a sudden they found that they were being told, hey, guess what? You're part of the front line. You're going in to invade Ukraine now. But don't worry, you're just liberating the Ukrainian people from Nazis. And when they got there, they obviously were met by Ukrainians who do not want to be liberated. Of course, under the incredible leadership and guidance of Zelensky. There have been a lot of attempts to create safe harbor corridors, which the Red Cross is trying to set up and maintain and ensure that ceasefires are respected on both the Ukrainian and Russian side. This is very difficult to do because all it does is take one random sniper shot from one person or somebody accidentally discharging a firearm or somebody purposely discharging a firearm to violate potentially the ceasefire on both sides, and then these evacuation corridors fail. Now, the evacuation corridors so far are coming under fire by Zelensky because Zelensky's saying, hey, Russia's trying to set up evacuation corridors from Ukraine to Russia, but people don't want to go to Russia. And this is leading to arguments that maybe these corridors are just being set up for Russian propaganda, that Russia's setting up the corridors to say, look, so they can put on their Russian televisions, hey, look, we are letting people from Ukraine come to the great country of Mother Russia, and we're trying to rescue them from the Nazis. And the Russian media is very state sanitized in Russia. It's worth noting that. I want to say three of the largest TV companies or stations in Russia are either wholly owned by the state or the state has a majority ownership of like 50.5% in those. So in other words, they have all decision-making power, which is crazy. The CIA director, our CIA director, is now warning that the next few weeks will be, quote, ugly. And this is due to intensive intelligence that they have, which they're sharing with Ukraine. It's also worth noting that there's a belief that a ceasefire that starts tomorrow at 11 a.m. Moscow time, so that's in about 12 hours now. It could actually less. It's probably in about 9 hours now at this point. That this corridor that and ceasefire that Russia now sets up could just be used as an opportunity for Russia to end up pushing some more of their troops forward peacefully to eventually encircle Kyiv. And they're pushing a lot of troops from the east to circle Kyiv and to take control of the capital. And it's possible that we could see more aggressive attacks on the capital as Russia essentially lashes out. So far, we have a lot of reports, including one in the Financial Times this morning that says Russia so far has still not used a real shock and awe strategy of fighting in Ukraine, and that when they do, there could be a lot more loss of life. The New York Times had a cover photo yesterday of individuals actually trying to flee from outside of Kyiv, cross a bridge to get into Kyiv because Kyiv is still Ukrainian controlled and it's actually safer than some of the areas right around Kyiv. And a family made a run for it and they ended up getting hit by a Russian mortar and died. It was absolutely terrible. These are civilians just trying to flee for safety. It was a mother and her two children. They looked like older children, but that doesn't change the fact that they were still her children. It's absolutely terrible. So in just Kharkiv, for example, we've had 27 civilians killed in the last 24 hours. The UN estimates that over 400 civilians in Ukraine have been killed at this point. Zelensky vows to stay in Ukraine to win a patriotic war, and he says that he doesn't want to lose what's ours. However, he has made a large sort of U-turn, or undertaken a large U-turn, and that that Ukraine essentially is now no longer insisting on NATO membership. And there's a belief that maybe this would lead to some sort of pullback by Russia. But Russia really is calling for still, despite the third negotiation attempt now, Russia is still pushing for a full demilitarization of Ukraine. It's not even clear if Ukraine would be willing to so far they've said no, but even if, we don't even know if this would be enough for Russia, if Ukraine just said, hey, take Donbas, let's say, the eastern region of Ukraine, let's use that as a buffer zone, we don't even know if that would be good enough at the moment for Russia. And so Putin is really going all in at this point. Now, we do also just have an update coming through that PayPal, it looks like, is potentially suspending services now in Russia as well. So these updates are just now coming in. This follows, again, a whole host of cancellations of services in Russia. We also know that credit card companies like American Express, MasterCard, and Visa have suspended services for card users outside of Russia. Now, the problem with that is if you're Russian and you're like, I'm getting out of Russia because I don't like Russia anymore, and all your money is in Russian bank accounts, now you go to use your credit card outside of Russia, it doesn't work. So a big problem. We already know Apple Pay and Google Pay have been having issues. People get stuck in the subways because they can't use this. McDonald's, as we've mentioned, closing all 850 stores. We'll see again how Putin's decree goes. The European Commission today mentions that they plan to cut the EU dependency on Russian natural gas by 2/3, quote, well before 2030. Hopefully so. Of course, we do know that the Russian military still outnumbers and outguns Ukrainians. We do believe that Russia could go dark and ultimately shell Ukrainian cities much more. So far, since the invasions began, they've launched 600 missiles against Ukraine, with 100 more fired just over this weekend. And 82%, despite all this, 82% of Ukrainians believe that they can ultimately drive Russians out. Now, Mitch McConnell mentions that $14 billion in aid for Ukraine is likely to be approved very soon. We also know that Amazon has eliminated the opportunity for anyone in Belarus or Russia, or any company in Russia or Belarus, to open up any form of AWS contract now. The Universal Music Group has suspended its work in Russia, rather, and GE is also quitting Russia, with the exception of essential medical equipment. Bumble is removing its app from the Russian versions of the Apple App Store and the Google Play stores. The energy secretary today mentioned that our gas prices going up are because of Putin and because of Putin's war, that it has nothing to do with Biden or Biden's policies, that it all has to do with Putin and Putin's war. We do know that last week we saw footage of the individual family folks from, or just Ukrainians and their families, defending a Ukrainian nuclear facility that operates 6 reactors, 6 out of the 15 nuclear reactors in Ukraine. This nuclear facility now only has 1 of its 6 reactors running at 60% capacity, and Russians have taken control of this despite that initial Ukrainian resistance. This has led to a lot of fear that Russia is basically trying to wave the nuclear saber, so to speak, and saber rattle nuclear threats without actually saber rattling nuclear threats by essentially taking over these nuclear power plants. We know that the only men who are able to leave are either men who are somehow bribing guards who are between 18 and 60 years old. They're all subject to conscription in Ukraine, which means they're obligated to serve their country in the military for defense. And the only men who are able to leave are those who either have 3 children or those who have been able to basically bribe their way through the border. We know that Facebook, Twitter, and YouTube have continued to remove their services. And a lot of folks are in Russia, and a lot of folks are now calling for either Putin to find a way to essentially retire in a peaceful way, maybe throw him on an island like Napoleon Bonaparte. There have been some references to this. There is even the potential suggestion that if this war continues to fail for Russia, which so far it is, that there could end up being a coup d'etat, which is a military overthrow of the government in Russia, especially depending on how terrible the economy potentially collapses. Estimates now that you could see inflation of upwards of 40% in Russia. We know the Russian ruble is now sitting at about 120 ruble per single dollar, putting it well below a value of 1 penny per ruble. Lindsey Graham argued this weekend that Vladimir Putin should be, quote, taken out. And this is really him saying out loud what a lot of people have been saying. We know that there is a lot of censorship by Russia of Twitter and Facebook, making it harder for potentially the other side of the information argument to actually make it over to Russia. We know that Elon Musk has been asked to censor Russia Today on Starlink satellites. That is, people using Starlink satellite internet would potentially be censored from being able to see Russian media like Russia Today. Russia Today, US, by the way, since there's a US version, actually shut down in the US, and all of their employees were fired in the US. It's the US version of that Russian state-run media. But Elon Musk refused to censor anyone. He believes that free speech stands above anything and will not censor anyone, including Russia Today, on the Starlink network. We know that fertilizer is having substantial issues, not only due to Russia purposefully halting fertilizer exports, purposefully jacking up costs of food around the world. This is just Russia giving a middle finger to the rest of the world. But then you also have delivery issues, right? You've got to remember that FedEx and UPS aren't able to function there. You've got the new journalist suspension, the independent journalist suspension in Russia, which is another issue. They've passed a law that essentially creates a criminal code for any independent reporter in Russia who potentially spreads whatever they deem to be fake news. And if you spread, in their mind, fake news in Russia about the Russian military, you would be subject to a 15-year sentence for spreading this potential fake news. You have this real fear now as well that we know that Ukraine does not want to be occupied. The Ukrainian insurgency is likely to survive. But there's this fear that what if Russia starts potentially going down the direction of losing? And if Russia starts losing, there is that fear, and we've mentioned this a couple times in this video, that they could really ramp up the aerial bombardments in Ukraine as just sort of a actually implementing shock and awe and lashing out. A lot of talk about also Mariupol and the disasters of the safe passage corridors here. Talked about the other safe passage corridors earlier as well as the ones coming forward. We know that in Russia and Ukraine, restaurants are running out of meat and fish. And there's even talk about straight up censorship between, well, and we know this, but between or so much censorship happening in Russia that family members in Ukraine who call their family back in Russia, there are reports of this, so obviously it's difficult to confirm this, but there are many reports of this, that family members in Ukraine are calling their family in Russia or people they know in Russia and describing the atrocities of what's happening in Ukraine. And the folks in Russia are responding by saying, no, that can't be true. We see it here on TV. This is just a mission to rescue and liberate the Ukrainians from the Nazis, and that there is no attack on civilians. When on the flip side, obviously here, and you could see this on my Twitter profile, you can go through my Twitter profile like history, not that I like it, but it's just so you could see it, and you could see just the absolute atrocities of cluster bombs or cluster munitions and bombs hitting residential areas, airstrikes against apartment buildings. It's absolutely terrible. Really, really terrible what's happening in Ukraine. So this catches us up a little bit. I'd say the biggest next catalysts we have here for the Russia-Ukraine crisis are determining what those commodities are going to be that are going to be on that ban list from Putin's decree, and then also what ultimately ends up happening with after this potential ceasefire tomorrow, which we'll know about probably tonight, and then we'll see what happens in the coming days. The CIA and our intelligence officers here in the United States not too optimistic, instead saying the next few weeks will continue to be very ugly for Ukraine. Well, folks, there you have it. Thank you so much for watching this update on Ukraine, and see you on the next one. Bye. Okay, so all right, we have completed that update. Now, Elon Musk is a closet conservative. Well, yeah, we know that. He calls himself what is it, fiscal conservative and social liberal, right? Anyway, okay, so I think that about covers us. I don't think we have anything else to cover. We've really covered everything. We can briefly look at after hours here. Tesla's down about 0.5%. Bumble's up about 20%. The metals company was up 33% today, 3% down in after hours. Tiny little give back here, so no real update here. Yeah, there we have it. So thank you so much for hanging out on this nearly 8-hour live stream. And folks, we'll see you when I see you again.